And we're back. Thursday, June 5th. June 5th. I thought yesterday was 5th. It's the 5th today.
Are these the Ides?
No. These are not the Ides. And also, we really only talk about the Ides during March. Those are the big Ides.
I thought,
that's when the big men went down.
Big man fall hard?
J. Caesar.
No. Good morning. Welcome. June 5th. What a week it's been.
It's been a week.
It's been a long week.
Really? Why do you say that? You said you're tired?
I'm a little tired. But it's okay. We're happy to be here.
That's right.
So happy to be here.
If anyone's out there watching, we're very happy to be here. It's been an interesting week so far. Some data coming in, I believe, this morning. ECB cuts
decision.
again.
Yep. Cuts again.
And the euro is unchanged.
Womp womp.
Extremely choreographed cutting from the European Central Bank.
And you touched on it on Tuesday. Not the hottest tool in the shed.
Do they have a press conference or anything coming up? Okay. Or it already happened?
No, it's the same structure as here. We get decision, then ECB President Lagarde hops on around 30 minutes later.
She looks like she's very tall. It's hard to tell in the photos because they aren't scaled. It's not okay, well, here she is next to a 5'7" person.
That's a good question, but I've never seen her next to Powell or anything.
She looks like she can
5'11"
ball for sure. 5'11", yeah.
That's pretty tall.
It is something that what?
It's just so funny.
I do think about it a lot.
How tall women are?
No. I think about the fact that I'm average to slightly below average height. Okay? We had this debate last week. Is Frank taller than Tom Cruise?
And it was, man,
actually
split.
A good amount of people came out for me. None of them have met Tom Cruise.
I was going to say, it's kind of it's an easy,
one of those classic debates where it all means nothing.
But that one is funny because it's genuinely just who wants to be on your side and who doesn't, because and obviously this will not get back to Tom Cruise. Tom Cruise does not care, but there are people in this office that will absolutely look at you and say,
no way.
No chance.
There's no chance you're taller than Tom Cruise. And you can imagine, if you've been to our office and you've met a couple of the characters, you know exactly the one or two people who were not getting my back on this one.
You had some supporters, so that's nice.
The only reason I think about it is not because I'm self-conscious of it, but I do think about my ascent in the financial industry, and I don't see a lot of tall people or not tall people around me. It is a weird thing of Tom Sosnoff and Christy Ross, they start Tasty Trade 12 years ago. Both of them 6 foot.
But I will say, we're in digital times now. They actually, all of those trader floor guys, they were physically boxing people out down there. So natural selection of sorts. Now what? It's all digital.
I thought I was gonna win one when my Irish friend Breon jumped on board at IG at large, and then saw him in person.
He's pretty tall.
He's tall too.
Damn it.
What the heck? I was oh, finally, you saw we had a Zoom or something, and it's oh, this guy, okay, it looks like he's not
my man.
Not that tall. He's Irish. We don't tend to be a tall people.
Except for him.
Yeah, of course he's tall. So
I'm sorry.
I don't know.
You're doing pretty well though.
I'm doing well for 5'6", 5'7". That's for sure. I'm outperforming my height.
For not 6 foot.
For not 6, dude. I'm not even close.
They don't know that. Nobody knows that.
They end up knowing it.
Okay, but 5'6"
this is you're
aggressive.
The dude on Hinge that's I'm actually 3 inches taller than I am, and then you show up and it's dude, I was gonna find out how tall you were.
But then it doesn't matter at that point. Foot in the door.
I think it matters.
Just one shining moment.
If you're starting a relationship with I'm so petty that I lied about my height, I don't think it's gonna go well from there on out.
But then it's oh, I was so petty that I cared about your height.
Wait, what? Who cares?
the
other person.
Yeah. So then
Oh.
it's net.
They care.
Fresh start.
They care.
Yeah. You got me, but you shouldn't have won it. Yeah.
Maybe I should have lied to. Well, I found my love of my life, partner, forever, outside of Hinge.
Wow. There you go.
Yeah. She knew from the start. Well, actually, no, I was sitting down, so she didn't know how tall I was. Yeah.
Because she walked up to you.
Yeah, came up to me.
I didn't know you were sitting down.
And I was like,
that changes everything. Hello.
She's
What's your
6'3".
name?
It's actually Lagarde's daughter. Oh man, what a goofy Thursday. Sorry. Let's get into the platform and take a look. Eurodollar is literally unchanged. What a boring euro market. Thankfully, the Swiss franc continues to be the more interesting European market.
Oh, absolutely.
Let's get in there.
4 hours.
Interesting.
Yeah. No, this one.
Man, yeah, they knocked this down again yesterday late afternoon to 81.80, below 81.80. And have taken it back to, it doesn't look like much, but have taken it back to 82 even as recently as an hour or two ago. Man, this has been an interesting trade in here, some back and forth with this U.S. dollar. And I know a lot of people looking at the fact that, and maybe it's because this wasn't breaking news, but it was to me, that Swiss rates are 25 bips. And I was like, in the back of my mind, I'm like, oh man, in Switzerland, they got to be rocking with like 1.5 points.
Right.
Nope. And so the carry trade has, I think, and I don't, it's not because of this show or because of us, but I think whenever these markets, whenever the US dollar gets pummeled like it has, and then it's like you get so caught up in the news of like, the U.S. dollar sucks. The U.S. dollar sucks. Like all this trade stuff, like Trump, it's all bad for the U.S. dollar. And then at some point, everyone looks at some of these numbers and they're like, but man, if I'm not getting 7 points every week to be long this U.S. dollar against Swiss franc, which, you look at we've seen multiple 30, 40, 50-point moves within a week. But if the market's going to, start the week around 82, go down to 81.80, go up to 82.40, and then end the week around 82. The 7 points are nice. Of course, there's a bunch of risks that this thing keeps going, but it's been an interesting trade to me. It's almost like a market that has juiced vol, and it keeps whipping around, but it's not really going anywhere.
Right. Definitely seeing a lot of dollar buyers, even after U.S. dollar struggling to gain momentum, but not really collapsing as aggressively as it did at the start of the year here. And yeah, just taking you through what went down yesterday. That what was it? PMI.
There was some bad U.S. data. There was bad employment data. And then in the afternoon, it felt like some more fear kicked in. They started hitting equities a little bit. They started hitting the crypto and a lot of risk on assets.
The big, beautiful big bill. The tax bill.
I have no clue what you're talking about.
The big tax bill.
Okay.
The big Congress, what they're trying to get through, budgetary stuff, apparently is going to add almost $3 trillion to the debt. And that already was
sounds like
not
a lot.
Not in the best place. And so I think some of that playing through here as well, as it looks.
That stuff figures itself out, though.
Yeah, it's the ultimate kicking the can down the road.
Dude, I don't know. All I know
your 6'4" daughter might not appreciate.
All I know is I've been here doing jobs like this for like 10 plus years at this point. And man, every single year people get heated about this stuff. And every single year it's business as usual.
All right.
So, I mean, I'm sure it's important, but I'm not going to waste any time thinking about it. I'm more enamored with the numbers. And yeah, what you have here is a decent amount of back and forth, a decent carry trade. And what's interesting is the other market with a significant carry trade, dollar yen, is the only other one this week that's also giving you some back and forth. plenty of opportunities if you wanted to carry trade to buy this market below 143. Of course, again, the market can absolutely move lower than 143. It can move significantly lower if you are trying to take advantage of that positive carry. But plenty of opportunities to also just like scalp, carry trading around. It's nice to lean against something like that, but it's like if IV rank in a market is 100% and I sell puts, let's say it's like UNH, the market is getting hammered, I sell puts, and the market rebounds 10% the next day, I might look at taking it off even though I didn't take advantage of the IV necessarily. And similar here, you had that dollar Swissy get down to 81.60-ish and then bounce back to 82 plenty of times this week. Similar story here where we get below 143, bounce back above 143, even, Tuesday and Wednesday getting all the way up to 144 bid again.
Yeah, this one's interesting to me because it doesn't seem like we've settled on a range here. Found a lot of support here just under 143. But I mean, just last week we had that run up all the way to 146.
Yeah.
Very short-lived. And then if you're expecting any sort of consolidation, maybe around this 144, really haven't spent that much time even close to 144.
150, 200-point moves around it. Like, these aren't small. The dollar Swiss franc moves, you might be like, Frank, you're talking to me about like 40-point moves. Okay, it's what I got for you this week. But this market is, I mean, there's 150-point moves to your point. Last week, the high to low move of 142.5 to 146, that's almost 400 points. Good math there. This high to low move this week is 142.5, close to 144.5, so about half of that range. But still, like, I'm by no means saying like, oh man, like I'm in there buying every 142.5 and selling every 144. But like it's a decent enough range, and if you're looking at carry trade dynamics, that stuff is still here. And I would also just allude to the fact that like those dynamics are dynamic, and we might not have those same U.S. rates at 4.25%, and Japanese and Swiss and now Euro rates down at 2% or lower. My career started multiple years of everybody's at zero, and so Forex market at that point, you don't have. It'd be like if IV rank every single day was just like VIX was like 12 every single day, which it kind of has been for vast stretches. So I don't know. In my mind, I want to look at all the interesting stuff like that as frequently as we possibly can, because it can change. And also the news stuff is BS most of the time.
Fleeting. Ephemeral. But the news.
Stop using my words.
I'll give it to you. You have some good words. But today we do have this.
Oh, they haven't met yet.
Yeah.
Dude, why didn't you tell me that? I thought that they'd already cut.
No, you said this morning we have a cut. Yeah, it's in 28 minutes. And
man, I was like really
mad.
Yeah, you could tell how mad I was. I was like, man, the
unchanged.
Euro market is unchanged, and
I was like, well, just give it a.
Okay, it hasn't happened yet. We still got 30 minutes.
Yep. So we'll get that the key overnight rate dropping down to 2% here, which will be almost 2.5% lower than the U.S. And then we'll have this press conference closer to U.S. Open. It'll be interesting to see what she says about all the buzzwords that are in circulation right now. But yeah, heading into that, euro dollar unchanged, but holding in there. I mean,
do you think she could dunk on Caitlin Clark?
Dude, I'm pretty sure Caitlin Clark is like 5'10" too.
That's what I'm saying. Could she take Caitlin Clark to the paint?
She can mix her up. Has that ever been done before? A move from ECB president to Indiana Fever.
I mean, right now, you're not buying the low, but you're you're buying a pretty strong trend at this point. Who knows, Indiana Fever, if they're like the Lakers in 10 years from now, that might be a good move.
It's a pretty good deal.
I mean,
head to the merch shop now.
I would take Jerry Buss over ECB president.
I'm taking the Chicago Sky over the Indiana Fever all day.
Bad colors, the Sky. I'm going to be honest with you.
The Sky is a bad color because
No,
it is.
the Chicago Sky. It's
But
the
the same
light
thing.
blue and like light yellow.
Do you think
great.
weak? Like not as like regal.
Yeah.
Not as
The
strong.
Bulls. That is red and black. Good luck. All right. What did you want to say about this? We have other stuff to talk about, right?
Yeah, we can get into the slides, but just giving you a little snapshot of where the euro dollar is
114
positioned.
bid. Okay.
Heading into this, we're near highs. So, and a big move just yesterday. We were trading comfortably under 114.
It is important to understand the context of like when we saw that bad euro inflation print earlier this week, they took this euro dollar market down close to 100 points.
Right.
And so we're right back at those highs. If they come in and cut as expected, but maybe more, I don't know how the UK, everybody has their own way of doing it. Where like maybe sometimes more presidents say that they did want to cut more or something like that. Yeah. And then if the press conference is dovish, like you could see, like a 50, 75 point move here. I just don't think anything that happens today. I think the only thing that would happen today, it would be like Trump trade war stuff that moves this market more than 100 points.
Maybe, but you bring up a good point here looking at the inflation print. If the market says worth this much, takes all that out on maybe just more widespread euro or U.S. dollar weakness, Lagarde comes up and says, "No, we're taking this very seriously."
Yeah.
Why
Maybe
not?
We're back down to 113.5.
We'll see. Let's cut over to the slides because we got some interesting content for you today. Always some good stuff coming at you on Forex Focus.
What is it?
U.S. dollar hitting fresh lows. But what currencies are capitalizing on that right now? Which ones are gaining? Because we have seen more often recently than perhaps earlier this spring, unanimous dollar moves. Earlier this year, we saw some different risk-on pairs play differently than the safe haven currencies. A lot more of that dynamic now. It's a lot more U.S. assets, U.S. dollar moves as a whole.
It's a dollar story. It has been more or less for the last couple of years. Actually, I shouldn't say that. During the post-pandemic boom and inflation run-up, there were plenty of like U.S. hiking rates. Oh, well, actually, now the U.K. are really hiking rates.
Interesting.
There was back and forth there. That wasn't just a U.S. dollar story. The last 6-ish months has been a U.S. dollar story. But what's interesting is the range of action between currencies against that U.S. dollar, because I think a lot of people would just imagine, oh, well, euro and pound and yen and Swiss franc and the commodity currencies, CAD and Aussie, everybody. If one of them is at an extreme, they all must be at an extreme. Or if one of them is up 10%, they all must be up 10%. And we've seen a pretty good mix of action, so I'm excited to go through it.
We've got a good list for you here looking at the U.S. dollar pairs that are offered by tastyfx, taking you by month or, in some cases, year-long extremes from least extreme to most. We've got first New Zealand dollar here outperforming the Australian dollar in recent weeks. We got a 7-month high there, dating back to November of 2024. And there you have the last week of movement and the year-to-date high, from the move from the year-to-date lows, actually. So we're up about 9% here.
It's a nice little move, and to be back above 60 cents, good for you. But yeah, this is one of those, like, you closed on some of the worst prices in Kiwi history. And so 9% is nice, but and the fact that it's better than Aussie is like, man, Aussie, holy smokes. But compared to the fact, I just know in the back of my head that like pound and Swiss franc, some of these currencies are like near are at multi-year extreme, like multi-year
Exactly.
upside extremes. And so the fact that this one is just back to, fall of 2024, it could have more to gain.
Absolutely. Next up, Canadian dollar. Canadian dollar 1 month greater. We've got an 8-month low in dollar CAD. What do we think of this? We're coming off
a little
of,
stronger than I thought.
Yeah, absolutely.
And you might say, well, Frank, you just showed me that Kiwi's up 9% on USD and CAD here is only up 7.25% on USD year to date. But one, USD CAD is a less volatile market than New Zealand or Aussie. Most of the time, of course, you can have weird action. And two, I look at all of that crazy action. Canada was the first one that the Trump trade wars went after. And the fact that we got all the way up close to 148, and they're back down to close to 136, which is relatively normal. It gets you at least back to the middle part of 2024 there, or a little bit normal than some of those other commodity currencies. I'm surprised by this CAD.
Absolutely. On the heels of that Bank of Canada decision earlier this week. Next up, staying in North America, Mexican peso. What do we think about this? Now also reaching October levels of last year, but this one, a lot more historic room to run. 2024, we got as low as 17.
Yeah, decent volatility in here. I would have expected this to be even more volatile. I would have expected this market to be, close to doubling those Canadian dollar moves. So nice little move in here.
But nice that it's actually included maybe some of these nearshoring trends.
Yeah.
Starting to pick up. Next, we've got one of your favorites.
Why is that?
The Czech koruna.
Why is that my favorite?
You love all the krona, kronar, koruna, kronus, all of the Scandinavian pairs. But the outperformer this year has been the Czech koruna, trading now at 2023 levels, so almost 2-year lows in this market, and your percentage from year-to-date highs
Good
pretty
for
strong.
Them. The Czech, I'm part Czech, so I can say this. They're a proud people, and they've been in the lab working, and their economy is starting to, one, outperform nearby countries,
Box out,
and two, not be reliant on the Euro area. Great. I'm also,
I'm also European.
I'm also
proud
Italian,
people.
so I can claim that as well. But a little bit too much cronyism there. Okay, a little bit too much like,
and less
Germany's doing really well, but they got to pick up the slack of like Spain and Italy.
Yeah. Tough.
It's
big
tough.
Ask.
Czech, good for you guys. That is a hell of a move. And yeah, now we're talking about seeing some extremes that are multi-year. That'll be an interesting one to watch.
And last up, we have the British pound, who is back up to 3-year highs and trading right near this 136 level. Similar price action to the Czech koruna, but this is a major pair here, supposedly historically less volatile.
Glad I got my London trip in last year.
Oh, your London trip through the company?
They did pay for it. So I'm glad for them. But man, 135 half, we are dangerously close to just breaking away into levels that we haven't seen for 10 years plus, which is like the $1.50. Oh man, this is a strong market. And you might say, oh, the Czech market it's the same type of price action, 11% or whatever. This is a market that is not nearly as volatile as some of those smaller currencies like the Czech koruna. This move is pretty crazy. We'll see if it continues, but this has been 135-ish has been the high for the last several years, so this will be an interesting one.
Well, there you have it. Those are the currencies gaining on a weakening U.S. dollar. We'll see if these how far these extremes can run. That's all I got for you today here on Forex Focus. A lot ahead in the trading day, so stay tuned for Tom, Tony, and Vanetta up next on Tasty Live.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
I came from a unique family background. My father was a trader at the Chicago Mercantile Exchange. He was a cattle trader. Now, my grandfather was actually a pork belly trader, and when the exchange was founded, it was actually founded as a butter and egg exchange, and they were in the egg business. So back in the 20s, they were part of the founding membership of the Chicago Mercantile Exchange. I pushed my father very hard to let me start as early as I could, and he was incredibly kind and generous to give me that opportunity to start. The exposure to the markets was kind of that connection for me that made everything come to life. Within the world of futures, there are 6 distinct asset classes. So I am usually putting together a portfolio within equities and energy, metals, foreign exchange, and interest rates. Also agriculture, I tend to combine a series of positions, some directional, some pairs trades, others with an options or a theta component, trying to put together a portfolio that takes advantage of opportunities, price extremes, high volatility to generate productive returns.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to tastytrade. So spread the word and earn rewards. Terms and conditions apply.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Woo! Get tasty, free market. Come on, you know it, can you feel it? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you
Knuckleheads, happy Friday to you both.
Hello.
Good morning.
Hello, Bats.
Hello, Bats.
Hello, Newman.
Nick, thank you for coming on the show, filling in for Tom Sosnoff, who's away traveling, visiting his mommy.
Oh, that's so cute. I didn't know he had that love in him.
Yes, I
think his love for like a clam sandwich is not to say that he does not love his mom, but he's like, you know what? I could really go for a clam sandwich right now.
You're 100% correct, but he has not been able to try it out yet. He has concierge level on the for
American, yes, yes.
Flying American. He just 2 minutes ago sent me a text message, and here's what he says. This is a quote from Mr. Tom Sosnoff. Everybody, get your pen and paper. Concierge level is gangster. Sushi for breakfast and champagne, the good stuff. French omelets and caviar. Enjoy your prison food.
Wow.
Is that a haiku? That was really nice. That was really good.
He is completely...
Who is this diva?
First of all, he wouldn't know good champagne from bad champagne, beluga caviar from, just your sturgeon or anything else. He would have no idea. No idea.
Over under on if he's gonna vomit after he stuffs himself with sushi, a French omelet, and caviar and champagne.
French omelet. They ain't making French omelets.
No.
I mean,
is it the lounge? Is he at
Yeah.
So
not the regular lounge.
Not the regular lounge with the old cubes of cheese. Like,
yes.
Together like the Colby Jack.
Yes.
Serve you. No, not this. This is concierge.
Yeah. So Britt got him a 1 day pass because there's no way.
3 month. He has like a 3 month.
A 3 month pass. Okay, whatever. So Britt organized it, got him the pass. He'll use it a couple times.
Oh, it's first time. It's the first time he's using it.
There you go.
That's his feedback. I don't believe one word of it.
That's too funny.
Mm-hmm. That's my boy.
Hey, but when you have that service, like you can bring a guest. Is he gonna bring you when you guys go to London?
Oh, that's big. Maybe you get the invite one day.
Right in my bag or something like that. The three of us can go in there together. So the three of us have to choose. We have to choose. I don't think I'm his number one seed.
Wow. I don't think so either. Yeah, sorry.
I don't blame him.
Yeah.
I don't blame him. I don't expect to be the number.
Well, and you'll have the whole fam too, so you'd have to cut them out.
True. Oh, you mean when we go to Europe together?
Yeah, for London.
That's gonna.
Yeah, that's what I'm saying. Like that's where it's like, because that's where it really levels up.
Yeah,
it's really nice. Yeah.
He'll probably take my wife. Yes, and just leave the two of us behind.
I mean, to be fair, I'd take Chris over you too.
Yeah. Lady Bat for the win for sure.
Lady Bat for the win. So what'd you guys get up to last night?
I didn't get up to the ending of the basketball game. Couldn't make it.
I did. It's a great game.
Did you watch it? Yeah,
Amazing.
I saw
Amazing.
Tyrese Halliburton, right? Had the game-winning buzzer beater, and that was the only time the Pacers led was at the end.
The very
Time
end.
it counts.
Yeah?
Yeah.
It
was it really exciting? Was it a really good game?
I mean, for most of the game, okay.
By 20.
Yeah, OKC was winning the entire time.
They were leading by 20?
I think they were up 16, 18.
Oh, okay, but like a comfortable lead.
Yeah, and they looked great the entire game. It was
where was the game?
in OKC.
Oh, it was in Oklahoma. Oh, wow.
Yeah.
Okay. Yeah.
So, it was a buzzer beater shot. I mean, he made that shot with 0.3 seconds left to go in the game. And the first thing I did was okay, this has got to be a good spot to jump on the OKC futures here.
For the series.
Because
they were such a big favorite, he was thinking that the line would move so much.
And if you win on the road, the first game, big momentum game.
Yeah.
You think that kind of tightens up the expectations. The line didn't move all that much.
See, that was my question for you. Was how are you gambling this?
This was the first thing I thought of.
Okay.
Was to go to my DraftKings app, see what the spread was. I can look now. Maybe it's changed a little bit. I don't think so. See, the problem is
the Pacers were too big of an underdog.
Yeah, and also I think everybody has the same thought that I have. This isn't
Does it make you feel good about the way you're thinking? Does it make you feel bad about the way you're thinking?
I'm going back and forth now.
To yourself, huh?
But they started as
400 or
something like that.
Yeah.
But they're at, so it's OKC minus 300. So they're It's come in a little bit, but you would think if that was
5%, isn't it? Was it 400, 300?
Yeah. But it's still, I would thought it'd be like minus 200, like something like that. You know, like
Give it time.
Yeah, I don't know. I don't think it'll move all that much from here.
Are you upset about Illinois taxing your bets?
I mean, I'm upset about all taxes. I do not like any of the taxes.
You have to
That's why
pay
you gotta
taxes.
come back home, son. Come back to the street corner. We don't tax you guys on nothing. Believe me.
Yeah, that's true.
Yeah.
That
The rest of the boys, they don't do nothing.
I do have some friends that have
You gotta
stuck
go.
to.
That they have like their bookie priest.
Yeah.
Right.
Yeah.
Back to the underground where it belongs.
Yeah.
Right in the dark alleys.
Yeah, I don't. I do it as an engagement trade. I'm not a big. I'm
not an addict. I'm a casual user.
Yeah, it's just like I like to dabble in the bets. Like I'm not like it's not like a source of income.
I'm not an alcoholic.
Yeah, but then doesn't
50 bottles of
like DraftKings invite you to events though?
Mikey.
Through my work wife. So I do have. If there is a divorce, I do get half.
Okay.
So yes.
That's more than just being a casual. Doing it for the engagement. Is if you were the first person that DraftKings calls is like, hey, we have something special for you.
Yes. No. By association.
I see.
Diamond
if you
Club.
drive the car to rob the bank, you're just as guilty as the.
You are an accessory.
That's fair. And I will take credit for Mikey's addiction, at least getting
He
him
engages you a lot, doesn't he? He like.
No, I got him into when I was first hired at Tasty.
Yeah.
I was doing
Supplementing your income. Go ahead.
I was doing a lot of DraftKings, and he wasn't even into like football really at that time.
But Mikey was like kind of like on that poker circuit though. Like
He
when
was.
he first started, like you guys came from different degenerate backgrounds.
Yeah, so we kind of merged and melded it all together.
Like an FX trader and an option trader, finding common ground with each other.
Right.
It was really a match made in heaven.
Mm-hmm.
It's really, really beautiful. So, but yeah, I can't take the credit for being the
DraftKings.
concierge level, as
Right.
Tom would say.
Right.
Mikey is the concierge level.
Makes sense.
That's too funny. So what's tonight? Is hockey tonight?
Yeah, but you know
then,
what?
or?
I just looked. I don't know who the hell did these schedules. There's no games on the weekend. I mean, there's a Sunday night game at 7:00. I mean, there's no basketball game.
Sorry, you have to spend time with your family.
Yeah.
Sorry.
Well, I mean, we like to huddle around the TV and watch shows together. We could watch a nice hockey game.
Your wife likes to watch hockey.
Basketball game. Yeah, I mean something.
Yeah.
I can't believe it. There's nothing over the weekend. I mean, nothing on.
That does seem odd that you would want to capitalize on that, but I don't know.
It was weird.
But hockey's back tonight, so you at least you got that. So
Yes.
good times.
Edmonton, I don't know. Could be a great series. I hope it goes to 7. That's all I care. I'd like to see the Panthers win, repeat, but I don't. Just want to see good hockey.
Will we
Repeat.
What's that?
Repeat.
Repeat. Yes. Well, yes. Win again, but yes. Repeat.
Oh, that's very exciting. Hey, speaking of you and Mikey, are you excited? Nikki, you are headed on the road, just like your dad is on the road, but you guys your first show's in Washington. When's that coming up?
Next week.
Are you excited?
I'm fired up. It's going to be awesome. We still have some signups left, so if you want to
I
sign
still
up.
got to proofread your slides. I got to do that today.
I know. I'm late on those. I'm always a little late. I'm always like last minute.
That's her way of bringing the dirty laundry out.
Yeah. It shouldn't be.
No, he got him. I got him yesterday. I was saying it's on me. It's on my list to do today. I got to proofread your slides.
I'm usually okay on the wording.
Yeah, yours are not terrible.
Yeah,
yours are not bad.
I don't get wordy. I do.
Yeah.
My wordy is live. You know?
Yeah.
I don't do the slide wordy. I like to really get into it, but it should be fun. It's gonna be great content. Got Mikey coming in there with just some mechanics. I'm gonna do some management stuff. You got Katie coming in with futures. This will be your only time to see Ryan. So if you want to see Ryan or talk crypto, he's obviously our
That's right.
man.
He was gonna do more shows, but his wife is super pregnant.
Yes. It was funny because when we were doing this whole, when we were planning when we were planning this out, he was like, "Oh yeah, like it would be great. We could all do them together," because he was going to do his own tour.
Yeah.
And then about a month ago, he was like, "Oh yeah, guys, my wife is going to like pop out a baby at the end of the summer." And we were like, "So I don't think you can really do this,
right?
Can you?" And he's like, "No, I don't think so."
I digress. I don't know what the work ethic is with you youngins, but when Vinny was being born, I was out on the road. Happened to be in Indiana. Got the call from my wife. I think I'm going into labor. I had to leave the show a little bit early, and
wow.
Came back to Chicago, made it for the birth. I mean, these are things you got to do when you want to, when you want to move.
That's hard. It's hard to be like focused on like.
I mean, in fairness, it was my third biological. Fifth, I was going to be taken care of. So
yeah, I mean, you guys have had
things pop out before.
It's not like the first one. Yeah.
Yeah.
I get it.
No, well, I'm very much looking forward to it. And of course, Tom and Bat are also on the road, and Dr. Jim is on the road.
Yes.
Everybody is on the road. Just check out tastylive.com/events, and hopefully we are coming to a city or country near you. So
libations.
Yes. Are you upset that you don't get to go to London with your dad?
No, it's okay.
You're a troublemaker.
It's okay.
What?
I understand. It's all right. I'm not the favorite child. It's okay. It's all right. I mean, you gotta, I've grown out of the favorite child. I had to pass it down.
Yeah.
Okay.
Yeah.
All right.
Do you want to come?
No.
I didn't think.
I'll go. I love
We're all
London.
sharing a room. You want to come?
Yeah. You got to share a room with them.
That's fine. I love London.
You would agree to that? No way.
No, I would not agree to that.
You'd be stuck in babysitter duty.
This is true.
You'd taking Vinny to get his caviar.
That's fine.
That's true.
That's fine. I will help out any way that I can. It's good.
Well, all the events are up there for you if you have
Yes.
date and time in your area. I'd love to see you. Please.
Yeah, it's gonna be a busy rest of the year. We got something happening all over the place.
Yeah, like almost every other week. Like,
Yeah.
if it's not at work by 11, it's the work whiteboard tour or crash course.
Yeah.
So we got a lot going on.
Yeah, and I think registration opened up for Denver today, I believe.
Awesome.
So if you would like to come to our Mile High City, that will be the next American
25th,
show.
yeah.
Yes, the next American show. So I really like Denver. So
Yeah.
hope to-
I've
hope
been
to
there in a
see you
while.
there.
Looking forward to it.
Good times. Hey, I had to, this is not super interesting, but I had to take my car in to get an oil change yesterday. It was like not super exciting, but there was also a recall, like a massive recall for my car. And I was like, hey, can you guys fix this? And they're like, we got you, no problem. So I'm sitting there just in the Toyota dealership for like 3 hours. And the guy comes out, he's like, so there's a problem. And I'm like, what? He's like, well, we're trying to fix the recall. He's like, but your car's not recognizing the sensor. And I'm like, that sounds like a you problem. And they're like, yeah, we got to keep it. We got to keep her overnight. And I'm like, my baby. So they give me their loaner car.
Ooh.
Oh, that's
Which
good.
normally it's like you would think that they would give you like the nicest car possible. So you
No,
wanna
you
be
gotta
like,
you gotta haggle for that.
no, well, like a loaner car, you'd think that they'd want to give you the nicest car. So you'd be like, hey, this is really nice. I want to upgrade my, right? Like, maybe. Instead,
Did you get like a
no, I got a RAV4, but it's like the worst RAV4.
Oh, like the most basic? Yeah.
Right, like it has a key. And I couldn't figure it out because when's the last time you had a car that I hadn't...
like going back to a rotary phone?
15, I haven't had a key in like 15 years because it looks like a key fob and you have to push a button and it comes out like a switchblade, but I couldn't figure out how to get the key out. And I said,
You gotta ask for the higher end one.
I don't think, but it was the
all
other...
you got?
Well, the other thing that is interesting, they don't have any cars on their showroom floor. Like it was
Really?
In this economy?
They had one truck and they had maybe like a Corolla and like that was it. And I was like, where are your cars? I don't know.
odd.
But hopefully my car doesn't blow up and hopefully I get my car back today. Fingers crossed. But they were like, you can't leave the state.
With that rental?
with the loaner. And they're like, it has a tracker on it.
And it'll start like beeping at you.
Right, I
Just
guess.
Cut the engine.
I guess. I don't know. I just thought it was funny. I was like, where am I going to go? I'm not going to leave the state. Anyway. Hey,
real close to Indiana.
I know. It was like, what if I worked in Indiana?
Yeah,
like
right.
what? Like that's
I mean, there's a lot of people that go back and forth over the.
Sure.
Interesting.
That's fine. I'm not going to leave the state. But hey, we got a great show for you today. It's a double dose of bats all day long. So buckle in for the insanity of that.
Woo!
Top of the 8 o'clock hour, Jamal is going to be in recapping the week in stocks. Hey, he has titled this week's segment Metal Market Mania. Love an alliteration. He's going to recap, like I said, the week that we've had. It's been an interesting week.
Yes.
So that's Jamal at 8 o'clock. 8:40, Fast Market, Bat and Bat are doing viewer submitted trades. So hopefully, Tasty Nation brought the thunder and has some good trade ideas for you guys today. Are you looking for trades, Nikki? Are you?
I'm always looking for trades.
Looking for
Come on,
trades?
this is what I do.
You're sitting there. Do you have access to Tom's account?
No, they don't. He does. They don't let me do that.
Oh, they don't let you do
New
that.
dad, he does.
I was gonna
Yeah.
be like, oh, that's nice. So that's at 8:40. Then 9 o'clock. Market measures holding past 21 DTE. Is that bravery or foolishness?
Oh,
They did a
God.
really good job of tightening up because we got a lot of questions about why not hold it past 21 days, and usually we would show the P&L, which we'll get to here too, but a lot more background information on why or why not you should hold past that 21 days.
Well, if you hold it too long, you're just playing with it.
That's correct. That's correct. Shake it more than 3 times. 100% correct.
Who knew the research boys were poets here? They have
but-
quite
They
that's
upped
a
their game.
fantastic
Well, they knew
title.
I'd be watching. Sadnov doesn't watch them that much. They knew I'd be watching.
Yeah.
And then live from the trade desk, my personal favorite segment, Big Boy Scott Sheridan, counting down the top trending tickers, and I believe taking your questions. So if you have questions on the brokerage side of the business around 9:30, Scott will join the bat, and we are happy to take your questions. That is our run of show for today. Hey, in the meantime, in the between time, you guys want your daily dose?
Sure.
Yeah. Oh, I love the unison. Hit me with my theme music. Let's go.
Our leading
In
story,
today's
breaking news,
headlines.
coming across the wire. Our leading story, top story, just in.
In today's headlines.
This just in. Breaking news.
All right, everybody. Today's a fantastic Friday. It's June the 6th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
It is Jobs Report Friday. Yeah!
Yay!
And today's job report could show how much U.S. employers will bend before they break. Economists have warned that impending layoffs could start rolling in to the economy. The labor market could be softening, but inflationary numbers have been good. We're just going to see. We're just going to see what's going to happen. But at 7:30, you are going to get a number that is going to come out. What's the
most important numbers, as Dr. Jim says, is the last most important.
Since the last most important number, what's the implied move for the market for today?
I was going to ask Nick that too. I'm going to give you a little bit of background. Volatility down 37 cents, 1940, relatively low. Would you?
Yeah.
I know Tom talked about you'd pray for a 19 vol when it's 16, but we're not there now, and this is about as low as it's been. So implied volatility is low. Market catch a little bit of a bid. It looked like the market was going to implode yesterday. Tesla down $50, $60.
We'll get to that.
At one point, volatility expanding.
Yeah.
Bonds are now 113.12 off of their highs of over 114 by a full point. That's $1,000. Move higher end of the range most recently. What do you think about this expected move in the E-mini S&Ps, which is 44 handles?
Yeah, I mean,
You taking the over? You taking the under?
Ooh.
I want the over, but it feels like it's going to be the under. I mean, it feels like everybody this has been kind of a forecasted event. And even yesterday with the hoopla that went down.
We'll get to it.
I know, we'll get to it.
Give me a second.
I'm getting to my reasoning for it being a nothing burger of a day. I think everybody is kind of hedged and, the market doesn't move when everybody's already
They expected.
when it's too we're too hedged.
I think it's just because it's summer Fridays and that like no one, everyone's gonna dip.
And for volatility to kind of expand, maybe next week, sometime early in the week. I had thought it would be today. I actually thought it'd be like yesterday into today.
Yeah. Yep.
You mentioned this, but the Treasury rally stalled just a little bit yesterday as ECB sparks a Eurozone bond sell-off. Treasury yields climbed slightly yesterday as a sell-off in European government bonds overshadowed weakening U.S. labor market data. What are you guys doing specifically in bonds? And I know you guys aren't specifically really like bond traders,
I'm
but
not James Bond like Tom.
but I didn't know if you were dabbling.
I would be looking for a sell-off to buy him like Tom. I can't do anything here at 113 and change. Ivy rank at 29, but if you do have an opinion, Ivy rank's okay.
Okay.
Naked puts, naked calls, if that's what you're looking to do.
Do you get in where you fit in?
That's correct. That's correct.
There you
That's
go.
correct.
Hey, here's something interesting. James Lee, the CEO of the Texas Stock Exchange, says 35% of the 4,600 companies that are publicly traded on a U.S. stock exchange would not qualify to list on the proposed Texas Stock Exchange because they are concierge. They are that exclusive, honey.
Wow.
He said, he told at a conference on Thursday, he said Chinese-based companies would not meet the basic U.S. listing standards. The TXSE, that's hard to say, first disclosed plans last June and earlier this year filed seeking regulatory permission to launch, which people say could happen in the second half of 2025. Do we need another exchange?
Well, we need a concierge level exchange. So this is what we need it. I mean, do we need one? I mean, competition is good.
Yeah.
Sure.
So I have no problem with it. And trying to make a name for themselves. I get it.
I get it. You shoot your shot. Shoot your shot.
It can't be bad for public traders like ourselves. You know what I mean, for that individual investor, this can't be bad.
Hey, I know Jamal's going to really get into more granular detail about this, but silver jumped to its highest level in 13 years following gold's massive rally. Silver futures rose as high as $36.27 per troy ounce yesterday, notching the highest price for the metal since early 2012. Let's talk precious metals.
Huge move the last 5 days in silver, going from 33 to 36. It's a $3,000 move.
Hi-ho silver.
And yeah, hi-ho silver is right. And
It's up another 1.5% almost.
Yeah,
It was.
third. Yeah, you're.
What do you think is going on there? Like, why? Why now?
I don't know, but I think Jamal naming his segment what he did is just sucking up to Sosnoff, who's long silver, and gold is unchanged. Silver's up 1.25 to 1.5%, as Nick said. So.
I mean, there's been a little bit of a catch-up trade in silver.
Yes,
Silver is back to the highs, like right around like the election time when we had a little bit of craziness going on. So silver has a lot of room to go relative to where gold is. The gold-silver ratio
Under 94 now.
Yeah, but it's
up to 104.
104, 105. It was very, very high.
A week ago.
Yeah. So, but with 94 is
highest level.
94 is still high too.
94 is
so,
high. You prayed for 94 when it was trading in the 80s. I mean, if you were wanting to get long.
So there's.
Nikki, do you trade metals or not? Not really.
I do. I like to trade gold futures a little bit. I trade little like broke wing butterflies on the upside. Try to go as wide as possible. You can with the span margin. It's nice because you can get relatively big. It is very risky, obviously, because you have.
Be careful.
Yeah, you got
big with the buying power.
Well, the reduction you can get, 25 by 50 or 50 by 100 broken wing butterfly and only use a couple grand in buying power. So you can get big position, potentially big positions. With some leverage. So,
what's gold doing this morning?
Unchanged, basically.
Yeah. Oh, okay. It's all silver then.
Yes. Silver has outperformed significantly.
Hey, sticking with commodities, surging electricity demand is just one reason natural gas looks so appealing to investors this summer and beyond. Of course, the natty gas market is highly seasonal, but it looks like there's some opportunities for natty gas in the summer. Summer cooling demand, along with low U.S. storage levels and risks tied to the start of the Atlantic hurricane season, are providing growth for natty gas and natty gas exports. I literally have not done a natural gas story, and I don't know how long. I used to talk about it all the time. But what's the opportunity there?
Because it's really nothing.
Nothing tradable other than the future.
Womp womp.
Yeah, and they do have a micro future that trades.
Still big though.
It's still big.
$25 a tick.
Ooh.
So today it's it's only a 2-tick move, but
Right.
It's $50.
It's not like 100 shares of stock like you would for a regular micro future in a Nasdaq or even the S&P.
Yeah.
It's just significantly larger.
Yeah. Especially when Natty Gas can move.
You have to be real careful, yeah.
Sure. I mean,
but I was just
it moved just a couple of days ago. It moved like 50 ticks. So it's a decent sized move.
Yeah, well, I just thought I would mention it, so it is what it is. Hey, here's something interesting. JP Morgan Chase will begin JP Morgan Chase will begin accepting cryptocurrency investments, including BlackRock's IBIT as collateral for some loans. JP Morgan, the largest U.S. bank, will permit trading and wealth management clients to put up crypto-linked assets to back some loans. What are your thoughts on this?
I mean, I think it's a good idea.
Yeah.
I mean, why not? I mean, it is a viable. It's stock, just like anything else.
Sure.
I mean, so if it's trading around $60, I think it's $59 or something like that, and you've got $60,000 worth of stock, they're going to give you some percentage of that, probably 50% or 25%.
No, less than that, because the vol is too high.
I know. That's
They're going to have
It's worse than a pawn shop.
You know what I mean? So you can margin call same way you can anywhere else.
Yeah.
What's Bitcoin doing to round out the week?
Bitcoin's had some volatility this week for the first time in quite some time, right?
Yeah, yesterday it got down to 100K on spot. I think it might have even went slightly below.
Oh no.
1013 on the future.
Yeah, the low on spot was 100,500. So you got, you had about a $5,000 intraday range, and a lot of it was like into the close, basically with the whole
Shenanigans.
Kerfuffle,
yes.
Kerfuffle that was going down. And Bitcoin has, over the last couple months, been kind of the pre-mover.
Yeah.
Like it's been the one that has kind of forecasted
75,000 to 113,000, really without a downtick.
Yeah, but it usually moves it has been moving kind of first relative to the market. So it is having a nice little bounce back today. It's
up 2,100 right now.
Okay.
Futures to 104.
But $3,000 from the lows. It's basically reversed the whole thing.
We will see what happens. Hey, let's get into a couple of the earnings plays from last night before that number comes out. Broadcom reported a second quarter earnings that beat Wall Street expectations and provided robust guidance for the current quarter. The Broadcom's revenue of $15 billion topped estimates. What'd you do in AVGO?
It'll work out nice for Tom. It's down $7, well inside the expected move. AVGO hasn't had a downtick too. This is the first downtick.
Yeah.
Yeah, they're at new highs. So
yes.
Did you trade it or no?
I'll make a couple bucks. I did a small little broken wing butterfly on the upside. I wasn't too gung ho on this one, but should work out. I mean, it really should work out for anything you did.
Yeah.
Any short premium, or even if you did diagonal spreads or calendars, you're probably still fine too. Anything that you sold some premium in the near term, you're probably getting paid today.
Well, did you trade Lulu?
I did not, but that one looks like
those were.
So Lulu shares tumbled 23% as the company cut its full year earnings guidance, citing a dynamic macro environment. Stock down around $66, now down 19%. But the company did bring in revenue of $2.37 billion versus $2.36. But again, like other companies, they cut their full year guidance. Lulu.
I mean, these were untradeable markets. If you did anything,
Oh, they
option
were?
markets,
Okay.
yeah, they were $2 wide. I mean, they were. If you did something here, you were doing it for direction, and hopefully did it to the downside because the move is outside the expected move for sure.
Oh, okay. That is.
Yeah.
That is.
I don't think anybody traded. It's not that widely traded.
Yeah.
Okay. Good to know. Hey, stablecoin issuer Circle soared 168% in its New York Stock Exchange debut after pricing its IPO above the expected range. The stock opened at $69. Nice. As the IPO was priced at $31. CRCL is the ticker. I don't know if you guys were watching this at all yesterday.
I mean, you can't short it. It's just, it's really untradeable. A nice IPO is all I can say. $94. Right now, it closed at $82. Looks like it's up $12. That's big. The number just came out. Even the S&P's first move up for 45. They're up 45, which put them $20 higher, $25 higher than where they were this morning. NASDAQ up 177. Russell up 24. Dow up 270. And volatility in 87 cents. That's a big
move.
America.
Fade the first move here.
Yeah.
What do you do?
I don't know.
Usually after a number like this, 24 hours later or 24 to 48 hours, you get a little bit of reversal in the market. Now,
well, that's the weekend.
That's the weekend.
You
I know.
trade that.
It's a freaking weekend.
That's what I said. That's what I said. I think you fade a little bit of this first move, but volatility down 82 cents. We're gonna catch a bid or stay relatively high today. Bonds down 15 to 112.31.
Okay.
Okie dokie.
That's not good.
$44 expected move in the ES. That's what you got right now. So we'll see what happens.
Frankie always tweets out, but he said that yesterday, Thursday's option volume was around 18% above recent average levels. But I don't know if that number will hold for today. Like, I don't know if it'll be a lot higher.
It's kind of a surprise given how choppy the week has been.
Yeah. Well, the big story of yesterday is the girls are fighting, honey, and Tesla lost $152 billion in market cap. After,
don't Tim Walls it. Don't Tim Walls it.
Musk-Trump spat. The biggest hit ever, the biggest one-day hit ever to the stock. Shares of Tesla fell 14% as President Trump threatened to pull government contracts for CEO Musk's companies. That did escalate rather quickly, and there are rippling consequences. If Musk pulls the Dragon capsule from the like that, then strands people in space. Like, that sucks. Like, that, you don't want to be collateral damage in that whole thing. There is slated today. There's supposed to be a meeting between the two at the White House.
Got canceled.
So it did.
I think maybe.
That's what his Taiwanese sources.
Yeah, they had like 7 minutes later.
When I heard this morning, okay. Well, so I had heard that they were going to try to meet in a Musk-Trump peace summit today. I don't know. What do you think is driving this? Why do you think? Because he was just in the Oval Office the other day. Like, he was already done with Doge, but the vitriol seems so intense between the two.
Yeah, the bromance here is strong. Yeah. I didn't even think it was that strong. I mean, you have to have some feelings here to behave like these two.
And they say women are too emotional.
Yeah.
But what do you do as a Tesla shareholder? That's most important.
Ooh. I nibbled a little bit on selling some puts and put spreads before volatility expanded. Volatility, huge expansion. And then I pointed out to Tom, he tried to sell it, couldn't get anything off. He wasn't aggressive enough with this pricing. That's the way I looked at it.
Is Musk now more of a liability, though, for Tesla? Like, because of him, like, you're losing your EV credits, you're losing some subsidy, like, you're in crosshair. No, I'm just asking, like, if you're a shareholder and you're seeing what's happening to your ROI.
I'll bring it back home for you. Vinny had his last day of school yesterday. I said, listen, this is not, pump the brakes a little bit. Let's ease into the summer. Last night, he already went camping at somebody's backwoods someplace. Then he wanted to have a late night swim at 10:30 at night at my house. And I'm like, we are not doing this all summer long, knowing full well that we are doing this all summer long. So, these two guys saying what they're saying, I think you got to take it with a grain of salt. But it's not good. I mean, it's not good.
Yeah, the optics are
the same way I thought the rally on a tweet is not good, or the sell-off on a tweet, regardless of Trump and these guys, is not sustainable for traders like us.
Right.
I think this move and this whole fighting thing is not sustainable.
But it's because it's like one, it's the amount of money that Musk literally invested into this administration. And he tweeted, he's like, you would have lost the election if it were not for me, right? And so, like,
I think there's some validation to that.
But that's crazy that one person should have that amount of power and influence over our political system. I'm just saying. Like,
yeah, I mean, there's those people on both sides. There's those.
Yeah, yeah. Isn't that what politicians try to do anyway when they get an endorsement from a mayor, a governor, a senator from a state? Now you have a personality that can give it to you. It's the same way that somebody in Hollywood throws their hat in the ring and says, "I endorsed X player." But
there's a difference between like a celebrity endorsement and $250 million.
Yeah, sure. I'll give you that too. Yeah.
Well, we will see what happens. U.S. payrolls increased 139,000 in May. That was the number. That was more than expected. Unemployment is 4.2%. So.
Goldilocks.
Do with that what you will. Hey, Microsoft stock has hit a fresh record, rallying despite a drop in the broader market. Microsoft shares reached a first record close for the first time since July of 2024. They've been jockeying with NVIDIA as the world's most valuable company by market cap. And looks like Microsoft wants the title.
470 and change, up about $3 or so. So it's a new
high. What are you guys doing in Microsoft?
Ivy rank of 4.
Yeah,
I haven't tried to kind of fade this yet. You have to go something directional. Correlation in Microsoft is 0.84.
Okay.
Very, very high. So if you're bearish on the market, maybe there's something for you to do in Microsoft. If you're bullish on the market, then maybe there's something you can do in Microsoft because it's going to move in tandem with the market.
Yeah.
More than likely.
Just like AVGL and some of these other stocks, it's hard to look at this and get long it at this point. You got very little volatility, that highs. It's a tough one.
Yep.
Since Broadcom did have earnings, sometimes that moves other chip stocks. NVIDIA is preparing to re-enter the Chinese market. They're going to go after, they're giving it another go after the Trump administration blocked sales of the H2O processor there in early April. But NVIDIA is trying to reconfigure some of their chips and get past some of the export controls there. What is NVIDIA doing this morning?
Up small, but the market is up 1% here, or a little bit, half to 1.25%. So NVIDIA, which has another high correlation, 0.87, it only goes to 100, so 0.87 high, 142 rounding up. It looks like it's up about $2.
Do you have an NVIDIA position, or?
I do. I'm neutral / a little bit short at this price.
Okay.
Ivy rank of 5.
Yeah, I mean, I'm leaning a little bit short. I've kind of added to short delta over the last 2 weeks, and I have not been paid. Not been paid.
Did not get all you could eat?
Rude.
Yeah.
Rude.
Well, it's been kind of a grind because I am mostly long delta.
Okay.
So when I add short delta, I try to trade it around that short delta. We haven't really
kind of just getting churned there.
We haven't gone up or down.
Right.
So we've kind of gone nowhere, and volatility hasn't been high. So short premium that you're selling, it's not decaying quickly. You're not getting anything. You need something.
Give me something.
Give me something here. I'm itching.
I pulled this story for me. Amazon is testing humanoid robots for deliveries. Bring it to me. I want a robot to bring me stuff I order on the internet.
Robots, I see, are going to be doing a lot more than just bringing you stuff.
Take the job
so you can get one of those.
Going to be bringing you your dreams.
Yeah, you can get one of those.
I would much rather deal with a robot than a man.
No.
100%.
Come on.
100%. No, I'm just kidding.
Once you teach the robot, he gets it right all the time. What fun is that?
Amazon is.
There's no variety.
Right, there's no variety. Half the fun is teaching.
Amazon is developing software for humanoid robots that could eventually take the jobs of delivery workers. They are working also on completing the construction of a humanoid park, an indoor obstacle course at one of the company's California offices where the robots will be field tested. I love everything about this. I'll take 16 of them. What are you guys doing in Amazon?
Up $4 to $2.12 or so.
See, the street loves it.
Flirting with its highs from May 13th, which were around 514, but off its highs of 240. it had in the beginning of the year. So
Yeah.
mid-ish range, but on the high end.
Love it.
Yes.
Also, I pulled this story just for me. Michaels has acquired the intellectual property and private label of Joann's. As you guys know, I was very sad.
I dated a Joanne in high school. There was no intellectual property
When
there.
Joann's closed, it was so sad for me.
It was the schmattiest place I've ever
Yes.
been.
Where am I going to go to get fabric now? But luckily, I mean, I live in Chicago. There was actually really nice. We have like a garment
What
district.
intellectual properties could it have?
Well, they have their own line. They have their own line of fabrics.
A yard is 3 feet?
No, but they have their own line of fabrics, and they have like their own line of like crafts and supplies. So like some stuff. But again, right, I don't know like exactly what the value of that is. But Michael is also launching a dedicated landing page for Joann customers, featuring a curated assortment of products. Joann filed Chapter 11 bankruptcy in January of 2024.
How much did it cost them to get the?
Oh, they gave it
the
away.
It's on the dollar.
Yeah,
They had to pay for the server.
Yeah.
It doesn't say.
The website.
That's correct. That's
It
correct.
does not say.
Breaking news, Sadnov still has it. He bought bonds 10 ticks higher than they are right now. So
okay.
1231,
Oh.
11221.
Nice.
You're following along with Tom. You can do that now.
That's great. Hey, the Walt Disney Company said yesterday that its domestic theme parks generate $67 billion in combined annual economic impact. That's a bonkers number. How much are you charging for those fast passes, Disney?
No, a lot.
Are you
I
surprised
don't know
by
where
this
America
number?
gets the money to go to Disney anymore.
It's like for a family of four. Like I don't understand.
$500. It's at least.
You would know he's gone like 12 times.
No, I've seen like people TikToks. They're like, "Hey, I have a family of four. This is how much it cost us to go to," and they break it all down. And I'm just
Crazy.
like, I was like,
Crazy.
you know what I could do with that money?
It's crazy. It's crazy.
But you have to, like, you did it. You made the pilgrimage. You
Yeah.
taking Vinny. Wait, did you get to go to
got a
Disney when you were young?
Yeah.
Yeah. Okay.
Yeah.
Just making
Don't let him.
Yeah.
Making sure it's
listen,
even.
Yeah.
Just
He
making sure
paints a
it's
very bleak picture.
No, I just said I went to Disney.
Yeah.
We went once, and
time.
then my parents got divorced, and then we never went again.
even. In the cradle,
Yeah,
silver spoon.
Yeah.
Little boy blue and
Yeah, it was
man
fun.
on the moon.
When you're coming home, son, I don't know when. We'll get together, man. Son.
What are you guys doing in Disney? House of the Mouse.
I put on a trade for option trades today. It was Tuesday. I just did on Tuesday. Short delta trade, caught the down move. There was really, Ivy rank was single digits, now 13. I think it was 1 when I did it. Made a nice buck and a half on the trade.
Good for you.
Off. Disney 112.68. It's up, well, on the bid, it's hard to tell. It's up maybe 30 cents, right?
Made enough to maybe afford a Dole Whip.
Maybe. Not at Disney. I'd have to buy it somewhere else.
Hey, Lime has renewed its vows with Uber ahead of the busy summer season. The micro-mobility company is renewing its deal with Uber that allows the ride-hail company to feature its bike and scooters in Uber's app. I ride a motorcycle, but I will not ride one of these scooters.
Why?
They scare me.
Yeah.
Because people, they don't wear helmets. They ride on the sidewalk or they ride in the street. You're supposed to like ride in the street. They go really fast. They don't have like gear on. Like you can really scratch up.
I agree with you.
Your
I
skin.
agree.
Like
They're tough.
They stay. They
You hit a
freak me
bump
out.
on these, a small wheel.
Right? Yeah.
But they're a hell of a lot of fun to ride. You're going to
They
DC.
are. DC.
They have.
I feel like they're not as popular here.
They're not as popular here, but in DC,
Yeah,
they're
It's
everywhere.
everywhere.
Yeah.
On every corner, you will ride them and you will have fun. Your brother really likes to ride them.
Do you guys have an Uber position?
I do not, but Uber caught a bid yesterday while Tesla was going a little bit lower.
Okay.
Uber 85. It's only up around 50 cents today, but it was one of the stocks that was up yesterday. So Uber's been relatively strong.
I got a little long delta.
Do you have a little long delta in there?
Yeah, I actually
the
put on
market's lower, and you have long delta in some stuff, and that goes higher. I mean, that's Nirvana. I mean,
It was my trade idea yesterday with 3 trade ideas.
I know. I remember.
Me, Mike, and Katie.
Yeah.
On Thursdays.
Correlation there is 0.83, so it's just like Microsoft or anything else like that.
Yeah.
It's a big high.
Hey, in the worst timing ever, literally, as the internet could not take their eyes off of the meltdown between Musk and Trump, Aaron Rodgers tried to enter the chat, and he's like, hey guys, I signed with the Steelers. Does anybody care? And we're like, no, we don't. Something else is going on right now. But Aaron Rodgers and Mike Tomlin are taking their bromance to the next level. The 4-time NFL MVP ended months of will he or won't he speculation by informing Tomlin and the Pittsburgh Steelers that he plans to join the team for the 2025 season. I did see a tweet. Someone was like, Aaron Rodgers announces he signed with the Steelers just in time to skip minicamp. What do you think of this move? Is he washed, or he's got stuff left in the tank? I don't know.
I mean, I don't. I think they'll have another, 9-8 season type thing, and maybe get a wild card. And
didn't Justin Fields go to the Steelers? Like, wasn't he doing good?
No, Justin Fields is on the Jets.
Oh,
Yeah.
Oh, okay.
He's going to be starting. He'll
Gotcha.
be.
Yeah, they didn't have not good tweets about him either. They were kind of.
Yeah, he was.
Wasn't true.
He was a backup to Russell Wilson.
Yeah.
And, I don't know. Aaron Rodgers, I can't get behind him because of him.
Because he owns us.
He's tortured me for
Right, he owns us.
my
Right,
entire life.
I'm the same.
So, yeah.
Hey, in other news, billionaire private equity investor Justin Ishiba is in line to be the next owner of the Chicago White Sox. Jerry Reinsdorf finally is going to let us pry the Sox from his cold, dead hands. Reinsdorf, who's 89, and Ishiba, I'm sorry if I'm mispronouncing that, who's 47, have entered a long-term agreement that could see Ishiba taking over the team as soon as 2029 or as late as 2034. Put us out of our misery.
2034.
Jerry. I know, right? I was like, Jerry, are you going to still be alive? He's 89.
Yeah.
I was like,
he's that old?
Jerry Reinsdorf?
Yeah.
Yeah.
Reinsdorf's so old.
Yeah.
Yeah.
So
he's that old, but
we will see what happens.
Private equity guy. Maybe he'll do what they did for the Cubs, kind of turn it around down there on the south side of Chicago, get it regentrified a little bit, work it up. I mean, I don't think it could be bad for the city.
We'll see what happens.
Yeah.
Hey, finally today, because it's Friday, it's a little segment, you know it, you love it. I like to call it Will Tom Eat It?
Ooh.
I scour the internet for food for fat traders, and here the first full weekend of the summer, like Memorial Day, unofficial start of the summer is full first weekend of the summer, and I like a blending of ideas. How do you guys feel about elote wings?
Oh, I will tell you the elote dipper chips at Trader Joe's.
Yes, fire.
You can eat the entire bag.
Don't do
with
that.
anything.
Tom, Trader Joe's, boy, one finger to Tom.
I'm sorry.
Well,
They
here,
are amazing.
watch this video. Maybe you guys could throw some on the grill this weekend.
Okay.
Let's go.
All right, so the other day I combined two of my favorite things, Mexican street corn and chicken wings. You guys got to trust me. Meet me in the kitchen. Let's make it happen. Starting the party off with a simple marinade. We just need some hot sauce and buttermilk. Let that sit in the fridge for an hour. For the sauce, we need some mayo, sour cream, the juice of 1 lime. Hopefully your lime is as juicy as mine. Now we're going to add a little pinch of white sugar, plus some tahini and AP, 1 teaspoon of garlic paste, some fresh cilantro, and about a half cup of cotija cheese. Give that a mix to combine and set that aside until we need it later. We're using my seasoned flour for this recipe. You can get yours at MrMakeItHappen.com. Take those wings out of the buttermilk and into the seasoned flour. From the seasoned flour into some 350-degree oil until they're golden brown and beautiful like so. Once the wings are fried to perfection, we're going to roll them around in that sauce because why the hell not? We're here for a good time, not a long time. Plate this up with some extra cotija cheese, tahini, and some cilantro. Brace yourself for a trademark money shot. Say it with me, guys. Looking good. Everything you need is in the caption. Now it's your turn to make it happen. All right, so the other...
I would eat. I mean, come on.
I'm not a sour cream guy.
Really? How do you live in the Midwest and not eat
I wasn't born here.
Oh, that's
true. Born here. Yeah, I'm not a sour cream guy. I like it. I like where he's going. I would try. I like a dry wing rather than a wet.
Then I don't know. I just think, I was like, that looks pretty... It looks pretty good.
Yeah, I'm not hating on it.
Yeah.
If Nick makes them this weekend, I would come over with the barbecue.
You need to add a little more hot. It's a little spicy.
You could jazz it up. Jazz it up.
I need to have a little hot sauce.
No, this is just an idea. It's a nice idea, though.
All right.
I got it.
Hey, look, you guys, I got you almost all the way through your first hour. You're welcome.
Amazing.
But more bat and bat. What's coming up next?
We're going to take a quick 90-second break, and then we'll get to Confirm and Send, followed by Jamal with This Week in Stocks. We'll be back in 90 seconds. Tasty Live. Good job, Vanette. Thank you.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
I love to take risks. I love the instant pain, the instant gain of trading. I would describe my trading style as a calculated risk taker. I like to play towards volatility, which is something that you can quantify high and low points of. Well, my favorite strategy currently is the diagonal spread. I like the idea of having defined risk, but while also having a little bit of positive decay that works in your favor if you're not directionally correct. But the best part about it is the positive gamma that you get from it. I really like that the position can grow and get bigger as you're more correct on that position. So I think that the variable of trading on a day-to-day, hour-to-hour, minute-to-minute basis is really powerful and really fun to have access to.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today. Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Nicky, we are back, son. And you know what that means? Time for a little bit more Tasty Live with Confirm and Send, where we go to viewer questions and we do our best to answer them as best we can. But first, let's take a look at the market. Even the S&Ps were up around 25 handles when I woke up this morning. They were actually, I know they got down to 59.30, but they were green pretty much for most of the night that I saw, up around 24, 20 to 25. Up 48 after the unemployment number. NASDAQ up 188. Your leader in the clubhouse, actually, Russell, up almost 1.25%. That's $27. And the Dow up 300 in line with everything else. Volatility in by 82 cents, just off of its lows of 1883, 1895. I would assume that volatility on the opening here will be just about, I don't expect it to go much lower.
No, I don't either. Okay. I think it's going to stay.
Yeah, do you really? Yeah, going into the weekend, I just think volatility holds up here. Might even actually climb a little bit. Like the lows in volatility, hard to say at 754 in the day. I don't know what's going to go on. I mean, S&P is catching another bit of 50 handles. Volatility will go lower, but relatively speaking, I think this is about as low as it's going to go for.
They cannot get through the 6,000 handle.
On the even S&Ps, they got up to 97
that's been
again.
A brick wall.
Yep, it has. It got a little bit over it, 6,000 a quarter or something like that.
The other day.
But
for like a minute.
Yeah, a minute yesterday too. Yeah, you are 100% correct. Big move yesterday off of those highs. Anyway, bonds down 28, 112.18, back into the middle of its most recent range from 110 to about 114 and change, just at the higher end of that move. Bitcoin up 2,200 bucks or so, trading 104.5. I'll round up on the futures. You can see here a decent sized range of around $3,000. You talked about it getting back to 100,000 on some of the spot cash there yesterday. Oil up 25 cents. IV rank of 35 is contracting. I did do a trade, a double ratio spread yesterday for my option trades today, every Tuesday and Thursday. If you've been following along with that, why a double ratio spread? I got a lot of questions on it. Why a double ratio spread versus an iron condor versus a strangle? Well, you know what? Ivy rank is kind of mid-range. I went for something that was, gave me a little bit of oomph with the embedded short strangle, and yet gave me a little bit of room on both sides with a long debit spread. It just means a little bit confused and conflicted on what I really wanted to do here. So you get like an omnidirectional neutral trade in there with a double ratio spread. Oil up $2.70. Gold up $2.70, not really moving. Silver moving big, up 60 cents. That's a 1 5/8% move. You could see here over the last week or so, going from 33 to 36.5. That's a $3,500 move in silver. Euro down small, but near the high end of its range. Tesla, I think we have to mention it, son, just because it was the big mover, down 50, 60 bucks on its lows.
I think it's up like 10.
Yeah, up $8 to $10, actually off of its highs, a little bit higher.
I think it got to like 308 in the overnight session, around there.
Yep. So I don't think volatility's out of the woods yet, and I don't think the stock's out of the woods yet either, though I did nibble a little bit yesterday, about $14 lower than where it is now. And then it went another $14 lower than that, so not like I bottom picked it at all. So anyway, that's all I got.
Yep.
Son,
cool.
Confirm and send. Let's get to it.
Beautiful. Let's do it.
Where we go to your viewer questions. Yep.
June 6th.
Confirmed.
It is.
I didn't do my coffee on the break.
Yeah. Did it. I got my new. I'm full.
Did you?
I'm ready to rock.
Okay.
Yep.
I got to get some coffee. Go ahead. You want to read the first one?
Sure. I have a silver position with around 80 short beta weighted deltas. However,
800.
800. I'm sorry. A little dyslexic here this morning. Yep. However, the position was down on Thursday. Why would something with short beta weighted deltas be down on the day the market was down?
Market was down on Thursday. Silver was, just because the market was down, silver wasn't down. Silver was up big.
Silver was up.
So if he has 800 short beta weighted deltas, silver has a correlation of
0.4. SLV, if you look at SLV, 0.4.
Yeah, not strong, not a strong correlation, but silver was up, and you got short beta weighted deltas. It's supposed to work that way.
Yeah,
it goes against you when the market goes higher.
Yeah,
silver went higher.
Correlations are not always. They don't play out every single
over time.
Yeah.
And
so
0.80 is one thing. It's a lot more. Well, obviously twice as much as 0.40. So 0.40 is small. So you had short delta, the market went higher.
Well, market went lower. You would expect to get paid. It didn't. You didn't get paid on it because the actual product you're trading,
silver went higher,
went the other way. So the correlation didn't play out. The correlation is 0.4, which isn't that strong of a correlation. If it was a higher correlation, you'd be a little bit more.
Remember,
surprised.
your beta weighted delta is to SPY.
Yeah.
Not to silver.
Yes.
Next question, please. I'm struggling on position sizing. Do you always use the buying power as a percentage of net lick, or do you just use a set number of contracts?
I would.
Question for you.
Yeah, I would say I'm looking at buying power. I mean, the number of contracts, one contract in Apple isn't the same as one contract in Costco. So you have to use buying power across the board. You can't, that's why we show everything as one contract on the follow page, because it doesn't, you can't size, you have to size them the same, and you have to keep your own risk tolerance too. So I think looking at buying power is the more reasonable way to do this.
I do too, because you can, we didn't even mention spreads and stuff like that. Like you'll come on here on Johnny Trades on Wednesday, and you'll get synthetic delta of, 60 to 90 synthetic delta for a couple of $100 in buying power in a smaller account. You do that number of contracts meant to a strangle that might use $3,000-$4,000, and you'll be doing 30s and 40 lots in an account that should be trading 1 lots at best. So you can't really look at just net what the buying power is when you have vertical spreads versus naked options. But for me, it's definitely percentage of net lick on buying power, and then on vertical spreads, whatever my 1 lot, if I'm doing a 1 lot strangle, then I'm probably doing a 1 or 2 lot, 3 lot at the most vertical spread, that kind of thing. That's what I'd be looking at. Probably closer to a 1 lot. Next question, please.
Have you heard of of a trade called the dispersion trade, where you sell or buy index premium and buy or sell premium in individual equities? Is this a strategy that makes sense?
It is definitely a strategy that makes sense on paper, and Tom hates when I say this, so I can say it because he's not here, but in practical application, especially as a retail investor, and I will even tell you as a market maker in the 80s, 90s, and early 2000s, it was impossible to do. First of all, it's so capital intensive for a retail investor, you just cannot compete. You're playing in a field that you're not buying on the bid and selling on the offer. You're hitting bids and taking offers. And that is the small amount of edge. That penny or 2 or 3 is the small amount of edge you're trying to get with this dispersion trade. And what a dispersion trade is let's say volatility in the indexes is 18, and individual stocks that have a great correlation to the market
30,
40, 50. So you're selling 30, 40, 50 vol, and you're buying 18 vol, teen vol, and you're hoping that this stays here, or that you bought and this comes in, or this goes higher and this stays in, or they both converge. It's an impossible, it's a great discussion for the classroom. It's a 0 on the trade meter as long as I'm.
But you're synthetically doing that when you trade somewhat delta neutral.
Yes.
I mean, that is what delta neutral trading is dispersion trading.
Sure.
And when you're short, when you're long Apple and short Tesla and
they both
long
have a correlation
Nvidia
that's in the 80s.
and you've got some static delta in the E-minis, like that is a dispersion trade in itself. It gets more complicated in what you're referring to, but synthetically, that's what we do here every day.
No,
you're playing for chop for the most part. Some things go up, some things go down. That's how we trade.
You're 100% correct.
Like most people have no dispersion in their trading because they're just long,
right?
Or they're just short, and it's all static delta. Our deltas are
just in bonds.
Or just
where they're 60-40.
60-40 with gold and Bitcoin. It's all, there's no dispersion trade there. If you're trading options, you are by default trading some sort of dispersion.
Great. Yep. Good one. Next one, please. Is this for me to read?
Yes.
I've watched most of your videos on this, but when a short call is so deep in the money that the market would need a 10% sell-off to break even, would you roll it out and give it more time, or pay the debit and roll it up higher towards the current stock spot price?
A lot of these things are tough to really quantify because a 10% sell-off, it's not that shocking of a move. I mean, I know that we're used to things going up and to the right, so like you should be okay with having a 10% move. But In general, I mean, rolling up and out on a call it allows you to continue, especially if you're trading like a cover call or something like that. Allows you to be a little bit more comfortable with the trade. I mean, you never want to play for a tail event. At some point, you're going to buy in that intrinsic value. So, it's the adjustments are the same. Like it's one or the other. You want to be a little bit more directional and participate in that upside move, then roll out and up. If you want to lean a little bit more short, roll to the same strike. It's a tough,
It's definitely a tough decision here. So
there's no easy answer.
Yeah, there's no easy answer. And let me backtrack just a moment here. Let's say you sold an out of the money call with 30 delta because that's the amount of delta you wanted to have on something that you were short. And that 30 delta gets to 100. You probably, and not because it's gotten to 100, it's gone against you. That's not my point. If you're staying mechanical like we do, when that 30 delta gets to 45 delta or 50 delta, we'd probably be looking to reduce delta some way by selling the other side. It wouldn't cost you any money and getting back to that 30 deltas that you had. I'm not trying to change it to make it a trade that would be bullish so it can go in the direction you want it to. No, we'd be looking to reduce that delta. Now, it wouldn't help you in your P&L. It would help you slightly in your P&L, but it's not going to save you from the trade. But that's what we look to do. So if you're already in this situation, I'm saying you love the delta and you wanted the delta, and I would probably, and like Nick, would probably roll to the back month and probably roll a strike 2 or 3 up a little bit just to get a little bit of premium there for a smaller debit or maybe a smaller credit than the same strike, but it's a judgment call, as you said. Next question, please.
Cool. I found an interesting strangle in FSLR, which has been volatile. It certainly has. Normally, I sell around the 16 delta on each side, but for this one, I was getting good ROI on buying power, even if I go to the 7 delta on each side. Do you think it's a good idea to do this or to go this far or stick to the 16 deltas for volatile stocks like these?
I mean, I think you answered your own question here. I mean, you like the return on capital. Return on capital is a good thing to look at and know. I don't know if it's the know-all reason why I would do it, but you're able to get further out in a stock like FSLR because it has a further expected move than ABC stock. So it's not for free. So there is risk there. I like what you did. Anytime you can do something that lets you be a little bit more confident in the trade that you're doing, I think you put yourself in a better position to win, even if the probability of success is exactly the same. You have the confidence. Confidence breeds success. I think you did the right thing here. And I think you answered your own question.
Yeah. Next question.
Ooh, last one already. So good. When a 0-day closes at 3 times the expected move the day before, okay. Would you think you have better odds the next day of a profitable trade due to mean reversion? They'd be talking about mean reversion of price.
I don't know if you can say.
But we could quantify it to the downside. Because if you move 3 times to the downside, we've done nothing but go higher after that. Now, I mean, it doesn't mean the very next day, but we've had V-bottoms throughout the last couple of years of trading. So, if you look back, you could say, yeah, maybe. I'll let you answer.
Yeah, but on a 1-day time frame, I don't know if you can say mean reversion. I mean,
I don't play that game either. Now what if you look at it and let's say the IV rank in SPY or SPX or whatever they're using here was 20 something, and now all of a sudden it's 30 something because you get that down move. Volatility is gonna.
If it's down, you're talking about 3 times the expected move.
Yeah, to the downside. I'm saying that's my example. And volatility expands. You might get a little bit more aggressive with your delta.
Yeah, with long.
Yeah, play a little bit of long delta to it. Totally. Sure. Volatility's higher. You're getting paid. If it goes 3 times to the upside, volatility's probably going to contract. It's a different story on option pricing. It's going to be they're going to be a lot cheaper. It might be harder to do.
Yeah.
I mean, I think you have to look at volatility here. I don't see this as a viable trading strategy.
I would think that the odds of this reversion is the same as any other day. I would being inside the expected move is what I would be looking at. I think you're going to have
expected move is going to be
wider. So it's probably going to come inside that. That's
Very good, son.
Thanks.
Hey, listen, let's take a quick 90-second break. We'll come back. We've got Jamal with This Week in Stocks. We'll be back in 90 seconds. It's Tasty Live, taking a look back.
Beautiful.
In this week.
Got trader's block? We've got the cure. Get data-driven.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Hi, I'm Tony Batista, and I've been trading for more than 30 years. I've picked up quite a few shortcuts along the way. I call them trade hacks. Traders for all eternity have been looking for the reason to make a trade. Whether they were looking at charts or they were looking at fundamentals, they just had to figure out what direction the trade had to be. With the research that we provide now, we kind of take the direction out, because it's just a 50-50 shot, and say, what's the best strategy that we can apply? By the nature of the strategies I pick, I'm going to have a high probability of success. And I think my expertise comes from managing those trades, when to take them off, how to maximize the profit on them. I think that's what sets me apart from the novice trader. People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Nicky, we are back, son, and you know what that means. Time for Jamal and This Week in Stocks. Jamal, welcome to the show.
Fellas, how you doing this morning? How's it going?
Doing great. I just have one question for you. You named this segment Metals Market Mania. Is that because the silver-gold ratio spread finally came in for Sosnoff, and you thought Tom was going to be sitting in that seat, and you and him can have a laugh fest together and bond and stuff like that? Is that what you thought?
I don't know if he's really benefiting all that much, because I think the gold side is a little bit bigger. I think it's a little bit bigger than the silver.
Well, he sold it down at probably 95 and 105 and 97 and 98. So, I mean, he made a couple of bucks in it, but it was a 3-month trade.
That was painful.
Very painful.
I forgot that he was trading that spread.
Oh, did
like
you?
that.
Oh,
Actually
too
was
funny. Yeah.
pretty
Well, he's been
wow.
gloating
Yeah.
the last 24 hours because the last 48 because it's been working.
Yes.
Yeah.
Yeah, well, of course, that's what he does is gloat, huh? I mean,
Always.
speaking of, people in Indiana seem to be gloating this morning. A lot of people are very excited about the other night's result. How about it?
Incredible game. I'm not a big NBA guy, and the playoffs have been awesome. What the
Playoffs have been
Pacers
awesome.
are
Yeah,
a lovable team.
Yep.
They really are.
Yeah, it would seem so, right? Yeah, really.
Sosnoff took the Pacers and the odds against
For the
Scott and I.
Scott?
for the series.
The series.
Oh wow.
And I took Oklahoma and Scott took Oklahoma. Yep.
Yeah, I mean, it was doable, right? I said it was like what the second largest spread for the finals. I think is what it was. I mean, that had to become kind of interesting.
Yeah.
Yeah.
I think the next game is at 11 too. 11 points.
Yeah.
On the spread.
Spread. Yeah. Oh, yeah.
It's a lot. I mean,
that's huge.
It's a lot for a championship game. Oh.
Yeah. When everything's online, I would say so. Should be fun.
Yeah.
Let's pull up some slides and talk about the week that we've had so far.
Cool.
Part of the metals mania market, definitely, obviously, silver's part of it. But what did we start the week with? Let's move to the first slide. Remember, we started the week with, you know what? Some of these headlines you almost forget as the week ends. But we started the week with steel and aluminum companies surging on this threat of increasing those levies from 25% to 50%. Like, that's how we started the week, right? We ended the week, obviously, with just the non-farm payroll that came out. Markets seem to like it so far. Showed the slight add in jobs while the unemployment rate stayed the same at 4.2%. Most of the job stuff I would say that we got this week did not show any effect from any tariff or anything that we've got so far. I mean, the jobs report seems to be fine, whether it was ADP, whether it was JOLTS earlier in the week or non-farm payroll seem to be good. Interest rates. So obviously, so far, one of the things that we're trying to figure out is if the Fed is ever going to lower interest rates this year. Bank of Canada did not lower their interest rates this week, and I think they just came out with a jobs report that showed their unemployment rate ticked up to 7%. So you can imagine why. ECB, they had rate decision as well, and they dropped 25 basis points to 2%. So they seem to be comfortable cutting in this environment, even though, again, you're in the midst, theoretically, in the midst of a trade war. Earlier, what was it, a week and change ago, it was discussed that maybe there were going to be 50% tariffs against the EU. So they don't seem to be worried about it. They're like, whatever, we're still cutting rates. I don't care what you say. They seem to, they're not making any moves. Meta, they signed a deal with Constellation Energy this week, supposedly because they need more power for AI, right? So you're seeing that. That's one of the higher percentage names on the year, Constellation Energy, I think, along with NRG. So some of these utility names, I mean, we've never really seen utilities move like this, and it seems like the business might be changing when you start talking about nuclear power. So volatility is pretty chill. Not exactly sure where VIX or VVIX currently are, but they're around that range of their long-term average.
17.13 right now on the VIX. Volatility futures at 1892. Down 50 or 85 ticks.
There's a cost to carry in there too. Volatility futures.
Yeah,
That's
yeah.
why.
Yeah.
It's higher. It's not pointing to anything directional basis. But you're right. 17.13 right now is pretty,
it's the low
Yeah.
of the week.
Yeah,
I think maybe
low-
we
low of
got
the week.
there.
Yeah, remember it was in the 15 handle back in February or so. But yes.
Yeah.
Surprising with everything that's going on. I don't know about. I'll ask Jamal since he's on the show. With everything going on, I mean, I thought volatility would contract a little bit here, but I didn't think we were getting under the 20 handle. That's $1,000 from where we are right now in volatility. What do you think, Jamal?
Yeah, no, I would agree. I didn't think we would be quite under 20 again. I thought we were going to hang around maybe like 19 to 20, somewhere in there. So the fact that we've dropped down to 17 again, when I did this like earlier the other morning, I mean, we were not at 17. And so it's just kind of showing you, I guess, you know, the ebb and flow. Again, I fully expect us to be back around 19 to 20 probably by next week, based on whatever different reason that might pop up.
Beautiful.
Let's move to the first slide. Take a little inventory on the month. I said June. I actually mean May on this, but Tech, of course, SPY was 5.5%, so that's kind of your middle of the road marker there. Tech was up 8.8% in May. Consumer discretionary, of course, anytime the market's doing well, consumer discretionary is going to be up there, 7.14%. Industrial, 7%. Communication, which includes Amazon, up 5.5%. Financials from there, financials, utilities, materials, all around the 3% range. Energy, we haven't seen a whole lot from oil, of course, recently, but still positive, 2.2%. A lot of these energy names, consumer staples, and then healthcare, with UNH, of course, leading the way, was your biggest loser on the month of May.
Yeah, UNH still can't really get itself going anywhere. Trading 297. It's up $1 today, but it's at the low end of its range.
Vol has come in there so much.
So much. It was a huge
so much.
Dude, the other morning, it dropped like a solid 20 ticks. I think it was, I can't remember if it was Monday or Tuesday morning. It dropped like 20 ticks.
Yep.
Yeah.
Out of the blue.
And that's a sector in a stock that like typically doesn't have that. I mean, it's more normalized in like the 30-40 handle. I mean, even 43% monthly implied volatility now is probably on the higher end of its range prior to the craziness.
Yeah, I don't think you ever see volatility in UNH.
Like it's a dividend stock. Like it's not one that you typically look to, sell premium in. It's not really one of the movers in the market. So
I mean,
crazy.
dare I say it has become a lot like Boeing was in like 2019, 2020, 2021, right? Where it just seemed like thing after thing keeps happening, and on a certain set of circumstances that unfortunately keep happening to UNH. So hopefully they can right the ship at some point. But you're right, it's been a great fall selling vehicle. I've always kind of liked the idea of trying to sell premium in bigger names like that. I just feel like you have a lot more strikes to play with. I usually, obviously, because it's so big, you're probably, risk defined. But I've always kind of liked that because it's just the percent of the time that those you get touched, or even the wings get touched, or anything doesn't happen too often sometimes. But when it's like this and it's moving around, it's a little hard to do. So I did initially on the big fear drop. When it dropped below like 300, I sold a put that worked out, and I haven't touched it since.
Yeah, I'm with you.
So you can do.
Let's move to the next slide.
Yeah.
Here's the chart, man. So blue, of course, is gold, but look at silver. Silver, all of a sudden, to the highest level in 13 years. It's been a nice. I'm gonna play a little vecchio for you guys here. It's been a nice, long 13-year base. And we'll see what happens after this, man. But again, this is reminiscent of some of the times we saw in 2011 when you're seeing silver move the way it's moving right now. What do you guys think?
Yeah.
Nothing. You're not interested.
Something's got to give here.
Yeah.
Something's got to give. Yeah, but which way?
I don't know. That's why you do the pairs.
That's why you do the pairs, and you don't have to.
That's why you do the pairs. You don't have to make that decision.
Yeah. Yeah, you just got to take the pain for a little bit, and then you'll get it.
It all comes down to size, right?
Yeah.
Keep the size right.
Yeah. It all comes down to size. Yeah. Copper, of course, is within this too. Haven't looked at palladium or platinum, but I wouldn't be surprised if they're also making an inroads to the upside too. So metals have been going kind of crazy recently.
Yeah, copper had a nice little bounce back from the April sell off when everything was going nuts. Basically back to where it was trading at, just under 5.
Yep. Let's move to the next slide. So here's some of your year-to-date performances in currencies. Obviously, dollar needs no introduction. Dollar's down almost 8% on the year. Look at the euro. Like I said, flying high. They're not worried about any tariffs. What's thinking tariffs? They ain't worried about anything right now. British pound right behind it. Japanese yen's even positive. I mean, something's crazy when the Japanese yen is positive. Mexican pesos up, Canadian dollars toward the lower end, and Australian dollar as well. But then, obviously the interesting thing about this is it just gives you a lot of sort of insight to the health of their currencies and what's going on with these countries, right? Probably a good time to mention that we have tastyfx on the platform now. So people can obviously play these off of anything you do with any of your trading pairs, your currency pairs. But yeah, this is what's going on with currencies.
You've been dabbling in there.
I'm long the New Zealand dollar.
You're going,
you say it like you got a new toy or something like that.
Yeah, it's the first time I've some of these pairs, are not available any other way. I mean, they don't have futures for them. The sizing is amazing. You can get super, super small, and then you can get into, things that you don't normally think about or look at. I had somebody in our YouTube chat, tell me to look at New Zealand dollar. Is at the lows? Maybe there's a little move higher. It hasn't really moved, but yeah, it's fun to trade them. But I'm kind of short every currency against the U.S. dollar right now. Okay. Besides that, like I have some short Japanese yen, which I just took off here. I'm short the euro a little bit.
You're going against Sosnoff on this. Sosnoff likes the dollar go lower. So
really,
yeah.
Oh wow.
Really?
Yeah. No, I'm against.
Well, since you bring it up, for what reasoning does he like?
Yeah, that makes me feel
in
great.
The principal's office this afternoon.
Yeah.
Parents will have to come in to get you.
That's okay. So it makes a market.
Yeah.
It's what makes a market for sure.
That's right.
10 and 2s. I hadn't looked at this in a while, but remember we had that 14-month period where essentially this was in the red and the negative, and it's bounced out in September, and it's been on the run recently as 2 years start to fold a little bit, and 10s have been sort of elevated, right? We saw it above 4.5%, but this is kind of normalized out. So around 50 to 60 basis points, this spread has been. I don't know how many people are trading this spread. I'm not trading it currently. You guys do anything?
No, I haven't, but Tom plays it for sure.
I took so much pain for that 14-month period of being trading the 210 spread that I stopped thinking about it, because you'd see all the headlines. It only stays inverted for a month, 30 days, 60 days, whatever, and then we're like 6 months in. And I'm like, you know what? I'm done with this stupid trade.
I'm the world's worst commodity trader. So, stay away from it too.
So,
you have my genes.
Yeah, I don't even think about it anymore.
Yeah, I think I don't think I ever actually traded the spread per se, but yeah, I mean I did. I wasn't encouraged by what was going on, and so I was scared of that spread, and for good reason. I mean, I figured it could last for a while. Never thinking it would last over a year and change, but yeah, that's a tough one.
Well, they have the 10 and 2 year yield products, the CME futures products, which I would just continuously roll and roll and roll, and it never went your way. The whole, for 6-8 months, and I was like, okay, I'm done with this. Can't do it anymore.
Yeah, it's a tough thing, but that's where it is now. Let's move to the last slide. Tesla supposed to be targeting June 12th for the date of the release of the robotaxi in Austin. So that's something on the horizon. Sports betting stocks this week were in the news. DraftKings and Flutter fell on this new Illinois tax equity into their earnings. HIMS continues to be in the news as well. They purchased this privately held telehealth company in European telehealth company. There was a new IPO yesterday, Circle Internet Group. I don't even really know what they do, but apparently they're a holder of a large amount of stable coins. It seems like something right up Nikki's alley. I bet Nikki knows exactly all about it. Big IPO yesterday. The stock was all over the place, too.
Up another $12 this morning, too.
Is it? Is it above 100 again?
It's at 94 and change. Got to 98. You got to be careful. I mean, there's nothing to do. Unless you're buying it and scalping out of it, that's the only way to trade these. Same thing with CoreWeave. You got to just be careful.
Yeah, don't trade the call options there. Or there's like 150 to 180% borrow rate. In the money calls will be exercised.
And call spreads will look like they're, free money. You look at them and you're like,
none.
Yeah, they are not.
Get hit with a borrow rate.
Yeah.
Inflation reports next week, CPI on Wednesday, PPI on Thursday, and then research June 4th. Tasty Bites, 3 key elements for small account trading. Check it out.
Beautiful.
Good job, my friend. I'm going to let you go because we got about a minute and a half before the market opens. We got to catch that opening bell. We'll be back in 90 seconds with Tasty Live. Thanks, Jamal.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Nicky, we are back, son, and we got less than a minute here before the market opens. Even the S&P's finally breaking through that 6,000 number. Volatility, 1895, has not gone down as the market has caught, a 15, 20 handle pop in the E-mini S&P. So
high is in.
High is in the E-mini S&Ps, you're saying? Yeah, it could be 6,007. We've had a hard time getting over the 6,000 number. I don't think we can hang out here all freaking day.
Maybe we've been doing that every day this week.
Yeah.
In a nothing burger.
Yeah, I think if volatility stays here, 1890, I don't think it's going any lower, like we said a half an hour or 45 minutes ago. I don't think it's going any lower than that, even with the market catching a little bit of a bid. Now, again, if it catches a 50-handle bid, volatility will probably contract. And I'll have egg on my face, and you will too, probably.
Yeah, it's okay.
If it contracts, it'll be well over 6,000. But maybe we hang out here. You know what I mean?
Turn the machines on. Let's go.
Yeah, let's
get to it.
Machines back on. We're going to open here, or I think we just did open. You have you have low D.
I do have low D.
Yeah. So I can do it for you.
Turned it down. Thank you.
You're
sorry.
so welcome.
I'm sorry. I know that Tom. I turn it off because
I have no volume on my computer.
You're not allowed to.
I go to places that I'm not supposed to go to. And stuff like that.
That's why I got YouTube stuff up. I don't want the.
Yeah. Tom does nothing over there but look good.
Okay, but you get it on the. We got everybody.
Let's see what's going on in the market. E-mini S&Ps over 6,000, 6,003 to 56 and change. Nasdaq up 212. Russell up 29. That's the leader in the clubhouse on a percentage basis, 1 1/3 versus just about 1% for everything else. Dow up 380 and change. Volatility in by 86 cents, 1891. Bonds have been soft all morning. Yep. They're down 29 ticks. Notes are down 20. Bitcoin up 2,200 and change to 104.5. Basically taking back just about everything from yesterday's move between the tweets and aggravation of everything that happened yesterday. We'll look at the equities in just a moment. Oil up 53 cents, back near its high end of its range. IV rank of 32 coming in a little bit there. Gold down $3 and silver up 48 cents. Good move there between the gold silver ratio. If you're looking at short gold, long silver, the way Tom had it, he's really just short gold right now. It doesn't have too big of a silver position. Nat gas up 0.03, been going sideways, although catching a little bit of a bid here. Euro down small, which means the dollar is higher. Euro down, dollar higher, helping Nick, hurting Tom. But Tom's not here, so screw him.
Yeah.
Let's see what's going to the downside. Lulu down 56 after opening or trading down to 270 on earnings. It's down 56. Pre-market was down closer to 70, 75. I don't know if that means it's catching a bid. I think the expected move was closer to $45, so it's just outside the expected move by about $10. AVGO down 11. It was down 5 pre-market, down 11 inside the expected move. Let me see what DocuSign is doing also, because that heard earnings. DocuSign down 15. That's going to be outside the expected move. It's down around 17 or 18 earlier pre-market. Let's see what else. Volatility products all down as you would expect. Baba's your next one. Baidu down 80 and 70 cents, respectively. On the upside, let's see what's going on there. Looks like you've got
all
Meta.
the big boys.
Yeah,
Meta, Apple. I mean, Apple's up almost 2.5% up, $5. You got Amazon up 3 and change. I mean, even Tesla.
Yes.
12.
Tesla up around $12 or so to 297. Coin up $8. Costco up $3.
Yeah.
All the big boys. UNH. I'm not.
Buy them.
It's okay. Even the S&P's 606. So far, so good. What do you think here, son? Kind of the whole. I don't know if it's a synthetic move in the market. I know Tom hates these tweets, move in the market. I look at them for opportunity. I don't like them either, but I can't do anything about it. So how do I benefit from it? Just a capitalist pig, I guess. Trying to do something here.
Just trying to make a buck.
Just trying to make a buck out of 50 cents, man. Not understanding the reason why. Or, my father used to tell me, which you never got the opportunity to meet, but he used to say, yours is not to question why, but to do or die. So don't question what's going on there. Just do something.
Yes, I agree with that.
So that's what I look to do in the market myself. What's jumping off the screen for you today?
I mean, the dispersion trade is certainly working for you here with a lot of big moves underneath the surface. I think the move in Meta is pretty interesting. You got it at 700 here. It's like basically, back to highs. We're about 20, 30 points off the highs. It had that 30-day straight up move. Tesla's interesting. I mean, maybe like you look at like a Strangle or Iron Condor type trade. You got volatility expanding there. Volatility itself not moving much.
Say expanding, I'm going to push it back just a little bit. IB rank a 60 yesterday, coming down to 45. It is high.
Yeah.
If I didn't have a position on, I'd be looking to do something in there now because volatility has expanded in there real nicely. Yesterday, I think it was, even a better place to put on something there. But yes, I totally agree with you. Go ahead.
Yes.
Everything's relative.
Yeah. I mean, gold not moving. That's probably good for most people here. Silver moving. P&L wise, I don't have any huge moves.
AVGO is a good home run for Sosnoff. Let's see if he didn't have a Lulu position at all. And then DocuSign is going to be, let's see, DocuSign. DocuSign is a little bit of a loser, not quite as big a loser as AVGO. Net, it's a good profit. I told you we would get a move in the market when Sosnoff leaves, and you definitely got a move.
It's usually the downside, though.
It is usually the downside, but outside the expected move is what we're looking for. Even the S&Ps are expected move of $44. They're up 60 right now. So definitely at this moment, outside the expected move, 606. We've done a lot of studies on these numbers that come out and, what happens, immediately following these numbers. And typically, 24 to 48 hours later, you get a little bit of a down move. I know you've been leaning a little bit bearish, kind of probably sucking a little bit of wind today with this move higher. I don't know what the market's going to do in the future, but from our research, if you were fortunate enough to, buy this dip and catch some move here, maybe you did it with naked options or vertical spread or something like that. Maybe reduce a little bit of that upside risk. Doesn't mean you have to get out. You're still bullish on the market. Now that we broke 6,000, you think we're going to bust out or something like that. Just change the amount of buying power you're using so that if we do go the opposite direction, you get to keep some of that money. If we do go the direction you want to, you benefit from that too. That's just trading. Yesterday, I tried to take off units in my position, before the move, and now you can put them back on if you're looking to do something there.
Or you add stuff, short delta plays. I mean, you got volatility very low, diagonal spreads, wide butterflies, stuff like that are relatively cheap, and you don't play for those to be mega home runs, but you get a little bit of a down move and a pop in volatility, and it hedges you by 20 or 30% of your P&L, and that's a good, and it allows you to cycle in.
Rinse and repeat.
You take some capital off the table, and it allows you to get long at better prices. And that sort of stuff is, it's a good thing to.
It's called trading, son.
Yes.
That's all we're trying to do here. Yes. The S&P's up 62. Anything else jump out at you at the moment? Oil up $1.20. That's
Google.
That's quite a little bit of a bid.
Look at this. Google has some life.
Google
That's been one of the pigs.
Let's take a look at Google. I think Google has its dividend. I think it goes ex-dividend on. Yeah, it does on Monday, June 9th. It doesn't mean anything.
Tiny little. It's a 21 cent.
Yeah, it's a 21 cent. Yeah, it doesn't mean anything, but just color for the background. It is up $3 and change. That's almost a 2% move. Has earnings coming July 22nd. So after July expiration here. Really can't do anything all July here. If you're trying to calendarize it, you got 5 vol points, 37 versus 32. So I would probably be sticking all in July if I was looking to do something in Google. Google, I don't know. What do you consider Google? You consider Google mid-range, higher end of its range, lower end of its range? What do you consider?
Yeah, I mean, I think those are the catch-up trades. You have Google, Apple near lows. You know, when you look at it like an NVIDIA or Meta or, Microsoft, like it's much harder to get long those here if you're bullish. Market bullish. You'd think there's some catch-up trade in, your Google or Apple. That's kind of where I'm at. Or even in Amazon, if Tesla, I know is kind of a different story right now, but those are the three names that really haven't moved as much as the rest of the big names. So I think there's some beta there. If you're trying to play for, back to highs, I would imagine Google isn't sitting at, near lows.
Yep, totally agree.
So that might be, your play here.
Even the S&P is up 67. Volatility hasn't moved. Bonds down 30. They're the low end of their range. We're going to take a quick 90-second break. Sadnoff must have internet because he's been trading. It's bothering the crap out of him.
Is he? Ooh.
Yeah, I mean, he's basically doing what he always does. Have to roll up puts.
Yeah, roll up puts, get whipsawed, bitch and moan. It's okay. One day he'll learn. It's a trading thing. It's tough. I know. I get it.
I'm going to take a quick 90-second break and come back. We got more Tasty Live after this. Be careful, son. It's easy for me to do. It's not easy for you to do. Talk about the size. We're going to take a quick 90-second break and come back. We got more Tasty Live. What comes up next?
Fast market.
That's right. Where Sosnoff gets confused when he sees trades coming through his platform. Please. I hope
we got the keys to the castle.
We'll be back in 90 seconds. It's Tasty Live.
E-mini's up 70.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
How was Nashville? Did you go hiking? You were going to do a bike, you were going to go fishing, and you were going to visit an apiary.
I spent the most time of anything lying in a mineral pool.
Oh, gross.
There was a guy running the fishing area, whatever. He hands me a
fishing area.
He hands me a fishing pole, and he goes, here, you're all set up. He goes, want me to show you how to use it? I go, I don't need any help. I got this. I get down there. I do this. The whole thing got tangled up.
Mom, phone. I need help. Get the guy over here.
Wave the guy down. I go, hey, need a little help. He goes, let me get you another rod. Now let me show you how to do it. I made the obligatory stop at Buc-ee's.
Oh, how was Buc-ee's?
It's 6 hours away from here. I'm talking it up the whole way down, telling Corinne this is, life-changing.
Did you go into the bathroom?
No.
You didn't go into the bathroom. You can go to the dirty shell down the street, or you can go to this beautiful, clean mecca of a place. Relieve yourself.
I'm not sure what place you were looking at, but I almost got run over in a stampede at that place.
Oh, you gotta move
I like how you're clutching your pearls.
It is not a beautiful mecca. Okay.
It's a beautiful mecca. When you're on the road
it is an absolute up for grabs show with 1,000 people running around grabbing stuff, eating stuff.
That is like crack for me.
There's like There's like barbecue sauce flying all over.
Yes.
That place is not a beautiful mecca of anything.
Who do you think the best dressed on-air personality is of all the Tasty people?
I probably guess I got to go Ilya.
Ryan Grace, easily.
Oh, yeah,
I
Ryan
don't
Grace,
think-
100%.
He's very preppy looking. It doesn't do anything for me. Oh, who's the guy? Who's God on the research team? He's got to be in that top 3 too.
Oh, Gad? Yeah, Gad's up there. Yeah.
He throws on a leather jacket, man. He comes in there looking like Eddie Murphy off Raw or something like that.
Oh, yeah,
He's got incredible confidence, and good on him.
So, Dr. Jim, throw him out. He's horrible. Jim wears children's clothes. It's easy for him to dress.
This is
Let's
easy.
see. Like granimals. Yeah. You can throw me outside. No, don't worry about it. Yeah, I'm throwing you out because you got old man Italian clothes. Yeah, I don't. That doesn't do it for me.
Tony looks like if you saw him at a bar, he'll offer to pay your cell phone bill.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Nicky, we are back, son, but we would be not doing ourselves a justice if we didn't talk about what the market is doing right now. Even the S&Ps have caught themselves a bid at 6,022.23 on the high, trading just about 75 cents or a buck off of their highs. NASDAQ up 269, Russell up 32. I didn't have up 1.5% in the market on my bingo card this morning. Dow up 590, volatility in by 97 cents, 1875, making a new low in volatility. Low, it's only moved about 15 cents. Since we've rallied about 40 handles from this morning.
Surprised at the strength in the Russell.
We both talked about it on the break just a moment ago, like what we thought the market was going to do, like on Thursday into today, maybe slightly higher with a huge volatility contraction.
Yeah, get the news out of the way.
Yeah, totally agree. Agree. Well, we've got Fast Market where our viewers came up. Now, I'm going to assume that these...
There's the music. You almost forgot about the music. Dude, come on. Fast Market.
Fast Market. We're going to have to be creative here because these prices are going to be completely different here.
Yeah.
And I hope that we don't get a lot of trades on because the viewers were like buying the dip.
Yeah, they had caught the move.
Looking to do things. That would be the best thing for me right now. But we'll see. Let's see what's going on across the board here. What is our first trade for Fast Market?
GitLab's GTLB. Let's see what the stock is doing. I think it has earnings coming up. Yes, middle of next week. Earnings play. Yeah. Sell the 45 put naked in España.
No time frame here, right? So if you're going to trade anything in GitLab, you're not going to trade the 0 day, right? Because it has earnings June 10th.
Yeah,
you can do the June 13th weeklies. The markets are around 10 cents wide there. You can go obviously out to July if you wanted to too. July options are around 20, 25 cents wide. Have you traded this before? I haven't traded. It's had about a 5-day uptick here from 45 to 50. I mean, with what the market's doing, not crazy.
Yeah. Markets don't look great. I mean, you've got 20 or 30 cent wide bid-ask spreads and volume open interests are kind of light here. Even going into next week, it's not a very active underlying.
I've never traded the stock. I don't think Tom's ever traded the stock. So
I would be more conservative and go to like July and sell the 40 puts. Or the 45 puts if you want to be at the 45 strike, you sell the 45s in July. You do it smaller than your normal size, and you use it as kind of a engagement trade.
Sure.
$400 bucks in buying power, not
Yeah, I'm gonna just give everybody a little bit of a pro tip here. You see, there's
is this coming from Tom?
No. This is just how it is. You look at these options here, how they're colored. They're still gray or white here, 470, 490. That means this 490 offer is probably like a public or some liquidity provider changed the market to reflect this little bit of a down move here. You see $1.20. So the real market here might be, or the real market, the disseminated market be $1.30 or $1.30.35. This is some sort of spread or naked option that's changing that market for it to get filled. So I'm going to go in at $1.20 and see if I can, match that kind of best offer. Does that make sense? Just to be, does that make sense?
Yes.
Okay.
Yeah.
Okay.
There's not much liquidity.
There's not much.
That's the whole
There's not
point,
much
is
liquidity.
the
Stock's up
liquidity's not good.
$1.30. It's not the type of trade I would make. I really just want to put this trade on so that Tom can say, "What the hell? How did I get this in my-"
Why am I losing? And
Right.
what is this ticker?
Right. Why am I losing?
Who did this to me?
Right. 2 cents on this. What is happening here? What is happening? Who did this to me is right.
Yes.
Reduce your size here would be the
Yes.
definitive thing to do.
Yes.
Okie dokie.
Next trade.
What else we got?
GE.
GE brings good things to life.
Yes, I actually do have a little bit of short delta in here. Somebody in our chat gave me that. I think it's basically a scratch at this point. Stock's up about $5 today. GE won't reach these moon levels. Looking for volatility around here. Wide iron condor selling the 230, 220 put spread, the 280, 290 call spread.
GE up $5 today. That's a 2% move. I mean, that's bigger than the market here, Ethan. Maybe we want to.
It was unchanged yesterday. It looked nice yesterday.
Looked nice yesterday. As earnings in July. What do the markets look like here? There's some volume here. There's some volume. A couple of thousand. 1,500 calls have traded on the 270 level. I'm just looking at today's volume. Not bad. What could we do here? He wants to do an iron condor.
Yeah, you got 10-point wide spread, so
yeah.
I like the strikes you have. They're, what are we at? Around 1 standard deviation on either side, and the spreads aren't the best here, but 260 is what the mid price is, but you got about $1.50 wide spread here, so. I don't know. Maybe you try and put it in at like $3, and if it gets filled, then you got a little small position there.
Yeah, I was actually looking at
I got some short delta here.
Really?
Take a look at the chart. The stock's
haven't had a down.
It's gone from 160 to 260 in a month. So maybe you just do that. That would be a Tom type adjustment here, I would think.
Ivy rank of 22.
Do like the 270, 280 call spread. Just get a little short delta. Maybe.
You could do that. That's going to bring you in around
$3 to 280,
275 as the mid price. I don't know where you're going to get, what you're going to get filled at there. $10 wide strikes don't give you a lot of room here. You know what I mean? Stock 255. I'll tell you what I will do. I'm going to buy the 260, 250 put spread.
Okay.
Ivy rank relatively low at 21. Defined risk trade. Stock is 256 and change.
Right at the money.
Right at the money. If you can get this around, 440-ish.
50-50 shot.
50-50 shot. I'm gonna go in at I'm gonna go in right at the mid price and see if we get filled here. Stock is up $5.11. I'm trying to buy a put spread. I'll go up to 450. And then sit there. I mean, stock's up, it was just up $5 and change. Now it's up $4.98. I actually got filled at $4.50. Couldn't get filled at $4.43. Got filled at $4.50. So
beautiful.
There you go. 50-50 shot, basically.
Cool.
Yep. Mm-hmm.
In. A little bit of short delta.
And a little bit of short delta. That's correct.
Next one, please. SPX 0 day. Double strangle ratioed, one contract at $2 at the $2 strikes, 2 contracts at a $1 strike. Uses 4 legs. The premium rises at all after the first hour. Close it. Otherwise, close it at 25 cents. You got that?
I got a lot of orders here for me to do.
It's a lot of ifs, thens, and buts. Feels like an if statement. Like this is like an Excel
spreadsheet
command.
Yeah.
Yes.
I'm going to abstain, Vanessa. I think in SPX to make 25 cents, I think you got to give yourself a lot more room.
Yeah. Well, that's what this is. They're looking at $2. You know, you're looking at tail options. I think the hardest part is the move that you've had today.
Yes.
You know,
and the volatility, IV rank of 17, volatility in by 5%. I think it's a tough trade. I like your neutral strategy.
Yeah.
I probably would stick to our bread and butter. Go to the 20-ish delta, go $20 wide, $30 wide on an iron condor if you want to do that. Skew it one way or the other, bullish or bearish if you want to by one strike.
Yes.
That's how I tease myself. I would rather just probably go neutral like Vanessa says here. But that's what I would do. But I'm going to abstain from this trade. Plus, I can't watch it, and it's not my account. It's Tom's account. So
very nice.
Next one, please.
Palantir. Think you can get long on this slight pullback in Palantir by selling the July 100 strike puts for $1. So Palantir sold off like 10 or 15 bucks yesterday from the high to low. It's kind of chopping around here at 125. It's up $4 and change. IV rank at 28.
See, now I love this trade that they put up here because the stock is higher, and I hope that they did it. Stock's up $4 and 70 cents here. They are right, though. I mean, Palantir's been on a little bit of a tear.
Yeah.
Sold off nicely yesterday. What do they want to do here?
Sell the 100 strike puts.
Yeah, up $5.
I know. Everything we're going to look at because people were buying the dips.
Bullish. If it's bearish, we're going to love it. You know what I mean? Because the stock is going to...
Because it'll be at better prices, likely.
Right. So it's a double-edged sword here. Let's see... Yeah. So if I do the 115-105 put spread, it's $2.60, and that's using the 30 delta put here. I gotta wait. $4.5, $5 in Palantir is too high. Maybe if we sell off here today, I'm not gonna chase it. So next,
I'm with you.
Next,
could look at like a strangle if you wanted to.
Could look at a strangle.
I'm sure Tom was all over that already. So
Palantir, that's a good question. What does he have?
It's a mover.
He's got the 110, 113 already, which, believe it or not, is actually
110, 130.
Sorry,
not
113.
Yeah.
I apologize. 110, 135.
I come in nicely.
It actually has come in. It has come in about $1.
Yeah.
So he's already has this. He doesn't have a bullish position on, but he has a neutral position on. So
got it.
I'll leave it as it is.
Got it. Next one here. App Lovin'. I know Tom has had some fits with this one. July Iron Condor with a slight bullish skew. Sell the 360 puts and the 520 calls and buy $10 wings for a 565 credit ahead of its possible inclusion into the S&P 500. I've seen those rumors floating around. This stock has wide bid-ask spreads, and it certainly moves, so you got to be careful here. So we're looking at the 360, which is about a 20 delta, the 520, which is about a 20 delta as well.
Look at the IV rank here, 28. I mean, this had an IV rank in the 60s forever, and now it's come off. Wide markets here.
Your bid-ask spreads are at $1 at 650.
Yeah, stock up $7. Again, not because the market's higher today. If the market was unchanged, I probably would have looked to try to do something in here with a defined risk like you are here recommending. But up $8 here today.
When you're looking at these spreads too, the bid-ask spreads are super, super wide. So you might have, when you were looking at this, it might have been marked at a $5 or $6 credit. But anytime you are at or inside the expected move, you're not
getting half the width.
You're not getting half the width of the strikes. You have to be inside the expected move.
Yep.
So when you're at a 20 delta on either side, you're getting 1/3 the width of the strikes. That's just how it works. The math works out.
Yep, you are correct.
I think it's
GTLB got filled at $1.30.
Oh, there you go. Good.
Sorry, $1.20 where I put it in.
Yeah, let the market come to you. So I would say pass on this one.
Agreed.
Yes.
Tesla, what are they going to do here?
All right, this chaos isn't finished. So trying an Iron Condor, selling the 225-200 put spread, the 365-390 in July for a $5.60 credit, probably better pricing Friday at the open.
225, 200, 165, 390. I'm sorry. Sorry, I said the wrong thing.
The 365.
360. 365. What's he doing? 390?
Yes.
So
you got what? 25-point wide spread on either side?
25-point wide on either side is correct. $5 and change is the credit gives you.
That's it.
69 pop is right there outside the expected move to the upside, just at the expected move to the downside. It has absolutely no delta. Stock's up $8 and change.
I like it.
I think you got to make this trade. The only problem is at what price? Probably closer to around $5.40. Where'd they say they got filled?
$5.60. And they thought it would be higher today, thinking that volatility would be a lot higher, but hasn't really moved.
Let's take a look. I went in at 540. I did not get filled. I'll cancel and replace it. I'll go down to 535. Mid price has been anywhere between 534 and 544, and I got filled at 535.
Right. Very nice.
Yeah, very nice, very nice, very nice.
Let's get to the next one. That was Garrett in Phoenix. I've been calling out the names.
Yeah. Please give him a shout out. Sorry, it's hard for me to do.
Yeah, you're doing the trades. I'm trying to, This is a team thing. This is the bats. Come on.
Team tags. Never had that, son. Yes, with you. Yes.
Omaha. That would be problematic. Hood, trading near all-time highs, but IV rank sitting at the 30 handle. Decent setup considering a July 16th delta neutral strangle. Is this also Garrett in Phoenix, or are our slide people messing up for us here? I will take the later. I don't know if we had two in a row.
Hood hasn't had a downtick, maybe included in the S&P 500.
Yes.
So they announced that today. Is that? I think they announced.
I think it's at the close.
Right.
Yes, I believe
up
so.
$2.30 here. What do they want to do?
I mean, I have a very similar position of a strangle that I've been rolling. I'm short the 65.70, so I'm short the 65 puts, 70 calls. I think you should certainly have a position here. 71% implied volatility. IV rank at 27 and change. Maybe do they're looking for a delta neutral strangle. They don't have the deltas here. I mean, a one standard deviation, or maybe if you wanted to lean a tiny bit short, you do like the 60.95 at $3.20, $1,000 in buying power. It seems a little bit. And by short, you're further out of the money because there's call skew.
Yeah, there's a lot.
But you're short because of the delta.
Yeah, a lot of call skew. Agreed.
So I think that's kind of an interesting.
60.95, $3.30-ish, 3.30 is.
Yeah, who says no? Tom would jump at that.
I like it. You're outside the expected move to the upside. You're just at very similar to the Tesla trade just a moment ago. I'll go in at $3.30 and see what goes on there. You're right. It's a relatively low amount of buying power because the stock is $74. I did not get filled at $3.30. Mid price was around $3.31. Now mid price is $3.25. Stock's up $2. I'm going to go in at $3.27 just to see. I did not get filled. I'll go down to $3.25 and see if we get filled there, and then I'll leave it if we don't get filled. And I did get filled at $3.25.
Bonds down at full point.
Bonds down 101, 112.13 now. Even the S&P is up 69 still. Market holding, bonds doing what they've been doing all morning, getting weaker.
Yes. Next one, please. Uber, strangle, July 18th expiration, 75.97.5. Mike in Fresno, California.
22 IV rank in Uber. What do you think? Yeah. Uber up 59 cents. Is it a strangle candidate with Uber? Quite a bit yesterday. Looks like it rallied up higher today to almost 86.5. It's 85.20 right now, up 57 cents. What do you think?
Only uses $800 in buying power, so I don't hate it. I would probably move it into like the 95 just to be at an even strike. Do it for a $2. 95.80 maybe. 20-ish delta.
95.80 on the trade does give you a little bit of slight bullish.
That's kind of the range it's been trading in.
Yeah, again, it's giving you that upside move outside the expected move and more, inside the expected move to the downside. I'm going to go delta neutral here and do the 80.92.5. How's that sound to you?
Okay. Yeah.
381 is the mid price. Markets are good, not great in here. So I'm going to go in at 381 and just sit there if I don't get filled. And I did get filled at 381.
There you go. Beautiful. Next trade, please. SLV. I in the 33.5 call in SLV for July at $1 at a $1 credit. Thoughts, Brandon, Toledo, Ohio. Brandon, this is probably not a great trade this morning, but
it's up 32 cents. I mean, it's not crazy. But Sosnoff is long silver here, so this really would
hedge him a little bit into this move too.
It would. It's not my place though. Not my place to do that.
That's fair. That's fair.
Not my place to do that. Intelligent trade. When was the last time you saw Sosnoff make an intelligent trade?
Almost never. It's tough. Really tough.
Next trade, please.
Yes. First Solar FS. I think it's going to be FSLR. First Solar showing one of the highest IV ranks on the Taste Trade right now. 135, 210 strangle. We're looking at that in July. That's Sean in Hong Kong. We're going worldwide.
Yeah, worldwide, worldwide. And he is 100% correct. It is one of the highest IV ranks out there. It's a little bit of a mover with a monthly implied volatility of 67 or so. What did he say this was trading at? Did he give you
135, 210. They don't have a price up there.
No price.
But just, looking at the net change, let's see what this was trading for.
Stock is unchanged.
210. Yeah, this spread is basically the same as what it was.
Yeah, stock's going. Are you looking at the change of the?
Yeah, you can toggle to the net change, and they're wider bid ask spreads, so you might see some funky numbers, but it hasn't moved really.
No, it hasn't moved. I went in at 680. I did not get filled. I'll go down to 677 for the show here to see if I do get filled. I'm like 2 cents under the mid price. I didn't get filled. I'll go 1 more cent under the mid price at 676, and I'll let it sit if I don't get filled.
I like the idea though.
What's that?
I like the idea. It's one of the it's a higher vol than most on the board. Earnings coming up at the end of July.
Yeah, you've taken Tom down at First Solar before. So
of course, anything that has gone down has been my fault.
Might as well let Sean take Tom down too. So
no, I'll take credit for the pain. Oh, I got it.
Fair enough.
My job.
I mean, the S&P's up 70. If you hope you caught that dip.
Beautiful. That was our last one.
Oh my God, we went through it. Oh, John.
Oh, Andy.
Oh, John.
Thank you, John.
So fortunate.
Yeah.
Oh my God. Thank you, John. Thank you very much.
6 of 10. Is that a pass for the bats? Would Tom consider that?
For us.
For us.
He would consider that a pass for sure.
Yeah.
If they work, it will be all to his credit.
Yes.
And if they do not work, it will be all to,
of course,
be a problem.
How the world works.
We got filled in GTLB. That's the one I like the least, not because of the strategy or anything else like that, just that there wasn't the best markets in there. GE and Iron Condor pretty delta neutral there. Tesla with an Iron Condor delta neutral. Hood with a strangle liked it. Uber did not get filled in FSLR, and I really did I get filled in FSLR? I did not get filled in FSLR.
You don't have to change it, John. We'll try and get filled there. We're going to get that filled. Don't worry.
I'm going to take a quick 90-second break and come back. Do you know why I have to come back? Because we have a market measure that's sponsored by the SIBO. That's why I'm coming back. We're going to talk about 0 days.
Where else would we go?
And why you should close things at 21 days, right?
Yes.
Right? Yeah, we'll be back in 96. It's Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with a market measure. But before we get to that, can we please take a look at the market? E-mini S&P is holding steady, up 66 handles on the E-mini S&P. It's got up to 60.25. We're 6,011. NASDAQ up 236 or so. Russell up 23. They're all up the same percentage here. Dow up 500 and change. Volatility in by 97 cents. That's a 5% move. Bonds in by 31 ticks to 112.15, just 3 ticks off of its lows. Bitcoin up $2,600. Oil up $1 off of its highs by around 35-ish cents, well off of its lows of a $1.50. Lower than where it is right now. Volatility is 31, going lower in oil as it goes higher. A little bit odd there. Usually commodities to the upside catch a little bit of a bid in volatility. Gold down $14 and silver up 37 cents. That silver gold ratio working nice for Tom. Silver up, gold lower. He's short gold, small. He's long silver, small. Net gas up 0.04 1.2 off of its highs by around 0.014 or so, back to almost unchanged. Euro lower, dollar higher, 114 on the euro. For somebody who's going to Europe, it's better for the euro to be lower.
Well, no, it's good for you. The euro lower.
Better for the euro to go lower for me.
Yeah. But the dollar is in the dumps, so.
Yeah, but 114, relatively speaking, I know it's not 104 where it was. It's still a decent exchange rate over time.
Yes.
So can't have everything. Hey, not right now, but phone lines will be open soon. We're going to go to Scott. It's Friday, so we go to phone calls with him. If you have any questions about things on the Tasty Trade platform, any questions for trading, we'll be here for you. Give us a buzz. It's the same number you always call at the bottom of the hour or so. And we're done with this market measure.
Sponsored by the CBOE.
My alma mater.
It's true.
Yeah. You were on the floor with me.
One day.
There's some pictures back in the day with you wearing a light blue trading jacket, I believe. Yeah.
I was real skinny, baby-faced.
Yeah. Yes. You were in high school, I think.
Yes, I was.
Yeah, you were.
Or maybe like it was like first year college.
Okay.
Like that.
Yeah.
Something.
Yeah. You were a youngin'.
Little baby, little youngin'.
Yeah.
Little youngin'.
Yep. For sure.
Market measure.
Let's do it.
Sponsored by the CBOE. Holding past 21 days till expiration. Bravery or foolishness from the poets on the research team. I love it.
Okay.
Let's do it. First slide. So in our research segments, we've shown multiple times why it's important to manage our trades at 50% profit or at 21 days. The general idea is to capture as much of the profitability in the first half of the trade, avoid the increase in volatility of P&L swings in the second half of the trade, and also increase the number of occurrences. You can redeploy that capital. It's obviously a part of managing positions. But what exactly happens after the 21-day mark in a trade? What would happen if we held our losers past the 21 days in hopes that they eventually become winners, or even refuse to take off our winners at 21 days in hopes to squeeze out as much profit as.
Yeah, a lot of people like to just play the numbers. Like you put on a trade with 68 to 80% pop or whatever it is that you put on. They want to play the numbers. So sometimes people like to set it and forget it. Let's see. I know we've gone through this, and we've kind of showed that closing at 21 days is the
mechanical
thing to do. But let's see what, we're always trying to tweak the numbers. Things are ever evolving. Let's see what's happening in this lower implied volatility. What's going on?
Beautiful. All right, so we're looking at 16 delta strangles, 45 days till expiration. We're looking at 2005 to the present. So we looked at 45 days. What happens to a 45-day trade from the 21-day mark to expiration? So you're breaking it up into kind of two pieces here. Mm-hmm. You're comparing mechanical versus discretionary, which is always something that we think about. Mechanical, closing the position at 21 days. Discretionary being, allowing a little bit more flexibility from that time frame.
But it's interesting here. They're managing mechanically unless the trade is a loser at 21 days. So
yes, so you're keeping the losers on is what's happening. Yeah. So you're managing at 50% profit. You're letting the rest of the losers run through that 21-day mark.
Very nice. Yes.
So some of the metrics there as well. You can see closing the position if the P&L becomes positive, or closing the position at expiration for the losing trade. So the first one here, the pop is going to be higher as some of the losing trades at 21 days are able to be turned into winners at expiration, which makes complete sense.
Check mark to keeping it on past 21 days, right?
Yes. Okay. On the surface, it seems that holding would make more winners. However, the portfolio volatility increases and the unprofitable trades P&L goes more negative. And this is, when we manage positions, it's not always just managing the winning trades, but when you keep trades till expiration, especially when you have capped profit potential, the amount of risk becomes bigger because you have profits on the table, or whatever that losses get smaller as you get closer to expiration. So your deviation of P&L gets much wider, and you could see this, in the volatility of your daily P&L as a percentage of the credit.
I'm glad you
big
mentioned
swings
that one.
in both directions.
Yeah, I'm glad you mentioned that one first, though. The second one down there, and I like this new format that they did here.
Yeah.
The volatility of the P&L as a percentage of the credit, 60% for 21 days to expiration versus 34% for DTE to 21 days. The volatility, what scares people is watching their P&L move, especially in the opposite way that they want it to go. And when you're going to get a volatility that's twice as big on something that's already volatile, right? You're trading a strangle here. It's already a undefined risk trade. You've got all those voodoo, sayings behind it through time, and now you're doubling the volatility.
Yeah,
that to me makes it very hard for you to be a good profitable trader in the head.
Yeah, and this is why you have to kind of look at all. You can't just look at one metric. Like a lot of people sending emails, oh, this put is a 95% probability of success. Why not just do this? Why do anything else? Yeah. Because you look at, the probability of profit here being higher, if you're holding to expiration, of course it will, because some of your losers are going to come back and be winners. Your winners are going to get bigger, but your P&L swings are much, much wider. So, that's something that there's always a gimme and a gotcha for Dr. Jim.
Yep.
Next slide, please. Trades that are losers at 21 days are the culprit of the higher volatility in the second half of the trade, as the trade delta has become more skewed with losers. So your losing trades become bigger as time passes, and that's not a shock because you're getting closer to expiration. That extrinsic value goes away; it goes all to intrinsic value. Makes more sense to redeploy the capital after 21 days into something more profitable rather than risking an even larger loss if our winners turn into losers at 21 days. This is the exact reason why, when people email in and they're like, oh, this expires in 3 days and it's trading at a nickel, why not just hold it? Like, it's so far out of the money. And it's like, well, you can make the $5 or you can lose everything that's on the table. Mm-hmm. And, that's what you're seeing here with these metrics. So losers at the 21-day mark, 24% of all trades. So the probabilities are working out even better than what you would expect at entry, with the 16 delta strangle being roughly 70% pop. This is 76%. Great to see. But your losers are much bigger. The winners are obviously going to be much smaller. When you net this all out, you get about 60% of the initial credit, which is, what you target. We talk about 50%. You're right there.
Beautiful. Nothing to add. You did wonderful, son. Much better than Tom.
Thank you. Well, we got a bunch more slides, so keep your thinking.
Yeah. Going.
All right. So discretionary management as roughly the same average profit and overall P&L as mechanical management on the trade-by-trade basis. Even though discretionary management has a higher pop compared to the mechanical management, the higher pop comes with the trade-off of significantly larger average losses. So if you are looking for a more tighter P&L volatility, you want to just be mechanical with it, and you got to kind of do it across the board. When you get into this discretionary mark, sure, you're going to have things that go from losers to winners, or losers to scratches that are bigger P&L changes than your winners. I think this is another important part. You sell something for $1, your winning trades are 50 cents, your losing trades are $2, and that's because you have higher, your win rate is high.
Risking more. Yes. Higher pop.
Yes, you're always going to have bigger, wider losses when you're holding and being more discretionary with the trades.
Yeah, look at that average loss, that 666 in the discretionary. That's just huge, and you really don't get paid anything. Like, look at the average profit percentage, 43 to 47. You're taking all the risk, not taking any of not getting benefited by having a higher profit. So, good little metric there.
Next slide, please. So this is ultimately why we stick to our 21-day 50% profit management rule, although you can theoretically turn some losers into winners by expiration to increase pop. The higher volatility, less average P&L, and chance to worsen the losses that do occur isn't worth it. And here, you could just see the tail risk of these positions. There's a lot more of that as you get closer to expiration. That's why we kind of stick in this 45 to 21-day time frame because it's a tighter distribution. That's typically what you want to see.
Yep, a little harder to see on this graph. It's really just the same thing that we've just gone through the last couple of graphs.
Yeah,
just showing you in a different format. So not too much to add there, but yes, again, pointing out 6-time losers, big number. That's at 666 versus 1 something.
Ooh, 666, scary.
Don't do that.
Next slide, please. So, and for those curious about even more numbers, the next few slides are the results of all SPY short strangles for various deltas. So we're looking at the 40, 30, 20, 10 deltas, also with 45 days to go till expiration. Here we look at the win percentage at expiration for those trades that were winning at 21 days and for those that were losing at 21 days. And we computed the average P&L changes as a percentage of the initial credit for all 4 categories. So we're looking at winners staying as winners, winners turning into losers, losers turning into winners, and losers staying as losers. So all the outcomes here.
Batista staying as Batistas.
Yeah, well, that's that seems to not change much. Next slide here, please. So SPY winners at 21 days till expiration and the performance, it comes in exactly as you'd expect. I mean, once you get to 1 standard deviation, you're getting a higher probability. That's not a shock here. They're all high probability. You get high win rate. Average P&L change of the winners. You can see this all kind of in line. You obviously have bigger P&L changes in terms of losing trades with those tail options because you're selling cheaper options. They're going to move, your losses when you're selling something for 25, 30, 40 cents is going to be much wider of a distribution than if you're getting higher premium at the money.
Yep, and they gave you a little key takeaway there at the bottom. I think it's pretty self-explanatory. Good job.
Yeah. So the SPY trades that were profitable at 21 days usually stayed profitable through expiration, but when they lost, it was by much more than when they won, and that's what happens when you have a capped profit potential.
What happens when you play with fire, son?
Yes.
You were never a big fire kid. You never gave me a hard time with that.
Yeah. No, I was pretty well.
Well, you didn't like the basement on fire. Is all I'm trying to
Yeah, that's true.
You were good there. What's next?
Last slide here, or we got 2 more slides. I'm sorry. So we're looking at SPY losers at 21 days and the performance there. So again, holding on to trades that were losers at 21 days was an extremely high variance. So you had very wide distribution. A lot of these can turn back into scratches or winners. A lot of them can get to be a lot bigger losers. And so your distribution is much wider. You have middling chances of success here. You can see the losing trades. It was basically a 50-50 shot. A lot of the tail stuff came back and helped you, but you have really wide distributions here. It's just, ultimately, it's a lot of risk. You could see it from all the numbers for not as much reward.
Right.
And so, if you're looking to lessen the P&L swings, you just kind of do the mechanical thing and you manage.
Really what you're looking at here is probability of profit is dynamic throughout a trade. You put a trade on with a 65% pop, all the mechanics are there, high implied volatility, stock moves, and then that same position, that probably a profit might be cut in half. It might only be 30% now. That's really what you're seeing here in these numbers.
And that's also the dynamics of markets. You can't.
Yes, exactly right.
Like everything you see now, it is what it is based on what
here
volatility is, how much time is left, the underlying stock price, all those things are right now, and those things change. And so, obsessing over.
That's why I always say you can only trade what's in front of you.
Yes.
You got to trade what's right here, right now, and put on a strategy that fits your assumption.
Yes.
And that's what's showing you here. Then add the mechanics to it, and you put yourself in a profitable place. And that's all, you try to put yourself in an intelligent, profitable place. And that's all you can ask yourself to do.
Good job out of you.
Appreciate your support. Usually don't get it on this show.
Takeaways. The higher P&L volatility we observe in the second half of the trade is caused by the losers that were held past 21 days, even though some of those losers held past 21 days did become profitable. The losers got bigger is the key takeaway here. Total in total, the discretionary management losses are less than the mechanical losses. However, they're roughly 6 times larger when they do occur, wiping out the benefits you receive from more winners. So holding to expiration, a lot of those trades will come back and you will make some money back, but the losers will get 6 times as big. And so, everything kind of widens out. Keep it simple and consistent. Our capital is better deployed creating more occurrences than hoping that a loser will turn around or that we can squeeze more profit out of an already winning trade. That's why we manage the winners. That's why we manage the losers. Be mechanical.
Very, very nice. Don't eat like a bird and poop like an elephant.
Yes.
Good job out of you. Even the S&P is doing a good job, too. They're up 63 over 6,000.
Look at gold down 30.
Gold down 30, gold down big. So what do you think about that? Gold has been rallying with the market. Gold is finally, kind of selling off with the market.
I was surprised at the Russell being so strong with rates higher, bonds lower. Gold is moving as I would expect with rates going higher. I would think you short the Russell here. You want to play?
Going against the SASI again?
I'm always against the SAS. I mean, if
you'd like to go,
hey, that's what makes a market. I've said it a couple times today. You have to have winners and losers.
To see a loser, right?
Yeah.
To recognize it.
Yeah.
Otherwise, you can't recognize it. If you don't know what it looks like, right? If you don't know what a winner looks like, you can't recognize what a loser looks like.
Very true.
We're going to take a quick 90-second break, but before we do, I have one public service announcement. Scott's going to come on the show. He'll get very upset if you don't call in. So give us a buzz. 855-238-2789 or 855-BE-TASTY. That's the phone number to call. The number will be below. If it's not there right now, it'll be there in 1 second. Please give us a buzz. Love to hear from you. 855-238-2789 or 855-BE-TASTY. There it is. There's the number. Phone lines are open. Call in right now. We'll put you in a queue. The faster you call in, the faster I can tell Scott. We'll be back in 90 seconds. It's Tasty Live.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top yearly recap.
Breaking news on Instagram. The first segment of your line dancing has been posted. Left together, switch, turn. Right together, twirl, turn. Hip, hip, hip.
Right together, spin, clap. Left together, spin, clap. Hitch, 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 turn, shuffle, rock, shuffle, rock, shimmy.
I took 5 lessons for Casey's wedding, and all I knew how to do was
Right together, spin it around. Yup. And you want to clap. And then strut down, strut down, strut down, strut down. Right together, spin. Left together, spin. Hitch, 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 cross, turn. Shuffle, leave, shuffle, rock, shimmy, lasso.
This is not good.
Hey! Oh, he's got the walk down. He's got it down.
It's perfect, and you got the bag. You got everything.
that is not even close.
God, bitch stole my. Oh, it's flawless.
Look, it's beautiful.
Flawless.
No.
You're walking way too fast.
And go stick your finger in all of our lunches.
Now complain about something.
Oh, God. You watched the debate. You knew who won, and you just didn't want to admit it.
I was in New York. I was flying home that night, and I'm so sorry that I didn't go back and tape the vice presidential debate.
First of all, I think it's hilarious that you run a technology company and you still think you think you had to tape it in order to watch it. You think you have to tape it?
He didn't have a blank VHS tape to spare for the debate. Stas, what comes up next? The opening bell. Don't look so surprised. Sadlov has been this way since 1980 when you first started trading. Wait a minute. Was it always 8:30? Yes. The opening always was the same. The closing has changed.
Like, what has
Wasn't
changed?
it?
I don't think so. Nothing's changed. The only thing they did, I think, was add the 15 minutes.
Excuse me?
The only thing I ever think that changed was the 15-minute curb session.
From 3 to 3:15, so they did change it. So it was the closing and not the opening that's changed.
For option traders, the 15 minutes.
Well, listen. We're not bean traders here.
Do not engage.
Wait a minute. So
when I got in this business,
we used to open it. We used to open at 9 o'clock. Since 1980 to now, we didn't always open at 8:30 in the morning.
Yes, we did. Is that a $20?
I am going to get this $20 off of you.
I don't think so.
No matter what. Chris, how are you, my friend? Chris, your job after you get off the show here is to find out when the New York Stock Exchange opened in the 1980s, what time they rang the bell. I have a $20 bet with Sosnoff. We're going to be eating good tonight. I already decided that Sosnoff will be having cereal for dinner tonight. I said the New York Stock Exchange did not open at 8:30 Central Standard Time. It opened at a different time. Soz said it always opened at 8:30.
I already have the answer. You guys need to choose a year, and that will determine which one of you is correct.
No. I've already won this. I said from 1980 to now, 2024, we didn't always open at 8:30.
I gave him 1980, but I technically didn't start probably till 81. But go ahead. What is it?
September 1985 is when it switched to 9:30 a.m. Eastern.
Thank you very much. Thank you very, very much.
Not 1980. Not 1980.
I remember. I was on the floor. I was working because I would have to get up earlier in the morning.
In 1980, the New York Stock Exchange opened up at 10 a.m. Eastern. It closed at 3:30 p.m. Eastern Time. The schedule was in place until September 1985, when the opening time was changed to 9:30 a.m. Eastern.
Pay me,
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with this man. That's right, ladies and gentlemen, the retail trader's biggest advocate. That's right, my friend and, well, my close friend, Mr. Scott Sheridan from the Scott Sheridan Tasty Trade World Headquarters. How are you, Mr. Sheridan?
Well, I'm really good for the simple reason that Tom is not on air, and I couldn't stand listening to him say that Indiana won the game and how does Daddy do it?
No.
You know, it's et cetera, et cetera. Now, his placebo. Okay. I'm not naming names, but his handler, he reached out because I made the bet with him too. And he offered to let me out. So I only bet him 20 to lose 120. He offered to let me out for 100. I said, yeah, I don't really think that that's a good move on my part. OKC's still about a 275 favorite.
More than that.
So,
More than that.
330.
330. Yeah.
No, but if you middle it.
Oh, you're middling.
Oh, if you're
in the offer.
Yeah.
Right. You gotta middle it because that's whatever.
Yeah.
You're trying to get the true market that's untradeable in the betting world.
Yes.
Correct.
Right.
Correct.
You can bet it amongst friends, but you can't get that in the betting world.
Yes.
Correct. Well, you'd have to take the other side. You get paid. So it's what minus 330 plus 5260. Anyway, I'm good. So thank you for asking. Nice to see the father-son combo on a Friday morning.
Thank you. You're not the first person to say that, but thank you very much. Appreciate that. It was very good. Very good. Thank you.
Nice.
Apologize.
Yeah.
We're taking your phone calls, 855-238-2789 or 855-BE-TASTY if you haven't.
It was an amazing game, though, last night. Did you watch it?
It's funny because I listened to a lot of it. My back was to the TV. So I listened to a lot. I turn around, they're up by 10, they're up by 12. I'm like, all right. And then I went to bed. I'm like, I don't need to watch this. And I wake up to the text. I'll take 100. I'm like, oh my God, they lost the game.
More turnovers by a winning team. Somebody wrote in our chat here than any other time in history, or like not since 1975 or something like.
But they shot like 40% from three. So.
Yeah.
Man, Halliburton.
Yeah, that'll help.
Yeah,
I mean, he's a stud.
I would love to know what the line is for the next game. What's the line?
I think it's 11.
11.
Yeah,
it's 11. It's going to be. Oh my God! Indiana should just say, "Listen, we'll give you this one. We're going to go home and get ready."
I mean, you got to think OKC comes out firing for the next game. You got
sure.
Yeah.
Mm-hmm. One more loss by OKC, and I'm going to tell you something right now, Scott. I'm going to come after you. Okay, I will see your new place. Okay, because I'll be at your front door.
Wait a minute. What? Well, you can't get in. I have your picture downstairs. I said at the doorman, if you see this guy, don't let him in.
Don't let him in.
Listen, they could get another win in Indiana. They're not getting another game in Oklahoma. So, but OKC's going to get this series. Mm-hmm. But we got game 2 tonight in hockey, right?
Yes.
Hockey tonight. Nothing over the weekend, really. I mean, I think it was a Sunday game or something like that in basketball. Late at night, like 7 o'clock again, at least Central Time.
Cubs, Detroit. That'll be a good series.
Mm-hmm.
1-2.
Mm-hmm.
You guys don't seem like you have a lot of energy today. Can we
I had a hard time hearing you. I'm sorry.
It's
not your fault. It's not your fault. See, we're
in
studio working. I don't know what you're doing, but we're in studio working here.
I don't have a lot of energy for the Cubs. I don't get those tickets anymore. I'm not in.
Yeah, we're not privileged to the tickets anymore. I see Tasty Trade still there. I see a lot of trade. Going there. I don't see the Tasty Live crew get any love.
Yeah, I know.
My guys James in the back there would love to go to a game occasionally. Probably. Be fun, maybe even take his family or something like that, young kids and stuff like that. John's got nobody, so screw him. But James would probably go.
You know what I got to say to that? Sucks to be you, but I'll see what I can do.
I can see that. Let's go to your list. I've got phone calls here. I've got.
Yeah, we got 3 phone calls. Big day for us.
Pennsylvania, Jersey. So give us your list and let's get to it.
All right. On the off chance Tom happens to be listening, let's just get through this. Top 15 symbols going through the system. First 40 minutes today, no broad-based indices or futures. Tom, if you are listening, DOCU, D-O-C-U, at a 28. Yeah, oof.
That's a Tom favorite, too.
Tesla to 42, AVGO at an 8, Lulu at a 24, PLTR to 28, Meta to 7, NVIDIA to 3. Apple at a 22, Amazon at a 13, TLT at a 22, TQQQ at a 19, Microsoft at a 1, CRWV at a 47, Hood at a 28, Goog with an L at an 18, and number 15 for Tom, DOCU at a 28. Rounding out the next 10, SLV at a 46, Moo at a 41, HIMS at a 34, GLD at a 35, and TSLL at a 44.
Good job out of you.
I'll do it for you.
Good job out of the team.
I'll do it for you.
TSLL. That's the leverage.
I like that change. I have to say, it's a very nice change. You can see what the stocks are doing.
So what's up? What'd you say?
On that list. Did you not see the list?
Yes.
Yes. What about it?
What were you asking? Tesla number 1.
Look at the price change.
Up 14%.
Oh, it's a new feature.
Yes.
$14.
Yes.
Look at that.
You. Okay. Yes. Slap. Wake up.
It's hard to hear. We're on the Sosnoff. It's hard to hear with the thing.
I have an infuction in my ear.
Here.
Let's go to phone calls. Let's go to phone calls.
You said it just like Tom. You did say it just like Tom. No, it's hard to hear without the thing.
The thingy. The thingy.
Let's go to the phone lines. I'm going to go to Detroit. I got John Paul Gauthier. John Paul, what's up?
How you doing? How you guys doing?
Good, man. I can hear you just fine. I don't know what's wrong with
Scott. He just talks too soft.
Go ahead, John.
Hi. Yeah, I got a quick question. I've got a June 20th expiry, a 475 QQQ call, one of them, and I got two 490 calls that are going against me, I can either just roll them out or, take assignments of the shares, which I'll be short. I'm wanting to know what kind of options I've got to kind of wiggle out of this thing. Typically, I just roll it out another month, but it's been such a strong market the last 2 months that I'd almost need a 10% correction for the 475 to get down to that level. But I got to break even on the 475 at about 503, and my break even on the 490 calls is about 525. I just want to get your guys' opinion what you do in a situation like that.
You're long one.
Short them. Short both of them?
Short, yeah.
Short them both.
You got, I mean, if you want to lean short.
Okay.
Yeah, if you want to lean short, you got to roll these out. I mean, you're basically just short the stock. I mean, you're short stock here into 30, 40 handles. Roll them to July and roll up to the 500 strike. And, you're still very, very short. You got 77 deltas, but, it gives you a little bit of extrinsic value and, you can hold it a little bit. And sell some puts. I mean, or
sell puts at the same strike as whatever you roll up to.
The 500 straddle.
Yeah.
Sell the 500.
All right.
I mean, that's something we would do. You can certainly go to the same strike. I would probably look to collect a little bit of premium. Remember, the probability of getting down there, even for a touch of the strikes that Nick just mentioned, is about 40%. You know what I mean? So, I mean, I don't know. It seems like
you'd pay the debit to roll it up and then sell straddles on, just sell the regular,
You would be selling a short delta straddle. That's correct. You'd be reducing your delta a little bit. I think you'd be very happy if we got back down to 500.
And you'll add some extrinsic value. I mean, you're gonna have to eat the loss doesn't go away. The debit doesn't go away unless you get the 10% down move, which can obviously happen. But that's tough to keep holding for that.
Yep. Expected move is $26. You'd be just outside of that. You're right there, man.
Yeah. So you just pay the debit, move these strikes up to 500, sell 3 500 puts, and just roll this thing out to July.
You're not even going to think about the debit. If we get back to 500, you're going to be, it's a blessing.
And I would,
the debit doesn't even matter.
And I would caution you in the future to stay more mechanical. 21 days was a week ago. So, I mean, we had ebb and flow. We had up and down days in all week long. There was plenty of opportunity to do something. We just did a nice piece on 21 days. I think you should think about that in the future.
Right. Yeah. You guys are. I follow all the 21 days. I just don't practice it. It's like I got to put it into practice while we got some extrinsic left on stuff.
Got it, man. Got it. Good luck to you out there.
I appreciate it. God bless you guys. Love all you guys. You take care.
Thank you. Appreciate it. We're gonna Somerset County, Pennsylvania. Byron, what's up, my man?
Hey, how you doing, Tony?
Good.
Morning.
Good morning, Scott. Nikki.
Good morning.
Good morning.
I just wanted to ask you something here. I know that Tony and Scott both remember Alan Greenspan. I don't know if Nikki remembers him, but I remember there was a point where Alan Greenspan came out, and I think he was the one that said it. He said, "Oh, geez, the market seems like it's reached a point of irrational exuberance."
That is the quote.
And with this big run-up that we've seen lately, and especially this morning, I mean, I'm that long, so let's hope this is not the case. But do you think we're reaching a point of irrational exuberance? Or if not, most of our analysts and stuff predicted a possible high of 6,600 this year in the market. Do you think we can go up that high before we hit that point of irrational exuberance? Or do you think that this is a strong market and this is responsibly where it should be going? That's my question.
I mean, it's a great... go ahead, Scott.
Yeah. I am signing up for irrational exuberance. I'll raise my hand for that one. This market, as funny, I was leaving the studio yesterday. I said to Tom, "How are we where we are? How are we right around 6,000? We're 200 and change points away from all-time highs." I don't care what these stocks are doing. You can look at this and say there's enough in the world right now that these, to me, the equity market should not be priced for perfection, and that's where we are. So can we go to 6,600? Absolutely. We could go to 6,600 today. We could go to 6,600 in the next week or two. So I'm not saying we're not going to 6,600. Nobody knows. Nobody has any idea where the market's. In my mind, pot odds, as everybody likes to talk about on the show, to me say that 4,800 in the S&Ps will be challenged and most likely taken out.
Oh, God.
Most likely.
He's a technician.
All right, I would
now.
like to give you a 50-50 shot on that. And I would like to bet you $100 between friends. Not going to change your lifestyle. Not going to change my lifestyle. 4,800 it does not get pierced by the end of the year. Would you take that bet?
No, I'll do.
Oh, you said most likely. I was doing 50-50. I was giving you a shot. Let me answer the question in a proper way here, Byron.
If you want to.
I let you talk. Way to back out of his bet, Sosnoff. Byron, we're unchanged. We're unchanged for the year. If you go back and look where we opened right here within 20 handles of where we are right now today, or 30 handles where we are today. Trade what's in front of you. I have no idea what's going to happen. From the way that you're speaking, it sounds like you said you're net long. You're thinking about hedging some of your position. Hedge some of your position.
Yeah.
Well, I don't know what that is for you. Maybe you're naked long stock. Sell a call against something. Sell a vertical spread against something. Hedge an SPY if you beta weight your portfolio. Doesn't matter, but do something to fit your assumption. That's all I can say.
Agreed, 100%. Hey, what I was going to say, Tony, when I heard Scott, is I was going to say, could you make a market for me and Scott to put a bet on 6,600 next week?
That's a little bit, but if you look at like SPX going out to the end of December, it's a 25-ish delta. So it's, the market's 50-50 shot of touching that. So, it's not a crazy, it's 10% from here, which puts us 10% on the year, which is, what the spy, what the market does.
I'm right there with you and Tony, because I feel I've always liked that Mark Haynesian kind of react or
market climbs the wall of worry. When they start coming out and expanding these expected moves to the upside, that's when you get short.
Yeah. I mean,
well, Mark always had this thing he used to say the market was like a tanker ship going through the water. It takes a long time to slow that thing down and turn it around.
Yeah.
It just has forward momentum that just carries it past irrational exuberance. So,
gotcha.
Just my counter to that.
Thank you, man. Thank you.
You guys are the best.
Scott, you're not in studio. You're gonna have to pipe it down. Okay, we're gonna go to Anna.
Because we do that to him. We do that to him on Wednesday. So he's getting back at you now, Scott.
Anatoly in Jersey. Anatoly, what's up?
Hi guys, how are you?
Good, brother. How are you?
Good.
Not so bad. Go ahead, Scott. What are you gonna say?
Oh no, I've been put in my place. I'll keep my mouth shut.
Rightfully so. Go ahead, Anatoly. Good to hear from you again.
The question is really for you, Scott. So I wonder if there is a way to submit 2 credit slides in the same expiration that have 6 legs.
So I think the question's got to catch it, Scott. The question is for you. He'd like to be able to place a 6-legged trade. Right now, you can only do 4 legs. Go ahead.
Correct. We only do 4. So you would have to do that as a 4 and a 2.
I know, but he wants to request you to make it 6.
I understand. It becomes we could do it. I mean, we could program for it. It just would wind up slowing systems down because it becomes the iterations of running through the calculations. It just slows the system down on all orders. And we love how fast our system is. We don't want to do it. So,
okay.
I'm not saying that we won't consider it, but right now it's not on the list.
On the old platform, we used to allow to do blast all.
Yep.
And that would do both of them.
So we are coming out with probably the first phase. It's a multi-phased launch where we're going to have more complex order types. So OCOs, OTOs, et cetera, et cetera. So that stuff will start to come out. We could do a blast all. I don't know if that is on the list. Not hard for us to add it. My concern, with a blast all is if you go out, unless they're market orders, and we hate market orders, and we don't take market orders on spreads exactly for the reason because they could be the fills can be horrific. The problem with the blast all is that the fills can be very suspect.
Mm-hmm.
Okay. So, but I'll talk to the products team about it. Yep.
Sure. There will be limit orders for sure. And more importantly, whether I could submit all of them together or not will margin-wise be counted as one trade.
With margin, or when you're talking about the PDT rule?
Well, no, not PDT rule.
So margin, we're going to give you the margin. It doesn't make a difference if you entered it as a 4-lot and a 2-lot or 2 3-lots or 6 1-lots. Margin is going to be the same once the trade is on. Once the trade is on, I'm not saying that you can pick and choose to do the short first because then you need the money for the short. But net, once the entire position is on, it doesn't make a difference how you put the position on. The margin will be the same.
Gotcha. Okay. Thank you.
You got it, man. Good luck to you out there. Good for hear from you.
Yeah.
Let's go to Dallas. Appreciate it, man. Let's go to Dallas, Texas. I got Eddie. Eddie in Dallas, Texas.
Hey, how you doing, guys? Can you hear me?
Yes.
Yep, we can hear you.
Awesome. So, huge fan, and I've been trading for about 2 years now, and I'm loving it. Thinking about increasing my account size from about 20,000 now to, at the end of the year, 100. Do you guys have any just general advice? Should I keep doing what I'm doing? Spread the wealth amongst different underlying, or increase trade size, or both?
Yeah, so he's asking about sizing up from like a $20,000 account to a $100,000 account.
You don't expand it by a factor of 5. I mean, that's for sure.
I think it allows you a little bit more flexibility with your sizing. You can get into bigger products, wider spreads, more naked
put
positions.
a higher probability of trade. Staying with the same contract size and go with a higher probability of success, like maybe where you were subject to putting on an iron condor because of the amount of buying power that you had. Now you'll be able to do a strangle, which gives you a higher probability of success. You go from mid 50s to 60, 70, or 80 probability of success using around the same amount of buying power in a $100,000 account. You'll be over. You don't have to worry about padding day trading rules because you're over 25,000, right, Scott? You have a $100,000 account going from 20. So you don't have to worry about trading in and out on trades if you're going to go to 0 days or any place else. I think, if you've been trading 1 lots, which I'm figuring that's what you are with a $20,000 account, you can only go from 1 to 2 to ramp it up. And that's a big move, believe it or not. Obviously a lot bigger than 2 to 3, but 1 to 2 will change all your numbers by twice as much. So don't do it on every strategy you do. Maybe if you have, I'll use round numbers, 10 strategies that you do, maybe 3 of those strategies you go from 1 to 2. And the other one, like I said, you go at a higher probability of success using more buying power.
And wider spreads. You don't have to do a
$5 wide iron condor or a $10 wide iron condor. Now you can do a $20 wide iron condor or a $30 wide iron condor.
As opposed to upping the contracts.
Yep. Perfect. That's how I would do it.
Okay. And the second question I had, real quick, is so my background is more in I'm in the defense industry, and I do a lot of data analysis. And I'm 25 by the way, and I've recently been looking at some prop firms. And Tony, you might remember that someone sent you an email about it. That was me. I'm looking into it. I'm really liking what I'm hearing. I just don't have that financial background. I've only got the engineering, design background. So, in your opinion, you guys think you're not going to hurt my feelings, but you think it would be a good idea for me to take a swing at something like that?
I'm missing it.
You're saying a prop firm. You're talking about somebody's going to put money up and you're going to trade? Eddie, is that what you're talking about?
Yeah, it is.
It depends on the deal. So I would be very careful. Make sure that you read all the terms and conditions because I have talked to some people who thought it was the greatest thing since sliced bread, and it didn't work out for any of them. So just make sure, obviously, we don't know what the offer is. I don't know who you're talking to. Just be
And nor do I want to know.
Correct. And I don't want to know.
Right.
So just be careful that whatever they're offering you, make sure you read everything. Make sure you read on what all the expenses are, how they're charging, how they're making money, because they're not doing this pro bono. So make sure that there's an opportunity, a real opportunity for you to make money. I'm not saying that it doesn't exist. Just be careful.
Yeah. And it's a gray area right now. All the like funded trader futures stuff, it is a gray area.
It's a gray area.
Yeah.
Okay.
Read everything. I think is the best thing that I think Scott is 100% spot on. Thanks, buddy.
All right,
appreciate your time. I want to get real quickly.
Before we go to the next call, let me just give a PSA. We had our FINRA call this week on PDT. Ooh. It is very rare. It is very rare for me to ever say anything with FINRA went extremely well, but it did. So I don't have details. I know what the proposal is. Let's just say this. The proposal is amazing. It basically, I'm not saying it's eliminating the rule, but it's changing it in such a way that will have minimal impact on any of our customers. The next stage here, we're having another call next week, and that's to wrap up a couple loose ends. And then after that, the goal from what they said is that it goes in front of the FINRA board in September. It then needs to go to the SEC for approval. The SEC has 8 months, but my guess is they're going to want to push this out ASAP. I think, which is what I've said all along, I think we will have an answer by the end of the year, and then there will be a reasonable period of time for the firms to implement, which hopefully will be less than 6 months. So by spring to summer of next year, I believe that our 8-year battle
comes to fruition.
Will have succeeded.
And we win.
Wow.
Nice, Pete.
That's huge news.
Huge news. Thanks for saving it for the end of the show.
Yeah.
Pete from Jersey, please ask your question. I'll let you go and I'll answer it, and we'll try to get to Liz and Jenny. Go ahead, Pete, real quick.
Hi, Don. How are you? This is Pete from New Jersey, longtime NYMEX, COMEX trader. I got to ask you guys, I have a lot of friends who are big-time option traders. I trade every day a lot, decent amounts. And what I get from them all the time is what you're doing is not a good idea. It doesn't work. And I'll be quick. Let's say, for example, coming into today, options are extremely expensive in Lululemon. I'll go and I'll buy the 330 in the money June 6 put, and I'll go sell out of the money, out of the money, let's say the 275 July 16 or 18, whatever the weekly monthly is.
Mm-hmm.
And instead of paying, let's say, $30 for it, and I sell straddles against these all the time to try to pay for some of the costs of the option, because obviously you guys are selling options, and I sell 90%, but during earnings, I take shots on direction. So I've had guys who made a lot of money trading options. You know some of the names. I'm not going to mention them. And they say, you know, what you're doing doesn't make sense. Now, let's say I do on the Lululemon, if I was to do the June 6th in the same strike, $30 wide, and it comes in $60 lower, I'm going to make my $30 per contract. I get it. It's going to be 1-to-1, but I'm going to pay a lot of money for those options, probably $15 to $20 to do those. So what I do is I throw a lot of stuff at the wall to see what sticks, and it works. But I know that if I sell, let's say, if I buy the June 6th and I sell the July 18 options, I'm not going to make as much money. I might make 25, 35% less. But I could trade a lot more because I'm not putting up the same amount of money. And it makes exactly what I did tonight. Unfortunately, I sold the 275 puts and the, the 4-something calls like a Sosnoff trade to recover some money. And they didn't work great. And that happens, 10% of the time. Your thoughts, and why is that a bad idea?
Are you doing this today or you did this yesterday?
No, I do it the night of earnings. So let's say I'm sitting there looking at the...
I got you.
I love your platform, but I don't use it enough, unfortunately.
It's okay.
I look at the 30-day intrinsic versus historical. That's what I look. If I see juice, I'm selling options usually. I don't like to buy them.
All right, so I'm going to answer
it.
it. I'm going to answer it real quickly for you. I don't have any problem with what you're doing. I have a problem with the stock that you picked, Lulu. The bid-ask differential between the bid and the offer was just way too wide to put on any type of trades in Lulu. You want to do that in Apple, or you want to do that in Microsoft, or you want to do that in any other stock that has relatively tight bid-ask, do it. If you must trade Lulu, please do it on the call side. As the puts in the money puts will end up being so wide in the next. Well, anything that's going to be that moves is going to be wide. So again, I'm going to go with liquidity. What do you?
I didn't really totally follow what we're doing. It sounded like sort of like a ratio or a diagonal spread or something like that. So I like that. I typically do them back month, front month. I think you're buying front and selling back.
I'm not going to tell you.
But if something works, man, like as long as your size is in check.
My answer is really different. My answer.
Go ahead, Scott.
I trade action reaction, and my directions are very good.
Okay. That's fine. Then you.
Okay, so my answer to you is: who cares what your friends think? If it works, keep doing it.
Yeah,
and maybe keep your trading strategy. Keep your trading strategy and get new friends.
That's right. Yeah. Perfect.
They can't spend your winnings or take your losses.
I love that. On that note, let's close. Get new friends. Keep your strategy. I love it. We'll be back in 90 seconds. We got more Tasty Live with Liz and Jenny. Sorry, I went too wide. Thank you. Peace.
Thank you.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 Live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Everybody, and welcome to the Friday edition of the Liz and Jenny Show. My name is Liz Deerking, that beautiful brunette. To the left of me is Miss Jenny Andrews. How you doing, Jenny?
Great, Liz. How are you? Made it through the week.
Wonderful. We made it through the week. It is a beautiful Friday. I am excited for the weekend. And what a wild market ride yesterday and today.
I know. What yesterday at the close, I was getting a little nervous, thinking, geez, are we going to get some continuation of this down move tomorrow? So to say, up 67, is that up 72 is a surprise? It certainly is. Certainly is.
I mean, I don't know. I thought I actually went in yesterday and started buying a couple things.
At the end of the day, when we had that fall, I thought, I was worried about some of my weekly puts. I'll tell you that.
Well, those weekly puts will get you. Can we jump in the platform? We've got a lot of stuff to do today because we've got Kai's weekly recap. We want to manage some positions. We are going to be taking live tweets. Put the hashtag LIZJNY. And then we also brought back Jacob studies so that we remember what we're going to do on Monday.
We kept telling ourselves we were bringing it back on Friday, so we know what to do on Monday. Hopefully this will drill it into our brain and we won't forget.
Yes.
Yeah, so we have a busy show. We are taking live tweets. Send us a tweet, include the hashtag LIZJNY. We don't think that Frank is there on YouTube today. So if you're on YouTube,
yes, I think he is doing something. But I will tell you, the one thing that I did say is pattern day trading rule is 25,000. That's the one thing I'm going to answer because I can kind of glanced up there, but I'm running a bunch of things. It's hard to answer while you're doing the show. But pattern day trading rule, Sergio, is $25,000.
You've got to have at least $25,000 in your account, right?
Yeah. Okay, Jenny, what do you want to do first? You guide me because I'm running all the computer systems. You tell me where you want to go first.
All right. Why don't we pull up the platform so everyone can see it? And let's take a look. Let's take a look at Circle, CRCL, since that we were looking at that yesterday. It hadn't opened yet during our show. 106 now. Geez. You bought some. I bought some around 80 yesterday. What price did you get in yesterday?
72.
Oh, that's good.
Yeah. For some odd reason I got in around maybe 75, maybe 75-ish.
So I think I got in right around 80, but I sold it this morning.
So it halted at 88, and I was like, oh God, I got to get in. I was like, but I'm not going to try to buy it at 88. And then when it opened back up, it gapped back down to in the 70s, and that's when I got in. But yes, this is something to keep an eye on. We do not have options yet. They will be coming up soon. I believe it takes about a week or so. And then It's so funny because my eyes, keep in mind, I am still going to the Mayo Clinic for my left eye. But when I look at this, I see Oracle.
Oh, yeah, I can see that.
I was like, Oracle.
They'll have options soon. They'll have options soon. It doesn't take long. I'm hoping like by end of next week. So, I thought I'll take my quick profits and I'll wait for options and then I'll start selling puts if I feel like it. Sure. But I wasn't sure if I was even going to get in. But when you texted me that you bought some, I was like, I got to get in too. But now I'm out. I don't know.
We go down together. I like it. The other thing I wanted to do real quick, we were talking about this before show, HIMS, 41%. It is in the 14-day. What say you, Jenny Andrews?
I would say, okay, we'll take our $100 in HIMS and look at July. Look at, what can we do moving out to July? We can see buying that back. We're getting $500 in buying power back. If we sold the same put in July, which is pretty close, we're at the 50 put.
I don't know that I want the 50 put in July. I would like to close that and go to the expected move, right?
Sure.
So we're going to close this one. Let's go to July, open up the July options. And honestly, let's just go with like a 25.
45.
I mean, we can go with the 45. We're getting additional premium. I don't mind if we bring it up and go with like a little bit higher of a delta. We got 220 the last time. Get another $1.
Sure.
But 45, we're still taking in 78 cents. And we get back a little bit of money. I'm just going to go with the expected move. This is where we would start if it was a fresh set of eyes anyway.
So our strike is moving from the 50 to 45, much better strike position, and we're taking an additional credit, keeping the HIMS position going.
HIMS and hers, had no idea. These are all new products. So like you look at this, the IPOs have been, didn't this IPO recently too?
Yes.
No, I guess not.
No. Well, how long ago?
A long time, years ago.
I just feel like their big coming out was the Super Bowl was it this year's Super Bowl or last year's Super Bowl?
So this is it IPO'd in 2021. So we're 4 years late to this party.
But I think like they really were bringing awareness to the company when they had Super Bowl ad, Super Bowl ad, Super Bowl ad, Super Bowl ad. And I can't remember if it was Super Bowl 2025 or Super Bowl 2024.
No, I can't remember either. But nonetheless, that's how good our memories are. But I just want to show you the other IPO. So take a look at this. It's not, they don't all go straight to the moon. You watched this happen in Webull. It traded all the way up to here, and then it came right back down to its IPO price.
It got almost to 80. Do you see that? The day after, so it IPO'd, the day after it got to 79 and now is 11. So you're right. They don't all just go straight up.
No, but I do think I'm not saying this of all of them because I'm sure there's different things, but that you do get like a little initial excited boost, and that might be what's happening in CRCL.
And go back to CRWV and see what happened to that. Like if it pulled back after its first few days, and then it's climbed, but it wasn't like every day. Yeah, you see it kind of popped up and then pulled back a little bit
to its IPO, and then it started its descent. I mean, it's very similar to what happened in Meta. Meta popped on the Facebook when it IPO'd. This was years and years and years ago. Popped, then came screeching down and was down for a very long time. And now it's just...
Yeah, I mean, that was back when it was 20-something, 28, 38. I don't know. I can't remember.
36. It was 36, Jenny. 36. That's right now.
36.
Okay, anything else we want to manage before we get into one of these studies? We did HIMSS. Is that... I don't think it... I'll take it down. Oh, no, I'm just going to leave it because we're not in any rush to get out of that. If we get filled, great. If we don't, great.
Okay. I guess the question is, people, and I've seen a bunch of people on Twitter. There are people on Twitter doing the 0DTEs. We've been putting on that 0DTE every day. Do we want to put on that 0DTE today? Yesterday, yesterday we put it on and we never got out. I don't know exactly where SPX closed, but it was probably a full loss. But if you go to, so here's our order chains. In the last 30 days, we're still up. Now,
a lot.
Okay, so here's my question. Yeah, okay. So that's my question. Are we looking at total P&L? Is it the 845 or 1960?
No. The last 30, it's this 845.
What's the 1960? What's that?
I don't know. I don't think this makes sense because yesterday. Oh, look at this, Jenny. It's what we sold it for. So we've sold. This is our P&L. We're up for the last 60 days. And here I'll go to the last 30 days. There you go.
So, okay. Okay. So anyway,
I don't mind. So I put it on this morning. I put it on at about 9. Here, let me just look at mine. I put it on at about 9:23 this morning. And
but is that what you did? Did you do just that like $10 wide?
I did. I separated it. It's pretty funny because it's the exact. I separated this by a tiny bit, but just because we were trading like 6,007. So I did the 605, 610, and I sold it. I'm about to be out. I sold it for like 8 something. 820, 830. So now we can go, if we want to, we can go to.
Yeah, we're trading 605. We'll just follow Jacob's study.
Yeah. 840, 835.
Yeah, ship it. I don't think you're going to get 50, but.
I know. I tried to hit it as fast as
I don't think so.
So in order of operations, because we have that in, let's go to Jacob's study.
Okay, perfect. Because this is the study that we kept referencing about. Mondays. So put a GTC in for this, and then we'll hop into Jacob's study about what one of the trades had the best results on Mondays. And so we're going to take a look at what they are. And then from that study, we'll come up with a new trade for Monday. It's going to be my Monday trade.
Mondays. Hold on, I got to see if we can get there. Okay, here we go. This is Days of the Week with 0DTE. This is a market measure sponsored by the SIBO. We did this a couple weeks ago. We did it on the Wednesday before Memorial Day, which is why we wanted to go back and redo it because the first Monday off was Memorial Day. Okay, so hold on 1 second. Let me pull my mouse down. Okay, we don't need to go through the whole thing.
We don't need to go through. We can go to the chart on Mondays. So Days of the Week. So we're going to look at these different charts. So this is short 40 delta.
And that's basically what we're doing, the iron fly. So that it's separated, right? So I'm just we're gonna go look at this.
Wait, how wide are the wings? I know he's saying short 40 delta, but how wide are the wings? I couldn't remember.
$20.
Okay, consider selling 0 DT with short strikes at either $40 or $20 to long strikes $20 past there. Okay, so $20 wide wings. $20 wide wings.
Wide wings, 40 delta. So let's put that into perspective right now. So that's not what we did. If you're going to sell the 40 delta, you would be separating them. So it'd be very similar to what I did. And then you're going to go $40 wide. So $20 wide. So you'd go right, and that's it. There's your trade. The 40 deltas, which will be separated a little bit.
You know what is insane to me is that the 40 delta put is actually in the money.
I know, it's crazy.
Yeah, I'd move it down. I'd move it to the down.
No, I know. I'm just following the deltas right now, and the deltas are moving pretty quickly, and they should be as everything changes. But so 40 deltas, $20 wide. That's the premise we're working under. And then we looked at either the 20 delta or the 40 delta. So there we go. So there's your 40 delta. The 20 delta would be down here where you're selling the 20 delta, $20 wide. There we go. And then the 20 delta, $20 wide would be there. So you're getting about 490. So those are the two trades that we're looking at. Okay, sorry, wrong way. Okay,
so let's look at these results. So on Monday here, take a look at the average P&L. Monday won by a long shot. This is the 40 delta shorts, $20 wide. And this is what we thought was shocking, the difference in the P&L between every other day of the week and Monday.
Correct. And then let's take a look at this too. You go to the 40 delta sold at 9. So the first one was sold at the open. The second one was sold at 9, and it's even better.
Yes. 40 delta sold at 9 a.m., $20 wide wings.
Correct. Now,
I'm going to write this down. So on Monday, we're not like, what was that?
Well, so the other thing too is we're mixing and we're adding strategies because we're doing the iron fly, which Jacob did. That's the one where it says how many days to recover if you get a full loss. So these are bigger. These are bigger with their conditional value at risk. You have $1,000 in risk. Ours, that trade we just put on, has $145 in risk.
I know, but people have different size accounts. We have a smaller account. So after we did this study, I had been putting on $20 delta wings, $20 wide. But those were, I was risking, $1,500, $1,600, remember, collecting and I talked about that. I was only collecting $4, $4.50. So, taking 25% out of it, I was only getting a little over $100. And same with this iron fly that we're doing, which only has $200 in risk. And we're taking almost $80 out of that. So we kind of went with that one for our account. And I'm not sure which I prefer.
I know, but this is great to see. So this is why we wanted to bring this out. Now let's take a look at this too. Even the 20 delta short, which you're collecting $4, you're getting your average P&L is $83. Monday kicks everyone else's butt on everything. So it's either, write this down, it's either 20 or 40 delta and $20 wide. Now, Jacob has these being managed at 25%. Hold on, I'm going to keep going backwards. It's not.
Now, the best one was...
And so look, all winners were closed at 25%. We're taking the iron fly and we're taking 10%. All these winners were closed at 25% or allowed to expire.
Okay, and go to the best results. The best one was, keep going. This one, right?
The best, in my opinion, the best results are 40 deltas 9 a.m. 40 deltas $20 wide 9 a.m.
This one, sorry. As you were scrolling through, I think there might have been a delay when I said this one. The one $121. That is, and I'm writing this down. 40 delta shorts. 9
a.m.
9 a.m. $20 wings.
25%.
$20 wings. And 9 a.m. 25%.
And 25%. So
what I would like is him to take this Monday and see, 10%, 20%, 25%, 30%, mix the, profit targets and see what results reap the best.
True. Yeah.
Because he can't test everything. He's like going through and testing every day of the week, and he's just testing 25%. He wasn't testing different profit targets. He's got to set some limits.
You have to have some parameters in there, but we brought this study back. We don't need to dwell on this. It's been done 3 times. We did it once, the boys did it once, and now this is the 3rd time. All these slides hopefully will be archived into both of our sets, because I know these slides are already on our in our on-demand section.
On our old show. We just didn't want to forget for Monday. So our show starts at 10 a.m. So we're not going to put this on at 10 a.m., but
no, but I why we do, and that was the following one.
Yeah.
So we have a littler account, and what we don't want to do is risk $1,000 a day. That's not something that we can do in this smaller sized account.
No, but I'll put this on Monday and let you know how. Then I'll check in it during the show. We'll if we put these on at 9 a.m., we can check in on how it's going.
Yeah, for sure. Okay, so then that was that study done. I'm going to clear these out. I want to take a look at things.
Look, Spoo's only up 53.
I know, crazy. Which is bonkers because my SPX is still up money.
Well, on the open we weren't up. You didn't put it on. You didn't put it. Yeah, you didn't put it on the open.
We were up 67 when I put it on, and we're only up 53, and I'm still up $25. Crazy, right?
Yeah.
Okay, so I think this is good. Let's pop into Twitter before we go to Kai's study, and we can kind of bounce back and forth. So here is Twitter, and this is Ketan, Ironfly and SPY in and out in 3 hours. So this must have been
that was the 5th. So yesterday, right? Yeah, yesterday. So good.
So yeah,
and his strikes, and he's got an Ironfly. He had the 59.70, so he got in and out. He had a $10 wide Ironfly. He got in and out. What did he take? He 10%. Took 10%.
Yeah, that's what I'm saying. So that sounds about right. It usually is a couple hours for those. It's not the Jajun trade we're in and out during our show.
But 3 hours is pretty good. He got lucky.
It is pretty good. Okay, Jack Tucker layering one more tranche, collecting an additional 58.50, bringing the total for today to 17,150. P&L chart right now. Oh, he's in great shape.
Now, Jack Tucker had sent a previous just saying like he wasn't jumping all in earlier. He started smaller than usual. There was an earlier tweet from Jack Tucker. Yes. With vol decreasing, let's start with 2 tranches. So here's where he started with 2 tranches, and then he just added more to it.
That's amazing. I love this. I love looking at this. And he does it on, I wish the time here. Yeah, 8:53, just before 9 o'clock.
Mm-hmm.
And he's $25 wide, right? At $25 wide.
Mm-hmm.
Pretty good. I love it. Okay. And then Eric, just because I want to make sure we get to everybody. So that was from 18 hours ago. This is Frank. Frank the Great comes in with all of this stuff. It was interesting. It was the 730 number. It was the unemployment rate.
Unemployment number.
Yeah, that made the market jump. So that was good. And the boys did a great job today. Bat versus Bat. They did a wonderful job. I like watching them.
I love when it's Tony and Nikki. I love when it's the father-son show.
I know. I think there's something really special about the father-son show. I really do.
Yeah.
Okay. So then we have that. We got to Jack Tucker. Oh, no, Eric. Happy Fab Friday.
Happy Fab Friday, Liz.
2 6-lot tranches, 75 points in the 16 delta, 40-point GTCs with caution as we seem to be climbing. So yeah, that was this morning when you put it on. Now we're right back in the middle of your area. So this is great because SPOOs are still 6,000. So it's right here.
Right. Okay. It's right there where it was when you put it on.
Yeah. Perfect.
Or when he took that picture.
Or when he's right. Okay, then Jack Tucker's there. Okay, then Ajit comes in. Names of the highest IVR IVP this AM. Adobe, AVAV, not exactly sure what that is. GTLB, Nike, Restoration Hardware. This is not the list I would have expected.
But I will say Nike and Restoration Hardware have been on the list lately. They have. And I don't know, did we look at Restoration Hardware the other day when it was on the list? I know it kind of stood out to me, like what's going on in Restoration Hardware. Maybe it had a big fall in earnings, or I don't know.
Yeah, that's had some pretty big decline.
I mean, look at that, from 450 down to 180.
Yeah, that's a big fall.
But I think I would look at selling puts in here, but I think A, it holds a lot of buying power is my guess, and B, and they still have earnings coming, and B, it's not that liquid.
$8,000. How many stars is this? I can't get to the stars, can I?
You'll have to. Oh, there we go. 2 stars. Only 400,000 shares have traded. The markets are kind of wide. There's not a ton of open interest, and the buying power is insane.
That's bonkers. Yes. So we looked at that. Oh, you know what I wanted to look at? AVGO. We never got filled in this yesterday, but it's down 3%. I wanted to take a look at that. I know all the earnings were down yesterday. Lulu is down.
Oh my God, Lulu was
20%.
Thank goodness ours was just a little defined risk trade because Lulu was down $66, way more than the expected move. I don't remember where our strikes were. That was the expected move.
Our break even was at the expected move. Why can't I?
Yeah, right. So we were around the expected move, and our strikes were the 310, 307, 302.
So you got to figure our strikes were like the break even was 305. How about that? That's a fair assessment.
That's fair.
305. So you're $55 beneath, $50 beneath your break even, $45 beneath your break even. That's crazy. But all of them were down. You saw DocuSign. You saw AVG was down. You saw Lulu.
Oh, went to DocuSign. I don't know. Down. I didn't look at DocuSign.
Down 20%.
Ooh, down 17.
Yes, that's what I'm saying. These are all down, way out of their expected move.
Do you know how mad I would have been if we sold those puts in DocuSign and it's down 17?
I know. Everything. Yeah. And so it'll be interesting when we get, next week when they talk about earnings, because it's been 50% up, 50% down lately. I'll be very curious to see next week when we get Kai's study about earnings.
In July, how far can you go and what can you get puts in DocuSign? I'm just curious. With it down 20% today, and the 70 put is going to give you $1.40 and uses $1,000. That's not terrible.
It's not terrible. I don't know that I want to do that. I want to wait 3 days. I want to wait 3 days for a big down move to make sure that it's done with its down move.
Yeah, because last time we saw a big down move in DocuSign, it continued to drop.
Oh, yeah. Look at this. I mean, you saw a down move and then it just continued to fall.
No, go back to the real painful one. The real painful one. Yeah, there it is. Yeah, that one.
And then it continued to fall. And even this, we waited 1, 2, 3, 4, 5, 6, and then it continued to fall.
No, it wasn't even that one. Go back a little further because it was worse. It was worse. Go back to when DocuSign was like 100.
This? 75 to 50?
Maybe it's that.
It felt worse than it was. But look at these. It's got big moves. Here you go.
No, yeah. It's that one. It's that one.
240 to 140. And then it went down to 75. Okay, we're not.
I knew. It's like one of my biggest losers, and when the other numbers, I'm like, that's not adding up. That's not adding up. It was this one.
That's not enough. I've lost more. That's not enough. I lost more.
It was worse. It was a lot worse.
Yeah, so we are not going to take a look at DocuSign. Okay, we're gonna put a pin in that. Okay, let's pop. Let's get it to everybody on Twitter. I really appreciate this from Ajit too. And then what do we have here? Because I know I glazed over it. I didn't want to do that. Oh, Ajit comes in with this Adobe play from earlier this week. So they had Adobe earnings. Great. Hopefully it works for him. He's right in the middle of his sweet spot.
All right. Well, thanks, Ajit. Oh my gosh. Happy Friday, ladies. Pool ducks cute until they start fertilizing. Luckily, Paris Hilton, my Shih Tzu.
Oh my God, I love that your Shih Tzu's name is Paris Hilton.
Oh,
needs to meet Will Ferrell. So my dog's name is Will Ferrell. Your dog's name is Paris Hilton. Nothing makes me happier when you have a two-name celebrity name for a dog.
That's so cute. I'm looking for a really bearish trade. And when I say that's so cute, that's your dog, Paris Hilton. That's not Tom on the duck.
Oh, that's so cute.
Oh, that's so cute. Looking for a really bearish trade on Roblox. Okay. P.S. Do the JT trades really make money? Do we know? What are the JT trades?
I don't know.
What are the JT trades? What do you think that is?
I don't know, but listen, Jenny Forever with this cute little thing here. Let us know what the JT trades are. We should probably know this, but I don't know. But let's
let's look for a bearish trade in Roblox.
So Roblox has been up and up and up. Have you looked at it lately?
No.
So Roblox is 95. Take a look at this.
Whoa. So if you're saying like really bearish trade in Roblox, I'd look at it put zebra.
Mm-hmm. Hold on one second.
What are you drinking there today?
Hint. This segment is brought to you by Hint.
But usually they're clear. What'd you put in there?
Oh, a Zip Fizz. I always have a Zip Fizz in my water, but I couldn't find a regular water bottle. Okay, really bearish Roblox trade. Now, I kind of agree with you. If you're really bearish, you're going to want to go zebra. And you can make it a wee bit cheaper by, let's do.
I mean.
So it's going to be $1,600.
$1,600.
You could probably make it 14. This is, I mean, it's a little bit, but this is really, if you think it's really bearish, you're willing to pay $1,400 for this.
A cheaper version would be a put diagonal. But
put diagonal would be buying the 100 and selling. I mean, that's not bad. That's not bad. But you can only make $400 here, Jenny. So if you're really bearish and you think it's going to go down $12, I'd stick with the put zebra.
If you're really bearish, if you are really directional in something, I like the idea of the zebra. I was kind of mad this morning when we took the fact that I took off the IWM zebra yesterday. It would have been a lot better today, but I don't know, because the market kind of fell yesterday after our show.
I think we're back where we were. Let's take a look.
Yeah,
at
we
what
might
took off. I'm being serious because we were down a lot at the end. Hold on. IWM, let's see what we closed. It was the 201, 209. And it was
in the 42 day.
Yeah, look at this. I mean, well.
We were probably trading 210.
Yeah.
And we took it off for 17. It was 17 something. I guess it's a couple $100. Took it off for 17.20. It's almost 19. Another $180.
It's not.
Whatever.
It's not too bad.
It's not like crazy.
Yeah, it's not like it's gonna. This won't keep you up at night.
You know, the TLT zebra we took off yesterday. I think we could put that back on because we took that off and with TLT down today.
You didn't take it off. You didn't take it off.
Oh, I thought we tried to.
You might have tried to, but it didn't work.
Okay.
So TLT we got on. I think we took off ZB though. I think that was the one thing we took off.
No, I think we're still in that too. I think we tried to take.
Yeah, we're still in that too. Good news. Good news, Jenny.
I think we put in an order to take off TLT, but we just didn't do it.
Good news. We're still in bold. Okay. So, I mean, honestly, we're Spoozer up 53 right now. Let's take a look at the VIX. I just want to take a look because I think the VIX is like the leading indicator. So VIX is down. Wow. And we're only up 53. I would have thought we would be up more because this morning, the VIX, when we were up so much, hold on, the VIX opened at 1816 and the high was 1835.
Yeah. So this, I guess what the VIX is telling you is just like market's fine. Disregard the little sell off at the end of the day yesterday. And yeah. June is going to be smooth sailing.
Woo, smooth sailing. Okay.
Who knows?
Let's go to Kai's study, don't you think? I'm going to go through this.
Sure. Yeah. This is like a recap. Kai sends us the weekly summary. We ask for the takeaways from the week so we don't miss anything. So here's a weekly summary of the market measures. These market measures are sponsored by the SIBO. We love the SIBO.
We love the SIBO, and I want to give a big thank you to Kai because we super appreciate getting this because you and I don't want to see, we've been trading for so long that I don't want the details. I just want the takeaways.
I don't need to know every in-depth, like, of the middle of the studies. Although sometimes we see a takeaway and we say, yeah, we really want to see that study. Depends. But most of the time, just tell us the takeaways from the week.
Correct. Okay. So moving forward, here we go. How bad are strike breaks? Okay.
I'm assuming when the underlying goes through your strike.
Like, let's look at Lulu. That would be bad. Like, that's a bad one.
Yeah. We had a very defined risk trade, $210. We lost.
Yeah, and that's why I'm glad it was defined risk instead of just naked puts in Lulu. But I'm telling you, Jenny, Lulu has my number. It always has, and it always will. I like the products. That stock gets the best of me 90% of the time.
Yeah, but you got lucky.
I did not trade it yesterday. I actually had a short put in the 300 short put because I thought I was smart. And I closed it for a $40 loss at the end of the day because we were down so much. And I think a lot of times when you're down, earnings follow, right? Bad news is bad news. Good news is good news when the market is moving.
Hey, I took off my CoreWeave puts yesterday because in the end of the day when like CoreWeave was down 30 and the market was down, I'm like, I'm taking these CoreWeave puts off. They haven't changed much. And I got out of those because I got a little nervous about them.
Well, they're not moving. They aren't. The vol is staying high and you're not getting paid in either direction with the CoreWeave, which is bonkers to me. Okay, but let's go. Let's follow along with this. So how bad are strike breaks? Selling options takes in premium and accepts risk.
In general, an out-of-the-money short option position will be a loser at expiration if the strike is broken by the credit received or more.
There we go. That's true. Obviously, having a strike broken during the life of a trade is not a good sign for the short out-of-the-money put trade. But how bad is it really?
Let's dive into the data and see how positions performed following a strike break. So we're not going to dive into the data. We're going to look at the takeaways. So let's take a look. If you're short options with broken strikes, don't panic. Analyze the situation. Not all strike breaks are created equal.
That makes sense. I'm going to tell you this. Next time your strike is broken, I'm going to be like, don't panic. Analyze the situation. Okay. Broken call strikes may call. Oh, I like this. Broken call strikes may call for an adjustment. They were generally only recovered from if we had the fortitude to stay in the position and all the way until expiration, which means possible exposure to large losers. For traders who like exiting early, there may not be much reason to stay. You know what this tells me? It's calls. It's calls. It's calls. Because that's why we invented the Jade Lizard.
Yes. And honestly, I could tell you, I could open up my platform now and I have a lot of in the money signs, in the money, in the money, in the money, in the money, which means I have broken strikes, but there's not one short call in there that's in the money because I don't have naked short calls.
Yeah, exactly. And then look at this. Read the next one. That's your job spell.
Broken put strikes were much less bad. Increased volatility.
It's the Jade Lizard. That's why it's the best trading strategy this side of the Mississippi.
Yeah. Increased volatility from falling SPY meant that the broken strangle could often be brought back for a profit. And staying in the position. Yeah, go ahead, Liz.
No, go ahead.
Staying in the position until at least 21 DT turned even challenge positions into overall winners. And because most of the time when we see a down move in the market, we pop back up. Now, that might not always happen, but that's what we've seen in the last, 15 years, as long as Tasty Trade has been on air. Tasty Live has been on air.
Well, it's 100% true, Jenny, because if you take a look at it, time marches on. The market always is higher from where it was 3 years ago. You want to look at SPY from 3 years ago? You want to look at SPY from 7 years ago? The answer is yes. It does have a positive drift. Are there up and down moves? Yes, but at the end of the day, always seems to come back. Naked calls scare the bejesus out of me because you look at Meta. Say you sold the 40 calls in Facebook. The Facebook is $500. There is no cap to the upside. Do you know what I mean?
Usually, the naked calls scare me because if we get burned on naked calls, you don't know how high it's going to go. And what's the alternative? For me, naked puts, fine. If I have to take the stock, I take the stock. If that stock goes into my account and sits there for 20 years, it goes into my account and sits there 20 years. If that stock is getting willed to my children, that stock is getting willed to my children. But with the naked calls and then you're just short the stock, I don't like that.
And we're not saying, and I want to be crystal clear here, crystal. Jenny and I do have bearish positions on. I will put a bearish position in my account, but it's going to be more like the Roblox position where it's a defined risk bearish position where if you're going to put it in, you think you're bearish in something, I would prefer it to be defined risk.
And I sell calls, but I sell calls again. I sell, calls against my stock, or I sell, if I want a bearish position, to your point, I'll put on a put zebra. If I want more of a naked call position, I'll just have a defined risk.
And I know great traders, even Tony from Mexico has sworn them off. I mean, he has sworn them off. You just have to get a little bit more creative with your bearish positions. Nothing wrong with it, but to your point, I do sell strangles, but I do it with stock.
Well, look at CoreWeave. Look at CoreWeave, for example. I mean, that thing went from 38 to 138 in a month.
Yeah.
You just have these. I remember when I sold the 135 calls in Boeing, and Boeing ran to like 400. Yeah. How long could I keep rolling those calls? Or don't you remember the midnight put seller when he's like, yeah, I got these short 205 calls in Apple, and Apple was like 300 and something. Like, how long can you keep rolling them?
You can't. They're harder. Okay, so I did like this one. I appreciate Kai for this one. But it says, as long as each position is reasonably sized, which we can be willing to take the risk of sticking with positions, even if the strikes get tested. But I'm telling you, Jade Lizards are the best way to do it because then there's no risk to the upside, but you're still taking in some premium.
Right. And it's the Jade Lizard, if you want more premium, if you want the premium of a naked call, you can sell a wider spread. It doesn't have to be $1 wide or $2 wide spread. It can be a wider spread.
It can be a wider spread.
It just kind of protects you from these up moves.
It can be defined risk. Okay, Jenny, I think this next one's for you. I did not read through these, by the way.
Why weekly options are tricky. Love it. Can't wait to hear it.
They've been listening to Jenny say, I want to sell weekly. And then all of a sudden there's a market measures on why weekly options are tricky. So this should be interesting, Jenny.
All right. On paper, weekly or even shorter duration options can provide superior potential daily return on capital than longer cycle ones. The rich daily theta decay and largest loss makes them extremely attractive.
So how's the weekly options long-term performance compared to our go-to 45 DTE strategies?
Now, I will say most of the studies that the research team does use SPY, right? And if I'm trading weekly options, it's usually in individual products that, again, some of these options kind of depends on the product, but we've been watching it with CoreWeave where those July options kind of didn't matter what the stock was doing. They just weren't decaying, where it's like you almost needed the shorter term ones to get out of them, to get the decay out of them.
Even if you're getting the movement you're looking for. Like I said, CoreWeave is a different example.
Product. If it's different.
Because we watched the vol come out of CoreWeave with the down move, not the up move, which was crazy.
And pop into the platform for a second, because I just want to show an example of.
I got to get there. Okay.
Because they also did something today, and maybe this is today's. They did something today. The boys went over something today about, and I'm just going to have you go to DraftKings just because. We don't need to dwell on CoreWeave. It's a different type of product.
Well, I'm glad you brought up DraftKings because I have to do something. I've been meaning to manage this. We have a long option in the money.
Oh,
so finish what you got, and then we'll manage it.
Okay, so when they talk about, your risk is so much more, just open up a 0 DTE. Just open up the 0 day,
day. You got to go to the 7. You got to go. If you're weekly, you got to go to the 7.
This is just all I want to say. Like, so if I have puts that are in the money now, let's say I have the 36 puts, okay, or the 36 and a half, and I have to buy those back, right? I have to buy those back and roll them out. So if I have to buy them back and roll them out, and I roll to the same strike, I'm getting 46 cents. So I know that
you can roll down and still get a credit.
So basically, if you're going to roll sooner, and you can do the math in your head and figure out what's your extra risk by not rolling sooner. Like, I guess if you want to compare the 21 day, like if you want to compare a 21 put to the 42 put, the difference in price in those puts is the risk you don't have. So if the 35 put in the 21 days $1.09, and then in the 42 day, the 35 puts $1.60. So 50 cents difference. Like, I know that's my risk. If I'm not going to roll it to the 42 day and I'm going to keep it at the 21 day, I know I'm taking 49 cents extra in risk. So like, you could do the math and in your head know what's my extra risk by not rolling.
Take a look at this. I mean, right. If you did have the 36 and you had to buy this back, you rolled it out to the 36 and a half, you're getting 45 cents in extrinsic value, and you're getting it in 7 days. But I do want to be clear. This is different. You're not doing it in SPY. This is something that you want to get long. You're going to be aggressive with your puts. It's a different trading style.
And it depends on each individual product. Like, it's a case by case basis, because those puts today that we rolled out, that we rolled from June to July, and we moved our strike down by $5 and took in another credit that was in HIMS, like, that made sense. That did take off a lot of risk. We moved our strike by $5. We took in extra credit. So do the math there. That's given us $6 extra in room. That took off a lot of risk. So in that scenario, it does. In some scenarios, it doesn't make that much of a difference.
Okay, but I think it's great. I love the tasty mechanics, and the mechanics are loose-based guidelines. And I think it's a good starting point because, Jenny, you and I have been trading for so long that we understand the nuances of saying, well, I'm okay with this because we're also actively trading. Where some people, and a lot of the tasty mechanics are for people who are like, just give me the guidelines. I want to do this myself. And in that scenario, 45 days till expiration, you roll at 21 days. It's a good mechanic. It is. It's a fantastic mechanic.
And if we're selling SPY Jade Lizards, if I'm selling IWM Strangles or Jade Lizards or SPY Jade Lizards or whatever, then yeah, I'm taking those at the 21-day mark and I'm moving them 45 days out.
We kind of talked a little bit about this as well. So we looked at CoreWeave and we looked at the CRCL and all those IPOs. Well, those are just little trades. They're not a core position. Like, if my core position was selling puts in IWM or selling Jade Lizards in IWM, I'm 100% following these mechanics. So if I'm in SPY and I want to have something in my account, which I do, like, I've got general market ETFs in my account, and I don't look at those like, I need to weekly. ETFs, right. Especially, I put them on 45 days out, and I mechanically look at them and roll them at 21 days to expiration. And I want to be crystal clear about that. But that's like a core position trading strategy, right?
Yes. And if, let's say, because I know for a while you were doing like weekly puts in IWM, but then you get a big down move and you see the added risk in those weeklies versus the 45 days, how much room it would have given you. Like, you saw that firsthand, the risk that the added risk that those like weeklies have compared to further out in time where your strike would be much further.
And then you change your trading strategy, right? So now I'm still in there. I'm still in IWM, and I've been mechanically doing it. But it's the same thing as if I say this all the time. I would rather be short the put than long the stock. And if it's a stock that I'm willing to take, being short the put is being long the stock at a better price point.
Right. Yeah.
Yeah. So in IWM, I still do it. It's one of my bigger long positions. But yeah. Okay.
Okay, so we didn't even read we got all fired up and we didn't even read the results. All right.
No, these are the takeaways.
Weekly options bear tremendous risk due to their extremely short duration, making them hard to manage. When it says tremendous risk, again, the risk between a shorter duration and a longer duration is the less credit. If you're comparing strike to strike, it's the difference in credit. So if it's strike to strike, 50 cents different in credit, then it's 50 cents added risk.
Well, and you know what's crazy is I do think the 0 DTE options have given us like a lot of things to think about, right? The 0 DTE options, because we're talking about weekly puts. The 0 DTEs are gone. And we talk about this all the time with those 0 DTEs. If you take the 1 day and make it a 45-day cycle, so managing it early becomes less effective for short. So if you take a 7-day and make it 45 days, then halfway through the week, you're supposed to roll it out to another 7-day. And that's effective.
And I do remember studies in the past where if vol's high, shorter duration is okay. And it used to be if vol's low, how do you thwart low volatility? Go further out in time.
Because you're getting a bigger credit.
Yeah. So
food for thought. I love this. I love Kai's discussions.
Yeah, okay. I do like it.
Oh, this was today's, wasn't it? Bravery or foolishness?
Oh, this is the holding past 21 DT. Are you brave or are you
foolish? I saw
foolish?
this because I glanced at the boys and I saw bravery or foolishness. And I was like, hey, they're taking my talk. Do you remember? I was like, is this confidence or stupidity? That was my question. But they're saying bravery or foolishness. Mine was, is this confidence or stupidity? Let me answer.
Right. So, I mean, maybe we're going to read all these lists and I'm going to go switch all of my, I had, Yesterday, at the end of the day, it was not looking good for my weeklies. I had a lot of in the money signs. And so today what I'm going to do is I'm going to take all my little red in the money signs and maybe I'm going to move them all out to 45 days. I don't know.
No, but sometimes you'll move them to 15 days. Sometimes you move them to whatever. If you know the rules and understand the mechanics, it makes sense. Okay, now let's take a look. Holding past 21 DTE. Confidence or stupidity? That's what I'm going to say.
In our research segments, we have shown multiple times why it's important to manage trades at 50% profit or 21 DTE.
They have. The general idea behind this is we capture most of the probability in the first half of the trade and avoid the increased P&L swings in the second half, and increase the number of occurrences through redeployment. Agreed.
Sure. But what exactly happens after 21 DTE in the trade? What would happen if we held our losers past 21 DTE in the hope that they will eventually become winners, or even refusing to take off our winners at 21 DTE in hopes we can squeeze out more profit?
So let me ask you this. When you put a 21 DTE on, because I know I answered this. When you put something on that's 45 days, because we've done it, which one are you more likely to let run? Your losers or your winners?
The losers.
Me too, because the winners, I was like, oh, we'll take you don't even think about it if it's a winner. Oh, it's 21 days. Let's just close it.
We'll take our winner. Yeah.
But if it's a loser, it's like, because if it's a loser, you're rolling it, you're doing something else. You're like, I can get an extra 20 cents for this. I'd rather just stay here and take my chances.
And it's funny. If we do the longer term, if we're in a longer term, let's say we have a short put and it's way in the money. Because again, you never see us selling short naked calls. So if we have a short naked put and it's way in the money, you know what we do? We close it and turn it into a call zebra.
We do.
Yeah.
I
I have a real good fix for, oh my gosh, it's way in the money. Well, close it and turn it into a zebra.
Yeah.
Or
if you want to keep that, if you want to keep that position going, put on a call zebra. That's correct.
Yeah.
Okay. So here we go. Here's our takeaways.
The higher P&L volatility we observe in the second half of a trade is caused by the losers that were held past 21 DTE, even though some of those losers held past 21 DTE did become profitable.
Whoa, hold on. The higher P&L volatility we observe in the second half of the trade is caused by the losers that, okay.
So bigger swings in P&L. Bigger swings, but maybe both ways.
Yeah, you should see that, right? The closer it gets, you're going to get bigger swings. Because we know if you, kind of like our core weave, to your point, it didn't matter if core weave was up $20. We were in the 45 days till expiration, it's just sitting there. We made 30 cents.
Yeah, it wasn't moving that much, even with the big moves.
Yeah.
All right. Okay, go ahead.
Total discretionary management losses were less than mechanical losses. However, they're roughly 6 times larger when they do occur, wiping out the benefits you receive from more winners. Whoa. Break that sentence down for me.
Total discretionary management So discretionary management is like not rolling it, rolling it to 4 days.
You're
So just
using
like
your discretion and keeping it. Okay.
are less than mechanical losses. Total discretion losses are less. So the losses were less when you were discretionary. However, even though you had less losses, they were larger when they do occur. So when you have a loss, it's larger. There were less losses, but when you had a loss, it was larger. 6 times.
What? This was years and years and years ago, because you were in my basement. Our studio pre-pandemic, when we were not in the studio, used to be in my basement. And we were trading something, and I had a massive position on. And I was like, you took yours off. I was like, I'm holding it for another 5 cents. And that 5 cents.
It was Twitter. It was Twitter.
Was it Twitter? Okay, it was Twitter. I think I blocked it out.
No, it was a dime. It was a dime. Like I was like, I'm buying these puts back for a dime, and you're like, I'm getting that dime.
No. It was whatever it was. I mean, I think you bought them back for like 50% profit, but I was like, I put mine in. You bought it back for like 45% profit. I was like, I'm keeping it. I need 50%. Like whatever it was.
It was a minuscule. It was like 10 cents difference. Yeah.
It was 10 cents difference, and I remember it taking me out for ridiculous amounts of money because that was like 6 times.
Because I remember this, and
because I would have bought it back for a dime. I wouldn't have bought it back for 5 cents. But I think, like, say we sold it for $1, you bought yours back for like 55 cents, and I was like, I'm getting 50 cents. Like whatever it was like the dumbest decision I've ever made.
Yeah, but I feel like
I wasn't holding it for 5 cents.
We're smarter now. Like Liz and I are smarter now. We don't get crazy. Like we had crazy in our younger days, we had crazier positions. Definitely in our younger days. Like we took bigger swings, wilder traders. We're better now. We're smaller now. Like I feel like I have a lot more smaller positions where I want to say we had like 40 or 50 of those, like 40 or 50 contracts.
That's why I said, I was like, I'm taking this. It was ridiculous.
50 times 10 cents. I need another $5,000 out of this. Like,
it was Twitter. I totally blocked it out. And then us being like, we were young and dumb. Do you remember? We'd always teach the mechanics on here, but then in our personal lives, we're like, you can't inventory. I'll never forget this. Be like, you can't. Tom's like, you can't inventory volatility. I was like, you can't inventory volatility.
Oh yeah, we had so many VIX futures. Like you would open up our account and it was just loaded with VIX futures. Yes. We don't do that anymore.
We never did it on the show.
There should be
rule followers on the show.
There should be a show like Liz and Jenny After Dark. Like listen, like look at our trades when the cameras turn off.
It is true. Okay, and then keep it simple and consistent. Our capital is better deployed creating more occurrences than hoping that a loser will turn around or that we can squeeze out more profit of an already winning trade. But you're right. We've gotten a lot more mechanical and a lot smarter. And I'm only saying this because, like I said, talking to those younger traders, they are swinging for the fences, and they're not. But I think that comes with age and experience to trade differently.
Yeah, and I literally have everything. I have every underlying, like my universe of underlyings, written down, and a dollar amount allocated to them. And then I will go through my account every so often and take my paper and look at my positions and say like, okay, I've allocated, X amount to this underlying. Let me make sure it hasn't strayed too much. Because sometimes I'll be like, oh, it's down, I'll add more puts, or it's up, or I'll add more, whatever. Like I'm always trying to check, is this gone too far from the dollar amount that I have allocated to this underlying? And I have it split up pretty evenly. And
that would never have happened in the past.
No.
Now, we want to make sure we get to this because this is pretty funny. Okay. No, JT, we kept being like, JT, it's the Jack Tucker.
Oh. So I think his question was, does the JT really work? You can only ask one person that, and that's Jack Tucker himself. But I'm going to guess if it didn't work, he wouldn't be putting them on every day and showing them pictures of his positions. And I'm not saying work every day, but work overall.
So I'm telling you though, and Hot Team, we talk about this all the time. And in the beginning of the show, we actually went over a slide that was Jacob's study that was from a couple weeks ago. So the Jack Tucker trade is literally just selling an iron condor in the 0 DTEs at whatever price point you want, whatever you feel comfortable with, and then taking it off. So your risk is off the table. That's it. Now that we call it Jack Tucker because he posts it on a daily basis, but we talk about it all the time.
Yeah, you can follow Jack Tucker. He's on Twitter. Go, you can follow Jack Tucker and see what he does every day. Or there's even Alex is on here. Right? Like go down. We've got a few. And who wrote this AI gone wrong? Obviously.
I know. I love it. The Jack Tucker. I mean, we are idiots sometimes, and I appreciate this. Nothing makes me happier than this.
But there are plenty of people on here doing their own version. And you can follow them too, right?
So our version, because we have a smaller account, we were doing the Iron Fly at, now we're down now, but I mean, these usually stay on for a couple hours before they're profitable.
Well, it's trading, we took in, you can see it's trading 820 and we took in, it's a small winner. When you say we're losing, that's our upside broken butterfly that's losing.
Oh, it's a small winner? Yeah, so we took in 8, right.
Yeah, it's a small winner. We took in 840 something, and it was just trading 825. So it's bouncing around. We have our GTC in. Any red in the money sign we would need to address, and we only have this long. Is that left from an old diagonal?
It is. So I'm just going to close this. We'll do something else in DraftKings tomorrow, but I'm just going to get rid of this.
Yeah.
Just so we have it. I don't actually think we traded. Okay. And you know what, Jenny? I don't think I pushed everything out today.
I know. You know what? I forgot. We forgot about that, but that's okay. I'll get everything
filled today. Okay. So we'll push this to the follow. We closed our Lulu. We put on our SPX trade, and I closed.
And the Lulu doesn't have to be closed. Everything's in the money. It would exercise the sign. Doesn't matter.
Yeah. We just wanted it to not look at it. Okay. So then. What we're finding here, though, is that because we do push everything to the follow page, a lot of times our SPX closes are not being pushed because they'll happen at like 2 o'clock, 2:30, 1 o'clock, 12:30. Whenever it happens, we haven't been pushing the closing ones out, but that's okay. I think people understand that.
Yeah, that's all right.
All right, Jenny Andrews.
Oh, we're done with the week.
What are your plans for the weekend?
I feel like it's a lot. Graduation party. I'm like you now. Graduation party, and dancing at Great America.
Oh, you're going to GA.
I may be in a neck brace on Monday when I come back.
Because you riding all the rides?
Yes. What are you doing?
Graduation party. And then our Lamont baseball team is pretty far, so I'm going to go watch a baseball game too. That's it.
Yeah. Our Celtics are still going too.
Are they? Love it.
Yeah, I wonder if we'll play each other.
We're not in the same division.
Oh, well.
So, nope, never going to happen.
All right, everyone have a wonderful weekend. Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. See you on Monday, everybody.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
I found very early on that I was comfortable with having risk, and I liked the benefit of it. I mean, I found trading in a unique way. I loved seeing Wall Street in New York. When I was a young kid, I would drive down to the financial district and see all those guys in suits, very powerful looking. So to me, that was a way of having some sort of social status where I bettered myself. Trading was just a way out of Brooklyn. I go anywhere there's action. Really anything that has high implied volatility. And the IVX 5-day change, that's the volatility of the product's 5-day change, is green. And I show that on my Option Trades Today podcast. You can definitely get the thoughts on why I'm making this trade. Am I leaning a little bit longer? Am I leaning a little bit shorter? All the things that we talk about on the show day in and day out. It's not magic, it's just math. by the nature of the strategies I pick, I'm going to have a high probability of success. And I think my expertise comes from managing those trades, when to take them off, how to maximize the profit on them. I think that's what sets me apart from the novice trader.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
What's up, everyone? Welcome back to the show. My name is Mike. This is Options Trading Concepts Live. It is Party Shirt Friday, Solo YOLO Friday. Hopefully everyone's having a good day, getting ready for the weekend. Market is up 60 points, just breached 6,000 in the E-mini futures, and it's kind of crazy. We had some jobs numbers come in this morning, less jobs available than initially anticipated. Market reacted pretty positively towards that. You can see the 730 candle jumped up like 30 points, almost all the way to 6,000. Came down a little bit, but we've gotten as high as almost 60.25. This is a minute chart we're looking at in the E-minis here. But yeah, kind of crazy. We've had some extreme news in the Twitter world. Trump and Elon going at it. Kind of a bad fallout we're seeing live. Tesla stock tanked yesterday. It was down like 25-30%. You can see this big red candle here. But yeah, lots to talk about, lots to consider. Yesterday into that sell-off, I placed a little calendar spread just to play for a reversal here. We're getting it a little bit, but I was a little too early. Down $80 there. But if this continues and we get back up to like 320, 330, we'll be just fine. But yeah, we're going to be walking through the entire portfolio today, and it's going to be great. So if you have any questions, any comments about any of the positions, we can talk about those. You can just throw them in the YouTube chat. Just pop over to Tasty Live, and you'll see this video streaming live there. But yeah, why don't we pull up the platform here, and we'll get right to it. So like I said, E-minis up 60, NASDAQ up 230, Bitcoin having a nice day, up 3,400. Based on the percentage change, Bitcoin leading the charge outside of platinum futures. Bitcoin up 3%. There's a lot of products that are up over 1%, 2%. Yields, kind of an interesting move there. 2-year and 10-year up 2%, over 2%. Very interesting to see that. But crude had a nice little trade. I closed that a little earlier. We can talk about that. But yeah, to the downside, not really seeing much other than volatility. Volatility futures down 5%, which isn't too surprising. Yesterday was a kind of a volatile day. There's a lot happening with the Elon Trump stuff. So saw a little spike in volatility, but then you had a jobs number that the market looked favorably upon. So kind of a crazy day. I think we'll probably see some more fireworks into the weekend. So yeah, if there's ever a time to take off some risk to avoid weekend risk, I think maybe this week might be that. But you never know. So yeah, kind of an interesting week. We had some earnings trades that went well. We had some earnings trades that did not go so well. Let me just pull up the follow page here. We'll filter for my stuff and we'll look at this week. Just do a quick recap. So earlier this week, bought a Tesla Iron Condor back, closed a $100 winner. We had an HG position. It was a short put spread. Saw a nice rally there, closed that for a nice winner. Gold, we had this call diagonal spread in there. Long July, short June, 10 points wide. Closed that for a nice winner. Pan W, I had a long call that was left over from an earnings trade and just left it there. We saw Pan W recover, so that was a nice scratch. This was initially a crab trade. So the nice thing about the crab trades is you're reducing your cost basis quite aggressively on the long option, so it made it a lot easier to get value back on a rally. And this was basically went right at the money when I closed it. It's up a little bit more now. CrowdStrike, we've got this 520 call calendar spread, I should say. Still looking for that one to come in, but it's seeing a nice rally today. Southwest Airlines had a put zebra, closed that for a $120 winner. Lulu got into that Iron Condor yesterday. Did a lot of trades yesterday, actually. So we'll talk about that one, but not much to do. We need a reversal of this move. We'll look at it. Expedia, this is a nice adjustment. Hopefully this plays out well. It's up another $2 after I made this adjustment, but basically had an earnings diagonal, turned into a calendar, rolled it up and out, back into a 10-point wide diagonal, and that's where we sit right now. So we'll revisit that when we do the full portfolio walkthrough. LE, $120 winner. This was a call calendar spread. So both of these August 1st, July 3rd contracts settled to the LEQ5 contract. So it was a traditional calendar setup. And right when it hit 215, I closed it for 120 winner. That's pretty much all you can do with calendars is just close it when they move towards your strikes if you're placing them out of the money. Silver, I've got this on playing for a little downside move. Not getting it today, but yeah, just taking a little shot here. 42 days, downside put zebra, $300. If we get it, it'll be a nice little trade. And if we don't, the risk is very small. AVGO had this Iron Condor, similar setup to Lulu, except this one worked, Lulu didn't. Had a very small move. I placed this when it was at 260, and it was at about 10 points lower when I closed it this morning for $130 of profit. Tesla, yesterday, I placed that call calendar like I stated, the long the 350. So inside the expected move in July, kind of right at the expected move in June for $8. We'll see if we get a continuation there. And then micro crude, I had bought initially bought the 66 price with a different contract. That was pre-Trump tariff stuff. So bought the 66, crude went down significantly, eventually sold a call spread against it. Let's see if we can filter for more than what we're seeing here. I got to put in the actual contract, huh? Yeah, so kind of just messed around with the short option, sold a spread, but yeah, got back out of it today for basically a scratch. Closed the contract, bought back the call. The covered call was at the 65 strike, and we're kind of right there. So got rid of that, and we'll get back into crude. Probably look for a little price extreme if we can. But I would like to see it come back down if we're going to get long. If we're going to get short, I want to see it back up around 70. But we will cross that bridge when we eventually arrive at it, which crude's been a great little trading vehicle, two-sided action for the last couple of years. But yeah, let's walk through the rest of this portfolio. Again, if you have any questions, you can shoot it in the YouTube chat, and I'll grab it in just a little bit. All right, so 6J Japanese yen. I've got the 7-2 calendar spread. So this is a very similar setup, basically a scratch, literally a scratch as we're talking. Bought this 7.2 in August, sold the 7.2 in the July 3rd, 27 day. So just a way to play for an upside move. $400 of risk. If we get a move to 7.2, this will be $120, $150 winner, I would say. But if we get closer to July, it's going to be a bigger winner because this long option will have the ability to appreciate without the short option working against it. So we'll see if we can get that move, but basically a scratch right now. Gold futures. This one's nice. We've been doing these gold futures quite a bit. So just looking to place these broken wing butterflies to the upside. So here's one where I routed a 10 by 20, 20 by 40 for $250. A couple days later, actually the next day, bought it back, bought in the risk for $200. So basically a 20 by 40 where you have a 20-point wide debit spread and a 40-point wide credit spread. If you can move that credit spread from a 40-point wide to a 20-point wide, you arrive at a symmetrical butterfly, but you do so with a net credit instead of paying a net debit. So taking a little more credit spread risk and then getting the out of the money move, if you can buy in that risk, you're basically sitting nice with a symmetrical butterfly for net credit, guaranteed profit regardless of where the market goes, but you can sell out of that symmetrical butterfly if you get a move towards the spread. So did that basically a month ago in early May, and then late May did the same thing. So another 20 by 40 for $280, almost exactly the same trade, and then a week later bought in the risk into a sell-off, bought in the risk for $230, so I netted a credit of 50 cents, and right now we're sitting on a butterfly that has appreciated another 70 cents. So I have a 50-cent credit. I can sell out of this one for another 65 cents. I'm not going to do that. I'm going to see if we can get a move all the way back up to 34.60 to 34.80. If we get that move, this net lick here will be, I would say maybe $200-$300. So, and there's no risk on this trade. So I have no reason not to be aggressive on this type of setup. Natty Gas, same thing. Did the exact same thing to the downside. So, oops. Natural gas, here we go. So yeah. Routed the 3.4, 3.35, 3.15 for 42 and bought it back for 35. So netted a credit of 70 cents and kind of just sitting on this downside butterfly here. So it's nice when you can route these and get into them for free. Then you just have these shots, these kind of hedges, portfolio hedges with no risk. So love it. I could sell out of it for 20 cents. Obviously not going to do that. If we get a big downside move, this thing will appreciate more. So yeah, we'll see if we can get that. Apple, call calendar spread here. This has been a little bit of a doozy, but I initially started with a diagonal spread. Bought the 210, 220 for $720. Rolled down the 220 to the 210 to create a calendar for $1.27, and that's where we sit. So we need a little bit of a move here. You can see the short option. That's the first thing I look at if I'm going to make an adjustment. The short option is at a scratch. So it's a good thing because I know that I'm going to get $180 out of this over the next 2 weeks. Even if Apple chops around here, that will substantially help this P&L here. But would love to see a rally to 210. And if that happens in the next week or two, we can surely get out of this for a scratch or a small profit. Looking at the value of the long option. So if I just assume I'm getting all the premium out of this short option here, I need my long option to be worth $600 because that's my total debit on this trade. So if we look at the long option's expiration, where is it trading for $600? Basically just out of the money, 3 points out of the money. So if we get a move from 203 to 207, 208, this will be a profitable trade, especially if it happens closer to 2 weeks from now. But nothing to do there, kind of just waiting for something to happen here. Applied Materials. This one was an earnings trade, had the 175, 185, call diagonal spread setup, pretty cookie cutter, 10-point wide, paid just under that. After earnings, rolled out from the 1 day to the June cycle for $1.19, and that's where we're at. So we have a 10-point wide diagonal for $8.30, down a couple $100, but seeing a nice rally today. getting some value back. If we can bring this thing up to 175-ish, we'll be just fine. I don't really want to adjust the short option just yet. You could if you want to, but I want to give myself the ability to get out of this if we see a continued market rally, especially in these tech stocks. So just going to hang there and see if we get it. But I do have the ability to roll this 185 down to 175 calendar. I could do it, push it out a couple weeks. But right now I don't feel that urgency. So I'm going to lean a little long there. CrowdStrike, similar story. So CrowdStrike was a earnings trade as well. We had the 520 call calendar. Haven't done anything with it. Bought it for $8. Short option, trading for $140. So this one is interesting. I mean, if you wanted to, we're getting some value back down $150 right now. This is another one where if we see another 10-point rally, we'll be at a scratch. But the short option, the difference between Apple, where the short option is basically a scratch, and CrowdStrike is that the short option has lost a ton of value. So I initially sold this for $1,000. It's trading for $150. So it's still worth $150 for the next 2 weeks, which isn't nothing. That would offset my current P&L loss if we assume that my long option appreciates into a drift higher. But let's take a look at this. I mean, the only adjustment I would make here is buying this back, the 520, and then potentially rolling to like the 21-day or the 27-day and moving it up to like the 530, create a diagonal spread. So if I did this in the 21-day, these markets are really bad. The 140, 240 bid ask is $1 wide. Can't do that. Don't want to lock myself into that, I should say, because getting out of that would probably be a nightmare. How about the next one? The next 27 days even worse. 70-cent bid, 315 ask. So these markets are just not liquid unless you're in the monthlies. You can see the monthlies are 30 cents wide, significantly better than what we were just looking at. Still not great. So I think that answers that for me. I'm not going to bring this into July and create a vertical spread because it'll kind of just kill the ability for this thing to move, unless you made it really wide. Like if you bought back the 520 and rolled it to like the 550 or the 560, that's possible if you want to do that, because then you'd have a 40-point wide vertical spread with a debit of $7. So if you do get the move up in CrowdStrike, it would certainly be a nice trade. But it's good to know that I have that out if I want to do that, because our debit here is only $8, thanks to the short option losing all that value. But again, if we get a continuation in CrowdStrike up to 500 or so, this will certainly be a profitable trade, and I'll get all that value out of the short option. So we'll wait for that one. But nice to know that if I get all the value out of this short option, and even if I get it like another $1, let's say, and this is trading for 40 cents, I can have that out of buying it back and rolling into a wide vertical spread in July. So we'll keep that in our hat. Delta Airlines, 45 short put, looking nice right now. Nothing to do here. I mean, if you want to close it and again, like remove some weekend risk, this one isn't at 50% profit. We're a little bit shy. You know what? I will do that. Yeah, we're closer than I thought. I thought I collected more for this, but 50% would be 90 cents. I'm basically at 70 cents, and I've had this trade on for what? Couple of days? Yeah. End of May, I placed this trade. So let's get rid of this one. Don't need to keep the risk on for 20 cents. And again, I think, taking green scratches off, taking profits that are close to 50% or close to your target, I think is wise in a market like this where we've still got the feud going on. You could see some weekend fireworks, and if that translates to big market moves, you don't necessarily want to have unnecessary risk on. So let's remove some risk here. Buy this back for $1.15, bada bing. So yeah, we'll post that to the follow page. Locked in a nice winner there. Disney tried to fade the mouse and got slapped around a little bit by the mouse. 494 debit for a 105, 115 put diagonal in mid-May. Haven't done anything with that. Also tried to do the same thing early May, and that one's a loser too. So Disney has had my number for sure. Down 130 bucks on this new diagonal spread. Let's see if we can do anything here. We're in the money on the put. 10 points wide. So I think this is what we're going to do. We're going to look at potentially paid $5 for this. It's trading at a $1.30 loss. The short put has lost all of its value almost. Sold it for 99 cents, trading for 16. So let's see if we can move this up a little bit. No. 30 cents to remove $5 of potential profit. It's not too good for me. Maybe we can move it out a week or two. Let's look at these markets. Yeah. Yeah, I mean, there's just not much to do here. I mean, I would rather keep it in the 14-day. I would even rather just buy it back, the 105 for 17 cents, than collect 25 cents to have this on. I guess you could consider doing something like this. So rolling it from the 105 to the 110, you're still on a diagonal, 27 days, 42 days, 27 days for the short, 42 days for the long, picking up almost $1, which would bring our basis on this trade down to, let's call it $4. We'd have a $5 wide diagonal spread. Let's do that. We'll do that. We'll hedge a little bit, just in case the market keeps going higher in Disney. But yeah, the 109 or the 110 I think is fine. Anything lower you could do, but you're not really picking up too much premium. So let's do that. We'll roll out to the 27-day, pick up $1, reduce our basis. We still have a net debit that is less than our new diagonal spread width, which we can see here, 110, 115, 5 points wide, net debit of $4. We will still be looking at a $100, $150 winner if we get a move down to 110. So we've reduced our need for Disney to really sell off aggressively. Let's see if we can get that move. DraftKings. DraftKings tanked a couple days ago. This day here. Nope, this is Disney. Let's look at DraftKings. Okay, DraftKings tanked a couple days ago. Some new taxation stuff was released for Illinois, our state. But yeah, it's come down from its high here, hit a high of almost 55. We've got this perpetual trade on. This is not officially our year-long trade. IBIT is, but DraftKings always a candidate for year-long premium, regardless of IV rank, because even though IV rank's 12, which would tell you that IV is low, when you actually look at the IV, we're still sitting at 44%. So yes, premium in DraftKings is lower than it has been, but premium in DraftKings is higher than many other stocks that are $35. So DraftKings premium, always happy to be in there. So yeah, we've made a lot of rolls here. Let's take a look. So it started with a 42.5 50 strangle in February. Plenty of adjustments, picking up credits. Started with 275. We are now at 755. So we've tripled our credit received in just a few months. We currently have a 37.5, 42.5 inversion. So 5-point wide inversion, $750 premium. So we're right there. DraftKings is at 35. Our break even is at 35. Considering we have a 5-point wide inversion, but we have 750 in premium. So our break evens are 2.5 points lower than the put and 2.5 points higher than the call. So our break even is at 35. We're right there. So nothing to do there. I rolled out a little bit ago to, I went from the 37.42 to the 37.5, 42.5 just because of strike selection. They didn't have the 37.42s in July, but still picked up some premium. We're basically at a scratch, down $70, but this will come in nicely if we stay here or drift higher. Still have $150 of premium. If I end up getting assigned on the put, it only has 15 cents of premium. If I get assigned there, I'll just hold the shares and see if it'll basically become a covered call. And again, my break even is at 35. So I would have a covered call with a cost basis at 35, with a short call at 37.5, with $130. So I'm actually kind of hoping I get assigned because that would be a cleaner position to deal with if we get a move higher. Or if we don't, I can just continuously roll the short call and we can do that. So not too worried about that one, but hopefully we get a little rally here in DraftKings. EEM, this was a put zebra. We tried to play a downside move here. Haven't done anything. Not much to do with the zebra other than just like buy back the short put, which I guess I could do. And these trades are kind of crazy, right? Because we've got a 46, 44.5 zebra. The 46 is right there. I've got 2 of these puts for 2 weeks time frame. So what do I need to happen to get my total value of the 2 puts back up to 278? So I need each of these options to be trading for $140. Where could that happen? We basically need a $1.50 sell-off. You can see here these options of 47.5, which are trading about a point in the money, are trading for about $1.40. So we need a 1.5, very possible. It's within the expected move. So yeah, let's just buy this back, get it out of the way, pay 7 cents to make sure that if something crazy happens and EEM drops dramatically, this short put doesn't offset our extra long put. So now we are going from a potential 100 delta position to a potential 200 short delta position. So let's buy that back for a couple of shekels there. We are now just long 2 puts. I don't see a reason to move this out because I'd rather just keep the 50 cents of risk. If EEM stays here or goes higher, I've already lost the money on the table. If I reroute this into a new zebra, I have more risk if it continues higher. So I like where we're at. We need a $1.50 sell-off. I'll keep my eye on that one. End phase, 45.50 strangle. This one was very unfortunate. I had the short put. I literally put the short put on this right here, this day. Sometimes you just can't do anything right. So yeah, place the short put here at the 45 strike. Still, it's a fine trade. I mean, I collected 215 for the 45 strike. That's a good amount of value for a short put at 45. But again, literally the next day, drops 20%, drops all the way down to 37. It's rallied back, but we've managed this position by rolling it out to July. So I had a June put, rolled it out to July, bought back the June, rolled to July, and then added a short call above the market. So the reason why I did that is because I wanted to pick up more premium. I wanted to bring my break even down towards the stock price at 40, and we've achieved that. So we now have a total of 482. I've got the 45 short put, 50 call, not inverted. And yeah, our break even is down at 40, basically. So we're going to be just fine with this position as long as we chop around here. But yeah, added the short call because I knew that even if we got to move up from 40 to 45, my $4 $4 of premium would be plenty to get out of there for a scratch. So here we are, down a couple $100, but we've got plenty of extrinsic value in both of these options. $500, which will more than offset my current loss of $300 if we get there. So just need a continued rally or just to chop around here and we'll be fine. Expedia up $2. This was an earnings trade gone wrong for sure. But again, this is one where we've done some things. So bought the July, sold the 1-day May, 10 points wide for $9.50. Classic setup. Expedia sold off. So I bought back the 185, rolled to a calendar in June. So I had the July, June 175 calendar, reduced basis by $1. When the time came, we were getting a rally in Expedia, bought back the 10-day 175, rolled it up and out to June, the June 20th cycle to the 180. So I moved it up 5 points, still collected a credit of 40 cents. And then we got a continued rally in Expedia, bought back the June 20th, rolled it out a week and up 5 points for a debit of 65 cents. So normally we say we don't like to pay debits, but I knew that if I could re-diagonalize to 10 points wide, even if I paid a debit of 65 cents, I would still have a net debit under $10. And I already collected $1.40 with making rolls. So wasn't wasn't worried about paying a 65-cent debit to create a scenario where if Expedia rallies, continues to rally, and we don't need much at all. Like this is already in the money at 175, just barely. If we get a couple more days of this, this will be a profitable trade. We'll go from a $200 loss to a $200 profit, and we'll call it a day. So happy with that adjustment. The short call has $200 of value, which again would offset my premium here if we don't move. But hopefully Expedia continues to recover. You can see initially had the big sell-off from earnings, and we've gone higher since then. A lot of green days there. So that's a good sign if you're waiting it out. IBIT, here is the year-long trade. It's been marvelous. It's been beautiful. Started with a 50-65 strangle for February back in December 23rd of last year. I've gone from a $565 credit to a $1,700 credit. So just made, the standard rolls, rolled out to March, rolled out to April, picked up $2, threw on a butterfly, sold out of a butterfly for $1.40 here. But you can look at these in depth if you just filter for IBIT and you click on my name on the follow page. But long story short, we've increased our value a lot, our extrinsic value collection a lot, because IBIT has an 8 IV rank, but if you look at the actual implied volatility, 50%. So same story with DraftKings. Yes, IV rank is low, but are there other $60 products with penny-wide markets that offer 50% IV, 60% IV? There's not that many that I would consider trading. So IBIT, DraftKings, those are kind of products where I don't care where IV rank is. Yes, it would be great if IV rank was higher because that means the premium is higher, but it's good to see that even at its lowest IV rank of 8, IBIT is still going to offer 50% implied volatility, which translates to dollars if you're selling premium here. So we've got the 60-67 strangle. We're right at the money. And again, I've got $1,700 in premium. So my break even to the downside is 43, all the way down here. And to the upside, our break even is at 80-ish, higher. So this, almost the entire strike plane we're looking at is where our break evens are. Very nice trade to have on. We can show you this. Change this to $1,700. Look at the analysis mode and look at expiration. So yeah, this is where we're at. We can absorb a ton of movement, and it's a nice place to be. But yeah, this is the year-long trade. IBIT has behaved. It's been range-bound. It's had a 15, 20-point range the whole year. And if you look at implied volatility, the implied volatility is telling you that it should have a higher range, a wider range. So currently, implied volatility is overstating realized volatility in IBIT. If that continues, that would be great. But even if it doesn't, we've already had a successful first half of the year to where we have enough premium to where we can do pretty much whatever we want. But the same story applies here with IBIT. I've been saying it the whole year. I don't want to have short delta here. And I did make an adjustment earlier this year where I just moved the whole thing up. So I had right here on the 13th, I had the 55-60 strangle. And I moved it in the same cycle to the 60-65 strangle. So instead of rolling the put up and keeping some short delta into that rally towards 60, I just shifted my risk for 60 cents. That was just, because the stock price was a little bit in the money when I moved to my new strikes, but didn't change the expiration, didn't change anything. I just completely shifted my delta. And that's okay. If you want to have a strangle on, but you don't want to have upside risk, or if you're worried about upside risk, instead of just rolling up the put, you can certainly roll the whole thing. I could do it right now. Like if I wanted to, let's say I wanted to shift this to downside bearish delta, I could buy back the 60-67 and roll to the 60-53. And this would ultimately create a bearish delta scenario for a scratch. So you can do whatever you want here, but personally, I would rather have downside risk and downside heat in IBIT, where we've seen velocity of movements to the upside, typically in IBIT. But yeah, the world is your oyster with undefined risk, especially if you've picked up a lot of premium and you have a lot of premium to work with. IonQ, similar story to Delta Airlines. Short put at 35, trading at 39. Down a little bit just because IonQ has kind of crept lower since we placed that trade, but still out of the money. Nothing to really worry about unless we get a big sell-off here. But yeah, it's going to be okay here as long as we stay above 35. This is one I'm just going to keep on because we already removed the risk in DAL. This one's at a scratch. It's not at a winner. So, and you could take it off if you wanted to remove weekend risk like we've been talking about. But this one I'm just going to hold. Lulu, so yeah, we were talking about Lulu. I wrote an earnings preview in Lulu, and I notated in there that 40% of their inventory comes from Southeast Asia. So of course we have tariff information coming out. They actually posted pretty decent numbers, but the stock is tanking. So something under the hood the market didn't like. Had an iron condor. My thesis for this trade was that I didn't think it was going to rally, and I wanted to just cover a big range. Unfortunately, this was a 2 times earnings expected move. Just over 2 times the earnings expected move. So we're in the money now on the put spread. It's basically trading at max loss. It's trading at 973. Max value is $10. So this is one where I'm just going to hold on to it. Hopefully I don't get assigned on the put. It doesn't change anything, but it would certainly increase my buying power requirement because it's a $300 stock. But again, if you're assigned, you can just close the trade. It's not going to result in really anything. You don't have any additional downside risk, I should say, because your long put protects you there. So yeah, just going to hold on to this, see if we get a reversal. This is one where I'm not gonna try and see if we get a rally back to 300. I'm trying to just get a rally back to like 275, 280. Because if we get a rally to 275 or 280, this 10-point wide spread will be trading for closer to $5 or $6. So what that translates to is $300 back, $400 back, best case scenario, and I'll happily exit for a $100 loss into this big earnings move. Palantir, Iron Condor, 105, 145, up 50 cents, right in the middle of the range. Let's get rid of this. Let's stay on course with removing risk for the weekend here. Up a little bit. Yes, we can keep this on, but again, up 60 cents. We're halfway there. This has only been on for a couple days here. Yeah, placed this on May 28th, and we're up 60 cents. 50% of max profit is about $1.70, $1.65. So yeah, let's get rid of this and get rid of some weekend risk here. Let's see if we get filled. 275, we'll probably get filled there. Maybe not. 276, do we have 276? 277, do we have 277? We'll leave it at 277. We'll leave it. See if we get filled there. SLV, trying to play for a downside move. This was Katie's trade from yesterday. And yeah, just trying to throw on some downside hedgeability. The nice thing is I've got a downside trade in silver. I've got the upside butterfly in gold. So we're in a good position. Even if silver rallies higher, if that means gold's rallying higher, I could offset the entire cost of this trade. So I like where we're at. I would rather see silver sell off though, of course, but this is one where kind of the opposite story of IBIT and DraftKings. We've got a 40 IV rank, but look at the IV, it's 30%. 30% is still low. So silver, GLD, TLT, those are the products where I like to throw on zebras, especially silver, because silver's, you can throw on a zebra for 40 days for $300. It's a nice use of efficient capital. GLD, you can do a little bit of both. GLD, I like to do diagonal spreads in there because IV is really low. If you can afford a zebra, you can certainly throw it on. It's just going to be more costly. So yeah, similar setup in GLD. A zebra is going to cost you $1,000. So for these ones, I'd rather do a diagonal spread. It makes more sense for me with this account size. So yeah, good position there. Target, we got the 100, 103 call diagonal It is down $100. We need a rally. It's rallying today. See if we can continue. Nothing to really do there. I mean, we still have 50 cents in the short call, but I don't really have any choice in this matter to move it anywhere because we're already at a 3-point wide spread. My debit is 382. So I have an 80-cent excess of extrinsic value. If we get a rally to 103, this will be a scratch, most likely. So just holding on to that one. Again, Tesla seeing a nice rally today. Placed a buy the dip type defined risk trade where I bought the 350 in July, sold the 14-day 350 for $8. So getting some value back. If we see a continuation on Monday, this will be a nice little $100 winner, and I'll take it off. Under Armour, I have 100 shares. I've had that forever. And UAL, this was a strangle that I held through the tariff stuff. So placed this, dropped all the way to 50. It was a nightmare. It's come all the way back to 82, and we're looking okay. I've got $1,200 of premium here on a 5-point wide inversion. So if we stay at 80, if we stay around 80 for a couple more weeks, this will depreciate from 1,500 to 1,200. It'll be a scratch. I'll take it off. And that's it. 40 minutes of a full portfolio breakdown. So yeah, yes, I am in a flow state. I felt like I was in a flow state, Steve. Hopefully that helps. But yeah, let's get to some questions in the YouTube chat. If you want to pop over there, just go to Tasty Live. You'll see this video streaming live. Okay. Let's see. Palantir filled. Close that for 60 cents. Got some risk off. Love to see it. All right. Here we go. Bad fallout. SPY hit 600 for the first time since February. Yeah, I mean, this is crazy. Yesterday it was like everything's going to zero. President's going in a beef on Twitter with Elon, and now the market's up 50. But this is what we knew was going to happen, really. I mean, like regardless of what side you're on, you know it's going to be a volatile market when the president, has been known to tweet things and whatnot. So, yeah, we'll see where we go from here. But I will take the heightened implied volatility and realized volatility, really. Implied volatility is coming down, but if we see 50-point, 60-point swings in either direction, that creates opportunities for bulls and bears. So I'd much rather see that than just a slow grind higher and a VIX in the low teens. Any adjustments for the Iron Fly? Microsoft, short the 455 in July, 10 points wide, 714 net credit. So you've got 714, 10 points wide, probably not, but let's take a look at it. July, 455, 10 points wide. Yeah, so you just need a little sell-off here. Your put spread, so the first thing I look at is just seeing what your put spread's worth. It's still trading for $1-ish, a little bit over that. Yeah, $1.75. If this was trading for if you were in June with this position, I would just get rid of the put spread, because if you were in June, your 465, 445 spread would be trading for 70 cents. That might be a consideration, because when you have butterfly with risk on both sides, or spreads that offset each other on both sides, I should say, you basically have to pin the short strikes and you have to be closer to expiration. However, if you capture a lot of the value in the short put spread and you buy it back, now all of a sudden you just have this long put spread, which will appreciate much more aggressively into a sell-off. So your spread is still trading for $1.75-ish, so nothing to really do there. But yeah, you need a little bit of a sell-off, but that's what I would do. If Microsoft continues higher, I would just keep my eye on that short put spread, and if it gets to a level like 50, 40 cents, I would buy it back, and then you're just leaning short with a long put spread, and you can get out of that much more easily into a market sell-off. Last two failed earnings trades, Pan W and Lulu. Katie followed. Ooh. True. But sometimes it's the opposite. Sometimes we're all in a trade and it works out. It's all very random. But yeah, Pan W. What was that one? I don't even remember that. I've stricken it from my memory here. Pan W, I closed for a scratch. That was the one we talked about. Yeah, so this was a losing earnings trade. The 8-day options expired. The May 23rd options expired, and I just held the long because there was nothing to sell against it, and then we got that rally. So Pan W is probably trading, let's see. Yeah, it's trading for almost exactly what I sold it for. So yeah, Pan W is a scratch if you still have that. Let's see. Tasty has back testing now. Yep. Back testing is right here. Yeah, cool functionality for sure. There is a help article on the Tasty Trade website if you want to check that out. But yeah, back testing, super cool. You can go with different strategies. You can go with different symbols, lots of different symbols here, covering a lot of different sectors. You can do different intervals. This is kind of cool too. So this is one of my favorite features of this is instead of manually typing in certain market events, you can look at 2024 volatility spike, inflation-induced bear market, tech sector mania, post-pandemic surge, pandemic sell-off, 2018 vol spike, trade war, energy sector collapse. Love to see it. So yeah, if you're looking at trades and you want to see how they might perform, check out the backtesting feature, which you can do by clicking this little calendar right here on the lower left. What are you doing with your Apple trade? I did not cut it out yet. Yeah, still sitting there. It is at a point where if this continues, we'll be just fine. But we need this to continue. But again, looking at the short option, 170 bucks of value. I'm down 300 bucks. So let's assume over the next 2 weeks, we get a drift higher from 202 to 205. The long option in July will appreciate. The short option will go to 0. So we'll be okay if we get a little bit of a rally. We need this at like 205, 206, 207. We'll be just fine. Let's see. Pan W getting close. Yeah, closed it. Closed it. How are those FX trades? Let's take a look. I think I'm down. I think Nick is the savant here. I think I'm down like 10 bucks. Let's take a look. But yeah, great new feature. It gives you the ability. I'm down 6 bucks. I'm down a burrito with no extra anything pre-tax. Not even. $6 doesn't get you much these days. I was just talking to Gus about McDonald's, where you used to get, 2 McChickens and a fry for $3. That has ballooned to $9 now. Everything's $3. The dollar menu doesn't exist anymore. It's all $3. It's crazy. So yeah, great tool here, TastyFX. You can very easily and quickly create an account, fund it. It's a separate funding account, but it overlays into the platform very nicely. So yeah, check it out. IV rank for CrowdStrike is 6. Coin IV is negative. Yeah, -4. But again, this is a scenario like, okay, I see -4 IV rank. What does that mean to me? Will I stop selling premium in here if I had a larger account? No. I would still sell premium here. 55%, 60% IV. It translates to 20% return on capital on short premium trades. $7,300 in buying power, a little elevated. $1,400 in premium. But yeah, I mean, if you have a larger account, IV rank of 3 isn't a great sign. It tells you that you could collect more, but 55, 60% premium is still plenty to get you to a nice high credit received, especially if you plan on being in the trade for the long term. 55, 60% is how, in DraftKings and in IBIT, I've tripled my extrinsic value premium collected. If I was doing that in a 20-30% IV product, I would not have that much premium. So yeah, Coinbase, interesting. I would say maybe if I'm at an IV rank of 3, maybe instead of doing a strangle, you go with an iron condor, something like that. You just keep it smaller, cheaper to buy the wings in a low IV environment. And a low IV environment helps you buy wings that have a lower delta further away. So like Coinbase IV rank of -4, if I go with a 210-200 put spread, we've got a delta difference of 14 and 9. If I did the same spread when IV ranks at 100, these premiums would be very similar, the deltas would be very similar, and it creates a slower moving trade. So that's another thing to call out. When you have a low IV rank environment, your same 10, 15, 20 point wide spread has a bigger delta differential, especially if you're doing just one side of the market. Okay. Do you think SLV is at a short-term top, or do you think it has more room to run? I hope it's at a short-term top because we are bearish in there. So that was the thesis yesterday. Just saw this blowout move to the upside. We're taking a defined risk stance against it. So we've got the long 34 twice, short the 32.5 once. It is a classic put zebra setup. 83 delta will go to 100 delta to the downside. But yeah, $350 downside zebra. You can get a better price now. What IVX on the options chain does it mean? Yes, so Theta Trader is saying it's just the monthly implied volatility. So SLV, monthly implied volatility, 30%. Any product at all that has a 30% IV is pretty low. And when I say low, I mean low relative to the notional value of the stock. So SLV, $32 stock, the implied move is $2. That's a really low range if you're selling a straddle or a strangle. Like you really can't have anything crazy happen in SLV for you to be profitable with that position. On the other side of the coin, $2, if you think it's low, doing something like a zebra or a diagonal spread. Those are the trades I like to get into because you're getting into delta in a cheap way relative to the notional value of the stock. So IV in the 50s, 60s, 70s, 80s, that's kind of where we like to sell premium, or just make sure we have a short premium component, even if we're doing a crab trade or a diagonal. IV of 30 or 20 or even lower, I'm not selling premium in there because there's no premium to sell. TLT is a good example, 15, 17% IV. Like IV rank means nothing. Like if IV rank goes to 100 and TLT's IV goes from 17 to 19, that doesn't do anything for me. That doesn't tell me, that doesn't give me more premium. It's just, it tells you that the IV of 19% is basically the high that you're going to see in TLT. So TLT, like I'm not selling a put for $1 on an $85 product. It's hard to absorb movements against you when you only have a point below your strike. If this was $3 or $4, totally different story. But that would mean you would have an IV of 40 to 50%. So TLT, super cheap to trade directional. So like it's an $85 stock. I can get into a zebra with no extrinsic value, downside or upside, for less than $500. So that's a nice way to play TLT. If you're playing for a rip to the upside or a sell-off, you have a lot more efficient use of capital when you're doing something like that in a low IV product. Can you show us the curve graph when you make those adjustments like on EEM? Yeah, so EEM curve analysis. There you go. This one's pretty simple. I mean, I've got a 278, 280 debit here. So 280 debit, and we are looking at two long options. So the issue with looking at this with raw data is that this thinks I'm going to lose $380 because it's not accounting for my short option. So if you wanted to set it up to where it was accounting for your short option, you could go as if you were creating a new trade, buy these two puts, and just enter in the same 286 debit here. 286. Go to curve analysis, pull this out, and then get rid of your current position. So this only, the one with the shield is the one you're looking at live. So, oops, we need to bring this down to $1.44. There you go, $1.43. So yeah, 286 loss. This is where you can really see your true break even. But yeah, hopefully we can get that updated to where we can show you the current position with the order chains premium in the analysis tab. That would be great. All right, couple of rapid fires here. CHF, July Iron Condor, call side got tested. Does it settle as futures? CHF? CHF? Let me know if there's a different product we should look at. What about a new trade in Starbucks? Let's see. $88, 14 IV rank, 30% IV. Do we fade the buck? I don't think so. People love their coffee. New trade in Starbucks. Okay. If I were to just like do a trade right now, I'd probably go with a call diagonal spread. It's trading near the lower end of the range. I don't think Starbucks is going anywhere. IV is 30%. So again, low. If I buy August, I'm buying the earning cycle, which helps me maintain extrinsic value here. Trading at 88, if I buy the 85 in the earning cycle and I sell July 95 for $1.20, I can hold this all the way up to earnings. If earnings are after the July monthly, I can roll into the earnings cycle, pick up some more premium, reduce basis. Let's do this. 85.95 diagonal spread, paying well under $10. So even though this is a 42-day short option, we'll still make money if we get a move up to 95. Boom. Let's get in there. Instafill. Couple minutes left here. DocuCalendar, $1.30. Nice. IVR is low in NVIDIA, but the 42-day straddle is still close to 10% of the stock price. Would you consider that still okay to sell options on? Yeah. And especially if your plan is to just hold this, if your plan is to place this as a new trade and roll perpetually, then yeah, you can start off with this, $1,400 in premium. Which, what does this tell you? It tells you, okay, yeah, I can absorb 14 points on either side and be okay. But it also tells you that you're starting with $14 in premium. So if NVIDIA really sells off closer to 100, let's say, you can roll your put down to the 125 strike if you need to. And by put, I mean call. You can roll your call down to the 125, create a 15-point wide inversion, and still have a net credit greater than your width of the inversion, because you know that if you're rolling from 140 down to 125, you're going to pick up $1, $2, $3, and you'll still have a net profit potential if it reverses back up. So I like starting with straddles. I like starting with strangles, but starting with the straddle gives you more flexibility because you have more premium to work with. That's it. That is it. Did a lot of talking, not a lot of water drinking. I'm surprised I can still talk. Hopefully that was helpful. If you got any further questions, you can shoot me a note on the Twitter sphere. I'm at Trader Mikey B there. We got lots more content coming your way. I'm sure everyone will be talking about market implications. We had the jobs numbers come out this morning. Lots going on. But I'll place those trades that I just got filled into the follow page right now. But yeah, have a great rest of your weekend, everyone. And we'll see you same time, same place, 11 a.m. Central on Monday. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade. right where you need it. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
I found very early on that I was comfortable with having risk, and I liked the benefit of it. I mean, I found trading in a unique way. I loved seeing Wall Street in New York. When I was a young kid, I would drive down to the financial district and see all those guys in suits, very powerful looking. So to me, that was a way of having some sort of social status where I bettered myself. Trading was just a way out of Brooklyn. I go anywhere there's action. Really anything that has high implied volatility. And the IVX 5-day change, that's the volatility of the product's 5-day change, is green. And I show that on my Option Trades Today podcast. You can definitely get the thoughts on why I'm making this trade. Am I leaning a little bit longer? Am I leaning a little bit shorter? All the things that we talk about on the show day in and day out. It's not magic, it's just math. By the nature of the strategies I pick, I'm going to have a high probability of success. And I think my expertise comes from managing those trades, when to take them off, how to maximize the profit on them. I think that's what sets me apart from the novice trader.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
We're back. It's Friday, June 6th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak, and we're here on a really rotten jobs report Friday. Not that the markets would tell you that. Ilya, how are you?
What an interesting day. We create another tempest in a teapot yesterday, and today apparently we walk it back, and that's all we needed, baby. It's all good. Never mind that the jobs market isn't doing what it's supposed to do, but it's all good now.
Of all the days for me to miss overtime, given what transpired yesterday afternoon, no regrets. I hung out with my kid all day. It was her graduation. Happy to do that. That was much better use of my time than worrying about what two billionaires are doing with one another. But today, our attention does turn to the jobs report, Ilya. For the sake of this conversation, so we can go quicker into markets, we're going to bifurcate the spotlight. We'll do the week ahead calendar at the end of the show, which we typically do up front, but it is non-farm payrolls Friday, so we want to make sure we cover both here. In terms of the non-farm payroll figures itself, actual 139 versus 130. Okay. 4.2% unemployment rate. We'll go into that a little bit deeper. Wages, that's good. Maybe. And then labor force participation, not where we thought it would be. So just breaking this down, the jobs change at 139K. That is a beat, but the prior 2 months were revised lower by 95,000.
Right.
If you look at the unemployment rate, it was 4.244%. So if it was 4.245%, you would have seen a 4.3% there rounded up. And it's been slowly edging higher the last few months. So the next month, we're probably going to see 4.3% on the unemployment rate. Wages, probably a wrinkle because of some of the price pressures that come through vis-a-vis tariffs. And then the labor force participation rate, workers, mind you, the jobs change here at the top. That's what firms are reporting, the change in jobs and change in payrolls. The labor force participation rate comes from the Household Employment Survey, which is about what workers are reporting. Workers report 696,000 fewer jobs in May than they did in April. That's the largest decline that we've seen in the Household Employment Survey since December 2023. So
it also lines up very nicely with yesterday's jobless claims numbers, which gave us the highest 4-week average on jobless claims since October.
Right. So when I look at these numbers here, jobs are better than expected. Unemployment rate, okay. I saw 4.1 with Reuters. I know that Bloomberg was 4.2.
Bloomberg had 4.2. It was a wiggle.
Our calendar now.
There was a wiggle in
was
there.
4.2. So, like, just to be clear, this could be 4.2. So it looks superficially like it's right in line.
Yeah.
But from my view, Ilya, there was a lot to dislike below the surface.
Yeah. Yes. Absolutely. And the story of large revisions to me is the one that strikes the most, because even if you just forget the 2-month revision, let's just go month by month. Okay, we beat this one by 9. All right. We revised the previous one by 30 in the wrong direction. So just month on month, what are we looking at here? Is it good? No, we're off by 20-odd thousand jobs on net. The other thing is the report that came out of the Wall Street Journal earlier this week about concerns regarding the veracity of CPI data. And this is very interesting because, of course, both this and the CPI data come from the Bureau of Labor Statistics, the BLS. And what was really interesting in the Wall Street Journal report is they said, look, because of all of the hiring freezes and job cuts that the administration has pursued and that DOJ has pursued, we have had to rely at the BLS on imputed and substitute figures to a much greater extent than before. And whereas before the survey had maybe 10% was normal to kind of say, you know what, we couldn't get what the price of slacks was in this particular sub-region of the country when we were surveying, but we could get the price of cargo pants close enough. That was basically the upshot. And those kinds of substitutions, those kinds of imputed levels used to be about 10% of the data. As of April, they're like 30%. So how much, because there's just not people to go and do this. So the kind of data that we're going to get is going to be subject to more revisions and is going to be fuzzier. And the upshot for the Fed, which is really why we look at any of this, right? The reason we look at this stuff is to see what policy is going to do. Because this stuff is a direct readout on, so where's the economy? And then the next thing, because where's the economy is kind of an academic question. The real question for us as traders is, well, what are policymakers going to do with where the economy is? And that's what drives markets. So from the Fed's perspective, they're sitting on the sidelines going, well, if we really needed to see surefire evidence that the recession is or isn't here, we have to wait even longer now. We were already going to wait to see the whites of recession's eyes, but if the data isn't good, we need like quite a few months of it, several rounds of revision to really know where we're at. And that's the worst readout of all for markets, especially as fiscal policy is, let us say, increasingly confused with things that aren't fiscal policy, like the president fighting with Elon Musk.
I think the rate implications today, how the bond market's interpreting this, and how the rates pricing market for the next few Fed meetings looks on the other side of this is pretty instrumental for what the Fed may not do the rest of this year.
Yeah.
Oh yeah, I mean,
Yes.
I know it's June, and now we're we're almost at the halfway mark. No Fed cuts this year. That's a conversation we're gonna have to start having. But
I mean, when you look at the front end of the curve, you see it, and when you look at the back end of the Fed funds futures forecast, it's very, very interesting indeed. We're at 40 basis points for this year, so we're kind of on the cusp of what the Fed said. For next year, we've gone to 70 basis points.
It keeps falling right now. In terms of GDP forecasts, we don't have an update today on the other side of the data, but we will have a new one come Monday from the Atlanta Fed, so that will be worth watching. Same for the New York Fed. That will be out later today after the non-farm payrolls report. But the market seems to be taking this in stride. Volatility continues to come in. It's a 13.6 IVR. We're still very much in contango in our VIX futures curve. Front month is sitting below 16 now. And when you see the front month contract, when you look at volatility in general, and it's this low, 17.08. Okay, we're getting back into like that. It's going to be a really boring summer where markets are just kind of floating around one way or the other.
Mm-hmm.
That's not a bad thing. It's just a different environment than one in which you look at a flat volatility curve or markets that are in complete chaos or stress. So today, it's a non-farm payrolls day, and we had whatever that was yesterday afternoon. I mean, yesterday's show, Ilya, was titled Such Ingratitude because the first missives went across the board around 12:46 from Elon Musk. And I just saw him tweet that out, and then the S&P dumped 40 points. So I said, there's probably a straight line here. Well, sure enough, yesterday, if you look at the market pricing, Tesla was worth more than 100% of the loss in the indexes. So, but for Tesla,
They
stocks
lost
have been up.
$152 billion in market cap. Let's just let that sink for a second.
Look, yesterday was such an interesting day. Like the fact that our candlestick looks like this here is not because of the other 499 stocks in the S&P 500. It's because of one single stock in the S&P 500. So, I mean, like, I, for one, was looking at the action yesterday afternoon and saying, like, do I treat this as a legitimate technical signal, as a potential top, knowing the context in which it occurs? I can't. I'm not just saying there's a bull. Today is a different story now. Today's price action, like we've erased the Tesla noise, if you will, in the index here. We did technically poke outside the range. Things are a bit back to normal.
Yeah.
So low vol, there's technically a push to a new high. Same thing here for the NASDAQ. Getting back to yesterday's, we'll call it opening level. Things are normalized, but this isn't good data.
May 29 range high. So in other words, whoa, that was crazy. Nothing's different.
Right. Whoa, that was crazy. Nothing's different. So volatility is low. There's still positive technical drift. We're above the 1 week. We're above the 1 month. We're staying overbought and stochastic, which is something to like. Ilya, why is the stock market up today when this is just glaringly bad news? And it's not like it's the kind of bad news where directionally it's going to push the Fed into giving us cuts sooner. And that to me is the most fascinating part of this whole market reaction. Better to show than tell. So we pull up our CME Fed Watch tool here, and I'm going to zoom in because this is kind of tiny. But we can just see here now the market's pricing in a greater chance of a hike than a cut at the June meeting. And then there's only an 83.5% chance. Well, that's a hold for July. 16.5% chance effectively rounding up for July cut. The next cut may be in September, but earlier this week, this was locked in at 100, and we were leaking into like 2% chance of a 50 basis point cut. And now we're back to 28.56% chance of a hold. So you're getting a stock market rally on weak economic data that is not producing a reaction function for more rate cuts in the imminent future.
Yeah.
Fascinating. Do we not care about anything? Do we not care about anything anymore?
It really is fascinating. We are back to the lowest probability that we are going to actually realize the Fed's 50 basis points that they've forecasted since the second half of February. So this is the least dovish that Fed policy expectations have been since then. It's fascinating. But the outlook for next year in Fed funds futures is the most dovish it's been basically since the beginning of 2024, when we start to get liquidity in Fed funds futures for 2026. So it's really something here. And this idea that you and I have been talking about, I know this has been my favorite horse to ride in the past several weeks, that this is in many ways a repeat of what we saw last year. The Fed is reluctant, but the market has made up its mind. When you look at break-even rates, they're sinking, especially the 5-year, the near term. And that's telling you the market does not have an inflationary concern here. It doesn't think the tariffs are inflationary. It thinks the consequence of the tariffs on growth is disinflationary. It thinks that the growth picture is going to be bad, and the Fed needs to stop messing around and get off the sidelines. We saw this last year. But the Fed is going, we don't know. And so with all of that, you get a further bidding out of rate cut expectations into next year. Now, here's a fascinating little factoid. The bottom in the long bond and the top, the starting of this range in the S&P is exactly the same day. It's May the 22nd. And it's the point where the markets go, right, so they're not cutting this year, so we're going to have to put all these cuts in the back end of the curve, right? Right. Okay. That's the point stocks stop rallying. That's the point the bonds stop falling at the long end. Dollar resumes its decline, having never really pulled back. Once you filter the noise out, the price action is telling you exactly what's occurring. The economy is slowing, the Fed can't act, and the fiscal side of the equation is out doing whatever it's doing, but it isn't managing the economy. It isn't managing the business cycle. So this is a very kind of simple thing, I think.
Russell 2000 is our leader today, in spite of the fact that he had higher yields across the board. So I suppose with gold down, oil up, Russell leading the pack, gotta just say it's a good growth day. Although, again, but we haven't broken out of the...
Funny enough, you know what the worst sector was yesterday? It was consumer discretionary.
Well, you know,
for obvious reasons.
15%.
Yes.
Yeah. So Russell here, the range holds. It's 1980, 2130. It's about 150 points. Have we broken out? No. It's something that Jamal and I are watching here, Ilya. You look to this 4-hour time frame after our gap, right? Left shoulder, head, right shoulder, inverse head and shoulders pattern. I know that's not the place for it, but it's still a triangle then, right? Potentially in an uptrend, and maybe it's a bigger picture, left shoulder, head, right shoulder. If this thing starts to break out, I mean, you got to just trade what's in front of you.
That's right.
But it hasn't broken out yet. And I'm hard pressed to think that nearly 700,000 people reporting fewer jobs, a labor force participation rate dropping, coupled with this shock higher in yields today, is a recipe for Russell's long-term success. So this is an interesting place where, had I been long the Russell, I might think about taking some profit, kicking out duration if I want to stay long to lock in some of those gains and become a little bit less price sensitive up front. And then again, Ilya, yesterday, if we do get a breakout here, we were looking at what would this look like. Interestingly enough, the measured move in the short term would call for a breakout towards 2,300, a little bit north of it. And at 49 days to expiration, the one standard deviation move as priced by options is between 23 and 2,400. So it's not exactly something that would be improbable were it to occur in the time horizon that would be akin to the typical 45 and 20
pie in the sky move. This is not.
No, this is not a madman trade, but I still personally would like to see a bit more before I treat this as our longer term left shoulder, head, right shoulder being carved out as well. But we're at that juncture where we have to start considering Maybe nothing matters. You got to trade the market in front of you.
That's right.
Tariffs be damned. Baker Hughes rig count dropping.
This is the
to
forever problem of
new
the
lows
macro trader is if you don't focus on the price action first, the timing kills you. So you have to trade the market in front of you. I couldn't agree more.
So Russell here, I still have nothing doing right in the Russell. I'm waiting for 2130 to be breached. We're close to it. NASDAQ still leaning long. Ultimately, we rolled out yesterday just because looking at the calendar, Ilya, if we were at 25 DTE yesterday, it would have been 24 today, 23, 22 is the weekend, 21 comes Monday. Did I really want to find myself in a position where I'm rolling out long exposure on what could have been the other side of a bad non-farm payrolls report? No, because now I'm rolling out as we just start to kick over the other side of the decay curve, and these out-of-the-money calls are going to be worth that much less. So I made the decision yesterday to roll out. It took down the convexity, and the position would be doing better today had I left the shorter duration position on, but it would still be out of the money.
Yeah.
So with this edition of 55 days now, if the feeling that I'm feeling that you're feeling about this data and it's like a little uncomfortable.
Yeah.
Well, I'll have time come Monday to make an adjustment without being so close to 21 DT now. So still long the 23,000.
There's an interesting thing that's happening here. Yeah. I mean, I'm not going to change any exposure on the basis of this. I do think that you have a really curious situation here. So if you take that yellow trend line that you have in NASDAQ and you reproduce it in the S&P, you get a real curious sort of thing. And you have to start asking, like, okay, so what does this mean now? Because, as you know, I am not a believer in sort of being actionable with sloped lines because they can be very subjective. But you do have this weird thing occurring now that you tend to happen to see at tops. You break support, which we see here. You come back to retest the confluence of the former high and the underside of the support, which is right where we are. We're not clearing it. We're pointedly holding right there. If this was something that the markets were going to say, oh, goody, everything's great, we'd be rallying. But we're not. Now, again, I am not a believer in subjective sloped lines as an actionable signal. I still set them up because I want to see sort of where the bounds of a trend are. But for it to become actionable, I need for some horizontal levels to clear out because they're much more locked in as far as where they are. So I look at this and I go, okay, so we got this. We have negative oscillator divergence, which is consistent with a top. Where are we when next week begins? And I can't help but think that 6,000 holds here because it has had so many opportunities to break it now. There have been so many resilience moments here where this market could have gone, you know what, it's all clear. But it doesn't want to do it. And that's the same thing in the dollar, and it's the same thing in the bonds. I mean, if you look at the dollar, it takes a hit earlier in the week. It comes back today on NFP. Bonds come down. Yields are up. They're mostly up at the front end, which is fascinating. But they come up. Nothing breaks away. Gold doesn't break away. It's as though the market said, oh, good, Bill Ackman told Musk to stand down, and he kind of begrudgingly, fine, responded. Oh, good. But when you look at how willing the market is to run with that, not very.
No, and say, has Musk tweeted in a while? He started tweeting again like 25 minutes ago. Okay, well, nothing related to the current state of New York Post page 6.
I'm decommissioning Dragon. Okay, I'm not decommissioning Dragon.
If our Nasdaq's going to keep running higher, 22K is kind of the similar situation for the S&P 6,000. We really do need to push through there to substantiate a further break. And so you have 2130 in the Russell.
Yeah. Yeah. Exactly.
Excuse me.
Bless you.
It's like 90 degrees here, and there's so much pollen and dander in the air. This is like the one part of the year I hate, living out in the woods. Ilya, going into next week, the calendar itself, we're going to talk about at the end of the show, but I didn't notice anything crazy that could potentially upend things. There is inflation, but again, we're right before the Fed meeting. So,
yeah.
I mean, what's the biggest risk for stocks next week? We already saw what it was yesterday. Round 2, Godzilla Kong, or I mean, what are we paying attention to for stocks next week?
This is where it gets funny, right? This is where it gets funny. Like, yeah, you got CPI. Is the Fed going to do anything on it? No. Okay, so without CPI, what's the Fed going to do? What's anybody going to trade on? Interestingly, at the end of the week, you have consumer confidence data again. That's probably the thing I am most interested in, because for me now, the main question of all questions is, let's ignore all the nonsense. What matters? GDP is 68.5% consumption. That piece was the weakest since the second quarter of 2023 in the first 3 months of this year. So weakest consumption for the first 3 months of the year in almost 2 years. The tea leaves would tell us that it's going to be the same story in the second quarter. We just got the trade numbers yesterday. Imports cratered. So the front running of the tariffs is ostensibly over. The PMIs would tell us the same thing. So if you couldn't get them to front run purchases in April, probably couldn't get them to do it in May, looking at the consumer confidence numbers. You're not left with a whole lot. We'll see if consumer confidence is terrible again for June, because then you couldn't do it for 3 months, and then the consumption piece is going to be awful in the second quarter too. Forget everything else. If consumption isn't good, there is recession. Full stop. Nothing else matters. So if we're going into a weak consumption thing in the second quarter, this whole thing is going to just become obvious and inescapable, and there's nothing else to think about.
The bond market here is taking it on the chin today. It's probably the sector that's getting hit the hardest. They are weaker across the curve. You see that the 2-year notes are pricing in at the shift. We see that there's a greater chance of a hike than a cut at the meeting in less than 2 weeks' time. Funny how that works out. Market's getting, again, is the Fed going to signal that they're going to hike anytime soon? No. They've been signaling very plainly that they're not doing anything anytime soon, but that is ultimately the adjustment that the market needs to make to a certain extent. So is that technically an overshoot? Yeah. The market shouldn't be pricing in any hike at this meeting, at the next meeting. They shouldn't be pricing in a cut at the next meeting, at the meeting after that.
It's liquidity fuzz. It's not anything.
But we do see that bonds notes here are down across the curve. So ZN, which got back to the midpoint of its recent trading range, and then since falls back, ZB had rallied and looked like it was breaking out, and now it falls back, but not necessarily done yet here. I don't like the candlesticks today, Ilya. Kind of reminds me of this looking thing right here, Evening Star candlestick, or maybe even something like this here, Evening Star candlestick, or hey, even something like this here, which, missing you. 3 candlestick pattern, green, red, and then big red wiping out all the green gains to an effect. And that's what you see here the last 3 days. So on again, off again, on again. Bonds can't find a direction. Certainly driving me crazy. I'm still leaning long deltas. I'm not shocked by what's occurred here today. The whole plan was to, well, if we do get a sell-off in bonds after NFP, what do we do? Is it an opportunity to buy the dip? Yeah. If you're looking at the actual jobs data, this doesn't speak to runaway inflation or stagflation or better growth. It speaks to a weakening economy. And it speaks,
and it speaks to a jobs market that is deteriorating-ish at the margins. It's not breaking yet. The JOLTS report was nice, but sure, we got for April, right? So why are workers reporting 690,000 plus fewer jobs?
And why are jobless claims surging? Like, jobless claims is not a survey number. This is the thing that you constantly have to come back to. People go, "Oh, the jobless claims is a weekly number." It's a very small period of time. Okay, I like to look at the 4-week average to address those kinds of concerns because they're not certainly off base. But you look at the trend and you go, okay, well, NFP is survey data. PMIs, for that matter, are survey data. ADP is a little bit closer to real numbers, but however they construct that is so way off that you don't really get a whole lot of insight out of it. Jobless claims are hard numbers. People applying for unemployment benefits. We have the highest 4-week average at the end of May on jobless claims since October. You know what the NFP number was in October? I noticed this yesterday because I forgot. In October, NFP was 36K. That's it.
Mm-hmm.
And we're at the highest jobless claims average since then. And those are hard figures. So I look at this and I go, listen, I don't know what is going to be the silver lining here, or maybe we just don't care. But the reality of the situation is consumption is most of the economy, and none of it's going to happen without people having money to consume things. And if they don't have jobs, they don't have money. It's a pretty straightforward calculus.
I think there's a statistical reason to pay more attention to the jobless claims than NFP data at this point in time.
Yeah.
When I first started working professionally, the response rates for non-farm payrolls was in the 60s.
Yeah.
As of 2012, in fact, it was 63%. As of 2024, according to the Bureau of Labor Statistics, the response rate in the non-farm payrolls survey has dropped down to 43%. This means that a smaller portion of businesses are responding to the current employment survey, which is what we use to calculate non-farm payrolls.
Yeah.
Jobless claims, though, come from the states, directly from the states, from their labor offices, their labor departments. So it is a fully accurate reading of who's going in and going out. Continuing claims are edging up. Jobless claims are edging up, right? They're not in that panic territory yet. You probably need to see a 300,000 plus reading in weekly jobless claims to really get the fear to set in. All right. Continuing claims need to go up in that neighborhood of 25% or so year over year, which we're not there yet. But I look at this bond move today and it's not helping me at all. I have no reason to get out of this. The market's wrong. I hate saying that. This makes very little sense given the underpinnings here.
Yeah, it does. It does. It makes very little sense. But hey, that's okay. Because this is the kind of thing that creates opportunity. We know that the market is reluctant to respond to negativity. And the one thing that we have in this current environment is no shortage of false crises and then rapid solutions. This is kind of the nature of this WWE type of a news flow environment. The president rages. Somebody in his orbit rages. Something in his vicinity rages. And then 24 hours, 48 hours, a week later, behold, a resolution. A resolution to what? A resolution to the completely unnecessary, utterly useless crisis that was created for no reason. Has anything actually changed? For the most part, no. And so this is why I am increasingly trying to filter out the nonsense and focus on, much as the Fed, the hardest possible numbers you can find. And go, okay, well, the hard numbers tell us a much clearer picture. Yeah. Now let's watch the price action and pick our spots.
We have seen, is a recession imminent? No. Hiring, is it slowing? Yes.
Yeah.
What's hiring right now? Only healthcare and hospitality. You're seeing big job losses in white collar jobs and science and technology jobs. Government jobs are off by about 50,000 officially in the data since December. Not great. There's some softening. I will ride this out because this is not how I thought we'd get lower, but I was anticipating that we might. And the question is it worth now putting on more long deltas here? It's a 17.8 IVR. Oy, that's really low. Is it worth selling some puts down here? I'm at 49 days. I'm still operating the 109, 108 in the short iron condor trade. So let's just say we wanted to go short 109. We'll go short 107.5, 107, right at the one standard deviation move. Like 7-to-1 risk to reward. I'm not enthralled with that type of, if I wanted to get long deltas here, sell the put spread with the volatility profile and current pricing. But are we going to take out the yearly lows that we carved out around the panic with this data in this economy? I mean, I'm going to say no. I don't think we are. So I'm going to hold here to next week. The bond market reaction to all of this is honestly a little confounding. I'd love to see if anyone had a better response. Is it because wages were a little bit firmer? Was that it? Ilya, who are the first people that usually lose their jobs in an economy that's in decline? It's newer workers, right? The people without institutional knowledge at businesses. People think conventionally, let's get rid of all the older people first to make more money. It's not that simple, right? People are going to start shedding people, but they think, okay, the business is going to stay intact. They usually like to keep the old heads on. They stop hiring new people. Maybe some of the newer people who came on board get let go. I don't think this is the mix of what we're looking. Why did 690,000 plus people say they're no longer working? That doesn't seem like it's a lie.
No,
right?
No, they don't. It's not like they're here going, hey, maybe we got some TPP loans we could. That's not coming.
No, it's not. We'll see what happens next. I'm going to continue to bet on the side that growth conditions will kick in because, as you mentioned, this is not inflation related.
No.
Silver here keeps running. It's funny, if you forget the data today and you just look at the asset class mix, it's very much like it was a few days ago when it was silver up, gold down, oil up, stocks up, right? Everything is so positive and awesome. Although if you're long silver, I suppose it's positive and awesome still because this thing
making money is making money. Nothing to sneeze at.
13-year high in silver itself. Gold back in a touch here today. Copper off a bit more, which kind of makes for an interesting asset mix. I've been looking at two potential interpretations of gold up here, Ilya. Of course, there's the conventional, what if we're just continuing higher, symmetrical triangle interpretation.
Yeah.
But there's also the shorter term, what if this breakout fails?
Yes. What if this is a wedge, in other words?
What if this is a wedge, these red lines on here? And the wedge interpretation seems to be getting a little bit more credence here today. We're now down below 2350, which to me is a line in the sand. I'd like to see recovery into the end of the day above 2350. Otherwise, there is certainly something to consider here moving forward. And I think that consideration would be probably not ideal to be long gold right now. But then again, gold coming in with bonds, that makes sense. Is the recession trade really off? Maybe for the next few weeks. But structurally, does this get rid of the uptrend? No, it could mean a pullback down to 3270 or so, the recent swing lows we had on May 28th. But that wouldn't obfuscate or obviate, rather. That wouldn't obviate the broader symmetrical triangle. It would just mean a pullback within it before potentially reloading for another breakout attempt. So I'll keep my eye on this here today, but we've had these two drawn now. We put them on the show yesterday. this looks more like wedge, and you start to then tick down 32.70. If you hold there, you look for a bounce. If you break below 32.70, then it's a clean shot down towards 31.50. And as a gold bull, you got to be open-minded to what the technicals are suggesting, because it's been following them for quite a few months now.
Yeah, I mean, when you look at, and this is why things are funny with sloped lines, the top line of your triangle, it could just as easily be tighter to the third swing high, and then we're just retesting after a breakout has already occurred. Right. That is just as valid. And so I might argue it's more valid because it captures more of the data. So for me, I don't see any reason to do anything here. Okay. I'm a little bit long. We're in congestion with an upside bias. When we get something that's a clearer break, I'll add to my position. I don't see any reason to get any kind of worried.
Techs are the techs. This move in copper, though. We never could.
When we were talking about our growthy day earlier, we're like, we'll just look at the wick on that thing, and what have we had since? We've just basically come back to that candle.
Yeah, I mean, we're off 20 cents in copper from yesterday's high. There were these lows that we had in mid-March that you look on a 4-hour time frame, which is a little bit more of a granular view here. We can see how we swing right around 5.05 into Liberation Day. And that's basically where we kicked or top ticked yesterday at 5.0615. I've been looking for an opportunity to get a better price to sell some put spreads in here after taking profit basically at these levels a few days back. So I missed the past 2 days of gains. I will say if we can get a move down to 4.6, that would be ideal. It feels like this is a range that's still holding. Let's get rid of the triangles, actually. Let's look at this through a different perspective here. Let's call this the range. Duplicate, we're down. All right, that kind of makes a little bit more sense, right? So now we're trading between we'll call it 5 and 450. We're coming off the highs here. Ilya, this copper volatility is actually fairly high still. It's 54.1. So perhaps to remain a bull in gold and silver, we can look to our friend copper here. And if we wanted to take a bearish metal perspective, the pricing on this is actually fairly decent, trading against the recent highs. We can go just through it to say 5.05 and 5.1 on a short call spread. You're doing a little bit better than a 3-to-1 on a risk to reward here, and it's a 66% probability profit. I think that we are range trading this. I don't see a compelling reason for this to break out in the short term.
And I think break out after the apparent détente between Trump and Xi, just even over the past 24 hours, then it doesn't want to go.
Our producer, Josh. Yes, we're going to look at this through a different shape, Josh. We're going to go from rectangles to triangles because that is a valid thing to say from a technical perspective. We're drawing with crayons here. Forgive us. In that case, let's call it the range that's holding here. Forget the triangle. Let's think it's a rectangle. This is a good way to bracket off some of that gold exposure. I like a short call spread here. I'll wait to swing this down into 4.546. At 4.546, I'll take it off no matter what, and I'll flip to being back with a short put spread.
Yeah.
And there we have it. So that's my operating procedure here in copper, Ilya. Not going to change anything else.
Yeah, I don't have any exposure here. Copper is not one of those assets that works well with the way that I approach markets. Because there's really not a great instrument to be as nimble with kind of small positions taken on and off in a risk-defined way until you get conviction. So I look at it more as an indicator at this point than I do as a tradable asset, just because I don't want the full HG contract, and the ETFs aren't really that liquid. So I'm looking at it and going, okay, well, what kind of an indicator is this for growth? No kind of indicator. It's sideways. But sideways. What it isn't is a screaming endorsement of everybody needs to be cool, growth is fine. Or there is no trade war taco. It's none of those things.
Oil is given a different story today.
I did get out of this today.
I think
this looks like a breakout now.
It does look like a breakout. It really does. It's a 29.2 IVR. That's what makes this interesting, right? So there's clear. We talked about this the last few days here. What does this look like when you go down to a 4-hour time frame? You have this channel drawn here. You break out into 64.
Yeah.
As you pull back, you're treating former channel resistance as support. Now through 64. Let's see what happens on this 4-hour. The rest of the session here. But from my point of view, at 41 DTE, I'm not loving the placement of my strikes right now. Okay, and so this is my game plan for the rest of today's session, keeping in mind where we're operating effectively at the midpoint between the pre-liberation day high and the post-liberation day low. If we are indeed breaking out through 64, I want to treat the swing lows just below 60 as the point at which I want to trade around. And you can see here a left shoulder, head, right shoulder, potential inverse head and shoulder that mark the bottom. That has a neckline, right? Oh, same spot, right just below 60. So keeping that in mind here, how this day ends up, we'll see. But if we manage to start inching closer towards a close near or above 64, my plan is to shift the strikes in the short put spread side of the iron condor from 53.55 up to 56.58, bracketing in the one standard deviation move, and then kicking out the short call spread side of this from 68.70. And again, looking at the chart, the pre-liberation day swing high is now north in the CLN5 contract. We're in CLQ5 technically, so we'll make a move over there. Q5. CLQ5, the highs are 70.44. So going back to this, on the other side of 70.44, 71.73, that becomes a new 64% probability of profit. It's still in the neighborhood of 3-to-1. I'm not loving it as much as I used to because it's now only a 29.3 IVR, not a 45 or a 50. But it's still something to do there that's not correlated with much of anything else, I suppose, because I'm directional in most other things. But I do think, as we've discussed in recent days early on over time, almost here on CLQ5, almost through 64, 63.55 right now. So not yet, but
not
worth
yet.
watching.
And I think that's the key for me. So I got out of my my put vertical here, and thank God for verticals. I got out, and thank God for duration. So that's been my MO. Lots of duration, always risk defined. These are very shaky markets. So I took a tiny little loss on this, and frankly, it came in at less than 0.5% of equity. So liquid MCL futures. Thank you very much. So I got out, but I'm not going to go the other way, because if you pull back a little bit on this chart, and you can go to a daily, and as long as we stay in CLQ5, you have the underside of the sell-off that terminates on March 5th. And there's a kind of bottoming there, March 5th through March 12th. And you haven't come back over that here. So you've cleared the ranged highs, kinda, but you're not through former support become resistance, so you don't have confirmation. And if you don't have confirmation, there's those lows right there. You've not cleared that. So I'm
that low,
not
by the way,
prepared to-
63.82 is that low. Today's high is 63.79. Which is why I'm just like, I just want to see.
I'm not there yet, but
64.
Yeah. Break. It breaks, I'm in. Cool. I have no problem being a buyer of oil. It doesn't rattle any of my macro feathers here. It's okay. But it's just not quite there. You don't have price confirmation. Maybe next week.
The dollar following yields kind of this week we've seen some examples of things getting back to normal, right? Like stocks up, bonds down, bonds down, higher yields, stronger dollar. What kind of bizarro world is this? That's what they say should be happening in the textbooks. That's not supposed to happen in real life. But there's a marked decline in vol still here. Canadian dollar after top ticking to a fresh yearly high yesterday, a little bit off. You're going to see this pattern a lot. Big green day, somewhat of a doji or green candle with a long upper wick, and then today a little bit red. Kind of looks toppy in the pound.
Not clearing any bounds still. See, and this is the frustrating thing across all of them. None of them are clearing resistance turned support. Not a single one of them.
The swing low yesterday in the euro is at 113.66. Right. Yeah. So if you've missed them, if I'm just thinking about this right now, if I'm doing it in futures or in spot on tastyfx,
I would looks like a discount, right?
Do you buy here at trend support near the swing low, or if you're going to get bearish? I mean, you really can't get bearish here. You have to wait. You have to wait to see if we drop below 113 and 60 change, right? But you can see it rounding out in DXY itself. That line in the sand for us has really just basically been 100. If we go back to last September, before the dollar started following again, those yields higher because the market was pricing in this expansionist fiscal policy that Trump would bring, higher growth, higher inflation, both ends of it. That we remain below there. Again, DXY, red bar, doji-ish hammer, green bar, Morningstar candlestick cluster. Like there, you can put together the pieces. Oh, is this now a double bottom? Big low here, morning cluster there. You can put together puzzle pieces and tell yourself a story. Maybe the risk to reward right now in the short term, Ilya, is to be long dollars. I, for one, though, still have no desire to be long the Japanese yen. Forget the rate differentials as we close this out here, Ilya. Again, the most recent CFTC COT reports, you add it all up, traders have never been longer the Japanese yen. That scares the living lights out of me. I will not operate long the yen right now. I don't like being on a crowded bus. It makes me claustrophobic. Okay? So I live out here in the woods. I like having space. And so to that end, I don't want to be in a trade where
coming from a New Yorker, hilarious.
I don't like being in a trade where literally it's never been more crowded. Because if something happens and it snaps, and because it's a foreign currency, that snap could occur in the middle of the night.
Yeah.
So if I'm going to pick up pennies in front of a steamroller, that's not my risk profile. I will do something else. If I want to be,
I'm still long yen, but I'm long yen from quite a while back because you know what's nice about spot. You don't
much more
have
manageable
to worry
position
about
size
and no expirations, auto rolls.
Yes.
So
yes.
So I've been sitting in a long yen position on the spot side for a while. It's cost me a little bit of carry, but it's more than made up for it with price development by a long mile. So I'm just gonna wait. And because spot is so flexible, you can stay nimble on your sizing. Check the tastyfx tab in the platform. You can now do a spot position directly from your platform. I just activated my account on this and funded it, so I'm ready to go. I'm ready to start putting this stuff directly into my Tasty account.
You can finally start trading your British pound Mexican peso cross again, which I know you love so much.
I'm so excited. You have no idea. Like that I can have all of it in one platform. And spot is my first love. So that I can do this now all in one place. My excitement knows no bounds.
So usually at the end of the show, we do a look ahead on the calendar for the next day. Monday's a pretty light day data-wise. So we're going to look at the week ahead here at the end of the show because we did cover non-farm payrolls up front. I will say you see here Sunday night figures. Those are true because China is going to have some inflation data due out. We should be watching that. It's at 9:30 Eastern time, 8:30 Central. The UK has
they
jobs.
do report on time, by the way.
They do report on time. There is no important Monday data at all. The only thing on Tuesday is the UK jobs report, perhaps. Okay, now we're actually talking Wednesday, Thursday, Friday. That's what we're paying attention to. Ilya, if you're going to be looking for economic data to move the needle, granted, I don't think it will. You have your CPI report on Wednesday morning. It's looking for a slight little bit of a push higher here as we go into a month where we get some potential impact from the tariffs. We're in a Fed communication blackout window as well, starting tomorrow. Nick Timrose might be.
Are you not entertained?
Nick Timrose might be the most important man in the world next Wednesday, the Wall Street Journal reporter. So if you don't follow him on Twitter,
follow the man on the platform formerly known as Twitter. It's a gold mine.
Yeah, you see, I'm not going to call it X. It's like Coca-Cola forcing everyone to call it New Coke.
Not going to do it.
Not happening to me.
Not going to do it.
Ilya, you and I are done here today. Don't know what that means, Josh. Doja Cat? I hope everyone has a good weekend. Ilya, you and I will be back. You'll be back, what, Sunday for first call?
Yes, sir.
All right. Well, we'll see you there. For everyone else,
back, everybody.
For everyone else, good luck trading the rest of today. We'll catch you on the other side of the weekend. But, of course, Tasty Live programming continues. We're taking a quick break. After this, Dr. Jim Schultz is here with From Theory to Practice. See you soon.
Have a good weekend, everybody.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Stephen and Lan, thank you so much for holding.
My pleasure, guys. And let me go on record as saying I think you've got Tasty Trade is the best brokerage, and you guys have the best content. And I'm not here just schmoozing. Y'all are the best on the planet, period, for what you do. Go on record as saying that. Tom,
Thanks.
you were the great disruptor when it came to forming Thinkorswim and then Tasty Trade. You're an innovator.
I appreciate you calling in. Good stuff as always. Thanks, man.
Feel like your wardrobe is missing something?
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Stephen and Land, thank you so much for holding.
My pleasure, guys. And let me go on record as saying I think you've got Tasty Trade is the best brokerage, and you guys have the best content. And I'm not here just schmoozing. Y'all are the best on the planet, period, for what you do. Go on record as saying that. Tom,
Thanks.
You were the great disruptor when it came to forming Thinkorswim and then Tasty Trade. You're an innovator.
I appreciate you calling in. Good stuff as always. Thanks, man.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Tim Schulten, this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Friday edition of What It Is That We Are Trying to Do. Welcome to the Man I Really Hope That My Video Holds Out edition of What It Is That We Are Trying to Do. Now, I know, I got lots of emails yesterday saying, Jim, I'm kind of digging the sultry voice. Like, Jim, like audio only, like I kind of think you might have a face for radio. Like, not only do you have the sultry voice, but the face, man, that thing was meant for the radio airwave. So you guys might have to deal with the video anyway if it does hold out today. But I've got my eyes on a couple of different things. I should hopefully be able to figure out if it's working or not working. And if it doesn't, man, we're just going to mail it in, crack open some natty light ices, and figure it out on Monday. So thank you so much for being here, and thank you for being a part of the network, because it's only because of you guys that we can do what we do. So thank you guys so much. If you're watching over on the Tasty Live Network, now we're actually bounce on over to YouTube, because you can join the conversation and join the discussion and communicate with your brethren who are also watching the show. You can celebrate if you are a bull, of course. You can commiserate if you are a bear. I still can't believe it. We made it through the most important NFP print of our lifetime. So, Josh, bring us into the market. Let's see if we still have a market Man, I think we got something. We got something cooking. All right, so we've got, man, look at this. Man, look at this. E-mini S&P's up 67. Risk-free instrument up 262. Also known as the NASDAQ futures. Extremely high-risk product. Got the boomers up 414. You got the Russell 2000 futures index up 28 on the day. You got bonds down a point. You got notes down, 26 ticks. You got oil up $1. You got UB40 getting smacked around a little bit, down a point. You got the shifties just getting absolutely ironed out today, down 32. You got, I think, silver up today. Isn't silver positive today? Hold on a second. If I go to silver, man, look at silver. This thing is crazy. So silver up 36 cents on the day. When you've got gold down, you don't see that too often. You actually see them typically tend to follow each other. Not unlike chest and back, not unlike buys and tries. Right? Like silver up and gold down. Man, what is that like doing? Man, that's like doing quads and forearms on the same day. Like that's us saying, all right, like let me get my serratus today, and then let me go ahead and get maybe a hamstring pump. Like that doesn't really make a lot of sense, but nevertheless, this is where we're at. And of course, I've had many serratus hams days myself. So silver up a bunch. The metal is doing good. The pizza slices, they're slanging out the back. The Hunt brothers, they're also doing pretty good. And so everybody's happy. So all right, so what I want to do today, obviously, we need to address. We've made it 6 minutes into the video, and it's still going, I think. So that's pretty good. Let's talk about the stacks of cash that we lit on fire yesterday. Now the SPX trade is not our finest work. Not our finest work at all. We'll talk about that here in a couple of minutes. But man, it looks like Avgo just went ahead and saved Christmas. Man, look at this. Somebody reminded me of Avgo in the chat. This was not my trade. That probably is why it was successful. And so thank you, whoever reminded me of Avgo. I think it was, who was it? Was it Chris? I want to say it was Chris. I want to say Chris brought it up earlier this week, and then somebody reminded me of it yesterday. I think it was kind of like a two-pronged effect in terms of who's responsible for the Avgo trade. And so Avgo is saving Christmas. And then gold, again, that's another stack of cash that it's not quite a pile of ashes, but man, it's close. I mean, it's real close. Like you can smell the burnt nature of it in the air. Like it's more than just smoke at this point. Like you can say, man, is something burning? Like, did somebody leave a toaster on or something? Like, that's our GC butterfly because it expires on Monday and it doesn't look like it's going to work. We still have a couple bucks left in there. And so we're going to hold tight and see what happens over the weekend because you've got weekend risk. You've got Trump and Elon. You've got Trump and Xi. You got a whole bunch of stuff that could potentially happen this weekend that could send gold higher. And so I'm going to sit tight on the gold trade and do nothing. But the two that I really want to talk about today are going to be SPX and Avgo because those are the two that really are a bit more relevant. So SPX and Avgo. So, essentially, if you did the exact opposite, if you, again, sight unseen, right? Carte blanche, like whatever other colloquialism you want to use here that might apply, throw the baby out with the bathwater. I mean, it's a Friday, man. Do whatever you want. If you just took the opposite of every one of my trades, again, you have sped up your path to financial independence by a minimum of 24 months. Minimum. And so, yes, you would have gotten, creamed on the Avgo trade, but man, you would have banked on the SPX trade and you would have also banked on the GC trade. So remember that in the future. I try to tell you guys this as often as I can. I tell it to you when we have video. I tell it to you in my sultry voice when it's just audio. Like I try to remind you guys as often as we possibly can that you should be doing the exact opposite of everything that I do on this show. Doesn't matter how confident that I might sound. It doesn't matter how sultry the voice might be. You need to do the exact opposite. And so I will remind you again that come next week when we're doing, man, what's going on? Hold on, guys. Wait a second. If we just had NFP, right, and we made it through, which I'm still not quite sure, like, is this the in-between? Like, is this Lost Season 6? Like, I'm not sure. Let's assume that we made it through. If I'm not mistaken, that means that next week is CPI and PPI. Now, I can't remember which comes first. Normally it is CPI first and then PPI second, much like normally you hit buys first and then tries second. But every once in a while, you can mix it up and shock the muscle and do tries first. And every once in a while, the calendar shocks the muscle and throws PPI first. I'm not sure which one comes first, but they always go together. Like they're always going to be in the same week. I'm pretty sure that's next week. And by any estimation, this is not good, guys. The CPI and the PPI that are coming out down the chutes, These are going to be the most impactful economic prints that you've ever experienced. I can assure you that the apocalypse, you may have dodged it today, you are not going to be so lucky next week. And so Tuesday, Wednesday, Thursday, Monday, Friday, whatever the sequence is for CPI and PPI, I would definitely be on the lookout for that. So that's coming on down the chutes next week. And so regardless of how confident that I might sound and how much chutzpah I might bring to the screen, or maybe to only the radio airwaves if the video drops on us, you should do the exact opposite. So remember that next week when I'm doing, expecting move butterflies and even strangles. Like if I sell a strangle, you should be buying that strangle. Like you and me should just be in the upstairs room, like doing, off the market, dark pool trades. Like just take the opposite of everything I do. Like when I'm selling verticals, you should be buying verticals. When I'm selling puts, you should be buying puts. Right? Old Coleman style. My man's buying puts now. That's a bold strategy, Cotton. Let's see how it plays out for him. But nevertheless, I digress. All right. So SPX. There's nothing left. Before the show, it's kind of funny. So before the show, I was looking at this trade. Obviously, I was looking at all of my trades, and I was lamenting my situation. And I was like, all right, this is not that great. Like this is, pretty awful actually for SPX. But I was like, it was selling for like maybe I want to say $1, maybe $1.20. Like it wasn't very much. But this is obviously when SPX was, maybe 15 points lower than it is right now. I was like, man, should we just take this off? Like, should we just save this $1? But then I was like, I don't know, man. Like I get up on my high horse all the time. I get up on my soapbox all the time. And I'm always preaching to y'all. Like, hey, you've paid for that time. You've done this. You've done that. Like you should hold this thing all the way to the end. Like hold it all the way to the end. Like ride or die all the way to expiration if that's what it takes. So I'm like, man, am I really going to say that on the one hand? And then on the other hand, I do something completely different? I'm like, who am I, Tom Sosnoff? I mean, that would be a Tom Sosnoff move. And generally speaking, we try to fade Tom Sosnoff moves on a mostly daily basis. And so I'm not going to do that. So we end up holding the trade, and it cost us $1 basically. So we should have closed it, but that's SPX. It's not coming back. Yes, we have an hour 45 left, and anything could happen, of course. But it's not looking too good as the market continues higher, and the metals continue. Well, the gold metal continues to fall, whereas silver remained fairly strong today. So SPX, it looks like it's not coming back, and that's going to be that. But Avgo came back. In fact, it actually never left. And so with Avgo, this was Broadcom's earnings last night. So again, thank you guys. You guys saved Christmas here in June in St. Petersburg, which is much, much appreciated. And so Avgo, it's going to expire here in about an hour and a half, and we've basically gotten pretty close to maximum profit on the strategy. There's still a few dollars left, I guess we could try to squeeze out of this guy, but man, that doesn't really seem like a super smart idea, in my opinion, to try to, hold this guy for a few extra dollars when we have a really nice trade on our hands. It's not quite going to wipe away the the SPX trade. Oh wait, no, hold on. It actually might. It's interesting because I'm actually trying to wave my hands more than I normally do, which I do quite a bit anyway, but that way I could see out of the corner of my eye that the video is still working. So you guys may get more hand motions here in the future. But if I look at Avgo, so if I go to Avgo, this is the P&O open. Now, Avgo was all today. Now, yesterday when we put the SPX trade on, the market started to dump. Like the market was actually super weak going into the close. It started to happen on the show, and then it continued happening after the show and all the way into the close. And so our SPX butterfly, I think it was up like maybe $1.50 or $1.75 like by the close. Now, obviously, I wasn't going to take it off because I was like, hey, let's let this guy ride for the binary event tomorrow and all those things. And so famous last words, of course. But it looks like so we're down about $8 today, but that's because we were up $1.50 yesterday when the market actually closed. And so on the actual P&L open, it looks like if you net these two together, so Avgo, you've got, this guy right here, and then SPX is this guy right here, which I guess I didn't really need to circle them again, but it felt right to go ahead and do that. They basically cancel each other out. So that's going to be kind of nice. And so basically, the rubber match, if you will, is going to be Monday on the gold trade. Now, it's not looking too good because we need gold up about 40 points. We basically need gold to reverse the curse here, 2004 Boston Red Sox style, to bring this guy back on Monday, which is not looking too good, much like the 2025 Boston Red Sox. But let's go ahead and let's close out of Avgo. So let's see. Let's close out of Avgo. We'll do the full. We'll just get out of this guy. Whatever they'll give us, we'll take. I'll try like maybe 10.02. I don't think I'll get filled, but you never know. I've seen crazier things. All right, so man, we're 15 minutes into the show, Josh, and the video's working. This is really exciting. Ryan, thank you so much for your help earlier trying to troubleshoot the situation, and we may have gotten to some type of equilibrium point, but time will tell. Sorry, so Avgo, we're out of Avgo, and again, it basically is going to serve as, a washing away of the SPX trade. And then GC is going to be, we'll see what happens on Monday. I'll open up GC just so you guys can see. If you missed the show yesterday, we did this trade on yesterday's program. And I certainly wish that we had not done this trade on yesterday's program or any program for that matter. We are long a 33.80 call. We're short a couple 34.15 calls, and then we're long a 34.50 call. So this is a standard Betty Crocker butterfly. This was the expected move at the time of yesterday. So when we did this trade yesterday, gold was right around 33.80 or thereabouts. It is now at 33.40 or 33.39. And so we've got our work cut off for us. But gold can move 30, 40, 50 points in a day. That's not really that difficult for gold to do, especially because, again, the expiration is Monday, and I think it's at like 12:30 on Monday. I'll have to double check the calendar if this guy becomes, or not the calendar per se, but the actual futures contract specifics. Because if this guy actually becomes, in play, or it actually has a chance to maybe potentially be profitable, I'm going to want to be more aware of when the options expire. I think the metals options, like equity options and equity futures, they don't expire until the end of the day. That's what we're used to. But the metals markets, I think they close at like 12:30 or maybe 1:30 Eastern. I'll have to double check that again. But the good thing is, gold is very, very active in the evening hours, overnight hours, and then the early morning hours, like before the market even opens, and then for the first hour or two of the market being open. So even though the gold options here are likely going to expire Monday afternoon at some time, we're going to have plenty of opportunity for this guy to come back. Now, of course, that doesn't mean it's going to come back. In fact, given the fact that I'm long, it's most likely going to continue going south. But in the event that it actually does go higher, we got a shot. We got an outside shot to bring this guy back. All right, so that's gold. That's Avgo. That's SPX. And then, man, there isn't really anything else to do. I kind of want to go. Let's go to the questions. Because yesterday I got shortchanged on a bunch of those because, again, I got thrown off because of the video dropping and all those different things. And so let's get in here. Man, let me see where you guys are at. Let's see here. Here we go. Man, I'm just grabbing like the first one that I see in the middle that looks reasonably strong in terms of the question. I'm going to surprise and delight someone in the middle. I'm going to go with LS So, which is like smack dab in the middle of the chat. Says, hello, Dr. Jim. What are the gimmies and gotchas of buying a 5 to 10 delta ES put to protect your overall portfolio against a large drawdown 6 to 12 months out? Great question, Elso. And so, man, I appreciate you. I appreciate you for being here. Thank you so much. This is an excellent question. So I'm going to zoom out a little bit from your specific question and kind of address a more general question, which is hedging your portfolio against drawdowns. And so you gave one specific way to do that. I'm going to address the specific way that you gave, but also offer up a few others. And so we've talked about this before on the show. And so if you are a regular viewer of From Theory to Practice, thank you so much. This might be a little bit repetitive for you, but just bear with me. In my opinion, there are 4 ways, and I'm going to put them here on our blackboard that is kind of right in the center of the platform. It's kind of like a makeshift. You can trade futures, right? You can sell premium, you can scalp, you can do pairs trades, and you can also do this. Like you can also have a nice little blackboard here in Tasty Trade. So it's amazing. All right. So there are 4 different ways that you can hedge your portfolio. Now, there may be more than this. This may not necessarily be an exhaustive list, but I think it's probably pretty close to being exhaustive. So number 4, in my opinion, these are the 4 ways that you can hedge your portfolio, and I'm going to rank them in order of 1 to 4. 4 being the worst way, in my opinion. Number 1, obviously, being the best way. So number 4 actually ends up being exactly what you said. L's so you could buy puts. So you could buy puts in like SPY, or you said ES, which is the same thing. Essentially, it just depends on whether or not you want to use SPY, kind of the equity ETF, or do you want to use futures like ES, MES, etc. Okay, this is the worst way to do it in my opinion, and the reason why is actually twofold. Number 1, whenever you buy options, any options, calls, puts, whatever, whenever you buy options, especially out of the money options, because that's what you would be buying. I mean, you can set a 5 to 10 delta, put to protect your portfolio. Whenever you buy an option, especially an out of the money option, you have to absorb a significant amount of theta decay, where the options price is just going to bleed out over time, especially when it's out of the money. There's no intrinsic value. The decay on that option is going to be quite significant, and you are going to be fighting an uphill battle, to be profitable on that trade. Now, you might be saying, but wait a minute, Jim, that's not even what I want. I'm just buying this as insurance. I'm just buying this as a way to, let me sleep at night. Hey, there's a lot of power in that. All kidding aside, there's a lot of power in that. There's a lot of value in that. And if that's what it takes to really kind of put your mind at ease, then by all means, Elso and everybody else, go for it. Go for it. In the end, this is going to be a drag. In the end, this is going to be a cost to you. But you might view it no differently than you view, I don't know, your homeowner's insurance or fire insurance or flood insurance if you live in Southwest Florida like I do. It's like, man, I really hope I don't have to use this flood insurance. I'm not buying this flood insurance hoping I get a positive ROI. Not at all. I'm hoping this is money down the drain. I don't want to have to call up the insurance company well, we got flooded again. Time to ring the register on my flood insurance. No, I don't want to do that. So you might be viewing it the same way. Still, I think there are better ways to hedge your portfolio. Okay, so that's number 4. Number 3, which is actually very similar to number 4. It's probably like a 3A and 3B. You could buy VIX calls. And the reason why you would do this is because market movement and volatility oftentimes move inversely of one another. So if the market is dropping significantly, volatility is usually going through the roof as there's more uncertainty in the world. Trump's not answering Elon's calls. Elon's not texting Trump back, things like that. And so the volatility index in the market, the VIX, usually goes much, much higher. So you could buy VIX calls to take advantage of that. Okay, what are the problems with this? Well, one of the big problems, there are 2 problems with this. Number 1, volatility is expensive. So volatility is very expensive. And this is actually a problem with the out of the money puts on the SPY or ES as well. When you get out of the money, because everybody wants to do this, the implied volatility of those out of the money strikes is oftentimes much, much higher, relatively speaking, and you're paying for that. Well, the same thing is true with just volatility instruments in general. And so volatility likes to contract. Volatility likes to move lower. It likes to kind of just slowly grind down. And so that's why being long volatility is a very difficult thing to hold unless you have a very, very, very sophisticated grasp of, volatility curves and, playing the volatility markets and doing things like that, which I don't even have myself, and you may or may not have yourself. And so just understand what you're kind of getting yourself into, and that volatility is very expensive. But then also number 2, and this just kind of, popped onto my radar in about the last 12 months. Do you guys remember? In fact, here, I'm actually going to, let me delete this. We'll come back to that in a second. This is such a good question, also. But let me go to the VIX. We joke about this a lot, right? I've joked about this, in the past and whatever. But this is kind of this is serious stuff. You go back to August, right? You guys remember this? Let's ask you again. That was a crazy day. That was a crazy, crazy day because NASDAQ was down 1,400 points. It was nuts. It was crazy. The craziest thing was the VIX. You could see it was up to 65 or 64 or whatever, right? But the actual real VIX ceiling for that day wasn't 64 or 65. Even though in the pre-market and on the market open, it was 64, 65, whatever, the calls that you would buy on the VIX never actually got to that point. They never actually read, a 65 VIX print. And so this is, I've joked about this a lot, being imaginary, being whatever, and all those kinds of things. But man, if you're holding long calls in the VIX, this would frustrate me to no end, because it's this is exactly why I had this trade on. This is exactly why, I had this product in place for this very moment. And then because of the VIX calculation, because of the way the model calculates with, consecutive bid prices and things we've actually looked at here on this show before, and on the skinny on options abstract applications with Tom and Tony, I've broken down the VIX calculation as well. So you can search for that. It's in the archives, and I break it down. It has to do with the consecutive bid prices being non-zero. That's what essentially threw off, the VIX print and this being imaginary and all those kinds of things. Man, if you're holding VIX calls, though, it's man, what a slap in the face. Like, what a kick in the kidney, man. Like, that's a real difficult one to kind of handle. So, if you're going to trade VIX, that's something to be aware of. All right, so that's number 2. Or I'm sorry, that's number 3. Number 2, another good way to hedge your portfolio is going to simply be holding short delta. So you could also hold some short delta, right, where you actually have some short delta in your portfolio, specifically static short delta. You have short future, short stock, whatever, that's in place to help you buffer against big drawdowns. Now, again, your net delta in the portfolio overall may be positive, but you have some, earmarked positions that are there to help soften the blow if there is indeed a big drawdown. In my opinion, static short delta is more effective at doing this than dynamic short delta. And what I mean by that is, if I'm short futures, that's static delta. The delta does not change on that position. If the market starts going down, I continue to get paid 1-for-1 with those moves. I mean, I get paid based on the multipliers of the futures contract and things like that. But what I mean is the delta doesn't change. The delta is static across that move, for better or worse. If you generate short delta through something like a short call or like a short call spread, which is what we typically do as premium sellers, you just have to understand that's dynamic delta. Like, that delta is going to change. And as the move goes in your favor, so in this case, the market goes lower and lower, the delta actually gets smaller and smaller. So the magnitudinal impact of, the incremental, 5 points lower in the market is not going to help you as much as the previous 5 points lower helped you. So just be aware of what you're signing up for. Again, there it is again. We say it all the time. Number 1, though, also, and everybody else, since this is basically going to be the entire show today, this one question. You need to stay small. So if you stay small with your position sizing, in my opinion, you kind of remove the need to hedge a lot of your positions. Now, you may still want to do it, peace of mind, blah, blah, blah. Like, I understand that. But if you're small enough with individual position size, overall capital allocation, then you can remove the need to really feel the pressure to be hedged all the time, most of the time. You fill in the blank with whatever you want. But if you're small enough with your position size, I don't think you should be coming into the market every day thinking, all right, where am I going to put on my new hedge today? Like, all right, like, how am I going to hedge what I've got going on? If you are constantly needing to do that, in my opinion, you are too big, and you need to nip the source problem in the bud, which is the position size. So that's what I would do. Also, there's more than you ever wanted to know about your innocent little question there. But I appreciate you, man. I appreciate you so much. All right, let's go to the beginning. Oh, man, where are you guys at? All right, so let's see. Daniel Perkins in the house. What's going on there, Daniel Perkins? Hey, Dr. J, as predicted, yesterday's giant sell-off was a total overreaction. Yes, it was. The giant sell-off of 80 points in the NASDAQ or whatever. Of course, I would say the same thing if we were down 3%. Yes, and, it's just, things change and markets move, man. Markets go up and markets go down. And so, if you had to ask me, you've got ES at 6,000. It's obviously at 6,012, but let's just make the numbers easy. You've got ES at 6,000. What are we going to see first? Are we going to see 6,300, which might be an all-time high, or are we going to see 5,700? I'm not so sure. The market's been so resilient. I still think we're going to see a lot of weakness for the rest of the year, and it could be really bumpy, really choppy. I really don't think that we're out of the woods yet. I think we'll have more imaginary VIX prints that come on down the chutes in the preceding months and things of that nature. But if you were asking me for the next 300 points, I would actually potentially say 6,300. Now, again, I think I'm more successful than Inverse Kramer. I think Inverse Dr. Jim, it rivals Inverse Kramer. It's really kind of like 6 of one, half dozen of the other in terms of the effectiveness. And so this essentially cements in the 5,700. But how do you guys know that this isn't what I secretly want to have happen? So I said 6,300 to George Costanza and myself. And so there you have it. I'll let you guys wonder what the actual truth of all of that is. But thank you, Daniel Perkins. I appreciate you. You know that I do. Sam L's in the house. Bonjour. What's going on there, Sam L? I appreciate you so much. Sam L says, Doc, we survived the NFP and the VIX is under 16. Is it really? No way. Did that? Oh, there's okay. No. It's under 17. It's under 17. It wasn't under 16 today, was it? No, I think you meant to say under 17. Yeah, it's under 17. Under 16 is seriously, drop the video, drop the audio, Like we're done. It's over. Like mail it in, wake me up when it's 28 again. And so, man, VIX at 1677 though, down $1.70. That's some volatility contraction right there. And so, but Sam L says, is this an end of the week RIP? Or do you end of the week RIP? So you probably don't mean RIP, you probably mean RIP, or just a sneaky rug pull setup. It's probably both. It's probably both and none, all at the same time. And so let's see. Oh, Sam L says you nailed Avgo earnings to the downside. I didn't nail it. It was y'all. Y'all saved me, man. Y'all saved the show. You saved the show. I wasn't even going to do it. I had completely forgotten about it. And so somebody brought it up in the chat yesterday. So thank you again for whoever did that, because otherwise we would have had to eat both SPX and GC. Now it looks like we're only going to have to eat GC on Monday, which is good. That's a positive thing. And so, Sam L says, now just waiting for the victory dance, which you got already. And a reservation at Bonefish tonight. You know what's funny? So Autumn and I actually have a date tonight. Like babysitters coming, actually getting out for a couple hours, which is really nice. We're only able to do it maybe we probably only end up doing it like once a month. Sometimes not even that. We just forget life, small children, stuff like that. So we're going out tonight, and we're actually going bowling, which I'm not a great bowler. I'm very average, but every once in a while I get on a streak, you kind of find that rhythm. And then the next thing you know, I'm at like a 170, 180. Like I'm not like a 220, 240 guy. But man, if all the stars align and all the pins align, I can roll you a 185. I can roll you a 188. And so we're actually going to go bowling with some friends of ours, and then we are going to go to dinner. And Autumn just told me I don't want to go to Bonefish tonight, and I was like, man, like is this grounds for divorce? Like I've not really thought about it before, but I think now this could be a real big problem for me. And so tonight I'm going to let it slide. But man, if it keeps coming up, that's going to be an issue that we're going to have to probably seek some professional help on. And so Scramble Everything is in the house. Hey, Dr. Jim, glad to see you are here alive and survived. Although I don't know, the video's working, so it's probably not me. Right? The video's looking good. Like it's looking smooth. Right? The video's looking smooth. The flow is looking, B- today. So those two things together, this is absolutely a deep fake. So we just figured out, like, whenever I try to do it myself, everything just blows up. I can't fix it in the moment. It's a complete train wreck. So we just decided to have the robots, get in place for me. And so, I mean, again, I could just be doing weighted chins. Like, how would you guys even know? And so Scramble Everything says, the NFP and Jerry Springer special with Elon and Trump. You're amazing. Yes, I appreciate you. Yes, I'm waiting for it. I mean, I've seen everybody's got a hot take on this. And it's funny. It's so funny. Everybody's got a hot take, like, they're going to be BFFs again by the weekend. Like, this is 5D chess. It's all staged. It's all whatever. I mean, I don't know, man. It's just funny, man. I just think it's really funny. It's like a reality TV show, but we're actually living it. Like, it's like a reality TV show, but we're not watching, I'm not watching Fox, I'm not watching HGTV. Like, this is actually happening. And so it's entertaining, at least. And so Gapper X in the house. What's going on there, Gapper? Appreciate you. Spicy says, is your camera working, man? So far, and now we've only got 8 minutes left in the show. So now if it bombs out, I'm gonna call it a victory on the video. So that's good. It's very encouraging. James Bond number 4 is in the house. What's going on there, James Bond? Happy Friday, Dr. Jim. How would you trade the gaming casino stocks, considering that tourism to Vegas is down sharply, high resort fees, etc., or stay away? Do you have any thoughts? So you're talking about like Wynn? Like, hold on, let's see. Like, so you got Wynn would be one. So like Wynn's, obviously down from, wow, that's a pretty big drop. I mean, Wynn was at about 100 just a couple weeks ago, and now it's down to 84. I don't know. I mean, if you want to try to read into it that way, as far as, economically, like if you're like, hey, I think that there's going to be less foot traffic in Vegas, fewer people gambling, like less revenue for the casinos, whatever, then play it to the downside. I say go ahead and, go for it. I personally don't think that it's ever that easy. I personally don't think that it's ever just that clean, because, I mean, you could get all of that, James Bond, right? You could get all the foot traffic, you could get the tourism, you could get the this and the that, and then you get Wynn coming out on their next earnings report and that buy back $50 billion worth of stock, and none of that other crap matters, right? Because they just bought back $50 billion worth of stock, and shareholders generally like that. The market generally, that's positively received, and the market just shoots higher. Like the stock just, gaps up 7%, even in the face of tourism, fewer revenues, lower sales, whatever, right? And so I personally never think it's that simple from like a matching like the economic conditions to the actual stock performance. Over the long term, I think that obviously, earnings are going to kind of show you where a stock is headed over the course of, 3, 5 years, 10 years. But over the course of like 3 weeks, 5 weeks, even 3 months, 5 months, I don't know that it's that obvious. But I say go for it. If you want to play it to the downside, play it to the downside. If you want to play it to the upside, play it to the upside. The only thing I will say, or actually this is probably like the seventh thing that I will say about Win. If I go to the trade page here and I go to July with the stock at 83, the stock's an $80 stock now. So you could sell the 80 put. Like let's say I wanted to play it to the upside. And the buying power, oh wow, the buying power is significantly higher than I thought it would be. All right, well, never mind about that point. I thought $80 stock, I'm going to be able to sell a put for, $1,500 maybe, $1,600. Man, this thing is $3,000. So Win there must be some things happening in Win right now that's causing the buying power to be significantly higher than I would have anticipated. So never mind there, James Bond. You may have to do something to find risk in here. And so, yeah, I mean, you could sell a call spread. You could do an iron condor. You could do something like that. It's going to be maybe tricky. Actually, hold on. Let me hang on this for one extra second. Yeah, because it's a lower price stock, it might be hard to sell a call spread here. Like if I did 85.90, yeah, okay, you're getting about a third the width. Okay, I take that back. Man, I'm really missing the market at the end of the show. I'm kind of thrown off that the video's working. I thought I had to, fire up the sultry voice again. But man, now we can get away with the video now. So we'll leave the sultry on the sidelines. But the pop here, 64% on 85.90 short call spread, $1.70 credit collected. I mean, that's a decent trade if you want to play it to the downside. You could also just buy an at the money vertical spread if you want to play it lower. So like, for example, I could clear, let's clear that away. Clear that away. If I buy the 85 put and sell the 80 put, that's another way you could play it to the downside. The IV rank is only 19, so the volatility here is not super high. And so that would obviously be something you could consider as well. Yeah, I mean, there's a number of things you could do here. So probably define risk because the margin's getting cranked up for whatever reason that I'm not necessarily privy to here in the moment. And so, yeah, hopefully that helps there, James Bond. So let's see. Rancher's in the house. What's going on there, Rancher? Appreciate you, my friend. Scramble everything. About a 12 delta on getting to any questions today with the victory lap. I got to a couple, actually. They're scramble everything, so I'm way outperforming. Theta Trader says, Dr. Jim, you've traded MES, but have you ever covered that it has both European and American style options depending on expiration? I saw that you emailed me about this. Apparently, most of those futures are similar. Weird, wild stuff. Yes, I've never covered this on the show. You are 100% correct. With MES, and I can't remember, I think you laid it out in the email. And I knew this at one point, but I swiftly kind of forgot because it's not something that comes up that often. So it kind of just escapes, the steel trap that is my memory. And so if I go into let me just look at the option chain. So with MES, it is a little bit tricky. So as Theta Trader is kind of saying, some of the options are American style, some of the options are European style. And so that's, again, American style can be exercised at any point prior to expiration. European style can only be exercised at expiration. And so that's obviously something to be kind of mindful of. But again, it's not something that happens too often, but for a couple of reasons. Number one, most of the time as premium sellers, we're holding out of the money premium, not in the money premium. So regardless of, American versus European, it's very rare that somebody would, not somebody, but the other side of your contract, the long side of your contract, it's very rare that he or she would choose to exercise an option that's out of the money because that would literally cost them the difference between where the stock is or the index is and the strike price. It doesn't make economic sense. And so obviously when the options flip over to being in the money, now it is a possibility. So it is something to have on the radar from time to time. But also number two, as long as there's some extrinsic value in the contract, even if it is American, it's still unlikely to be exercised because the long side loses out on that extrinsic value if he or she chooses to exercise as opposed to just selling out of the option. And so, as long as there's some amount of extrinsic value there, then the economic significance usually kind of, acts as a pretty significant deterrent for the long side exercising the option. So again, knowing this is very interesting. Knowing this is probably helpful to some degree, but it's not something that I think is like absolutely critical that you need to understand to like make a trade or make sure you've got all your I's dotted and T's crossed and things like that. But again, I mean, if you get, exercised or assigned or whatever, surprisingly so, then it can be, it can obviously be a moment of sheer terror. And so for that reason alone, maybe it is something worth looking up. But yes, Theta Trader is 100% correct in that the different expirations, whether they be weekly, whether they be like regular monthlies or quarterlies or whatever, they're going to be different relative to American versus European. That's 100% right. And I can't remember which is which because, again, it has escaped the steel trap. And so Finwest says, good morning, Dr. Jim. I made it to the start of your program. For a change. Happy to be here, man. I'm happy that you are here. Thank you, my friend, and thank you for being a big part of what we do. Man, I couldn't do it without you guys. I really couldn't. You guys even stay. You guys even stay when all you've got is a sultry voice, right? Like that's pretty amazing. That's absolutely amazing. And so thank you guys so much. Brian Doughty says, I put the TLT trade back on, Dr. Jim. And so, man, I'm probably going to pass on that just because I want to get to at least a couple more questions. But yeah, today's a good day to do it, Brian. You've got TLT down $1. I mean, step in there and sell a put. And just kind of call it a day. And so I like it. I like it a lot. Bruce in the house. Hey, Dr. Jim, what's going on there, Bruce? I appreciate you. Says, welcome back to video. Yes, it feels good to be back. And it looks like we made it, Ryan, all the way through the show. So hopefully this is a better solution into the future. But I suppose time will tell, of course. Let's see. Indy Tampa says, I'm lost all week when I missed Dr. Jim's Monday segment. Aimless wandering this week. Man, Indy Tampa, I'm really sorry to hear that. I am so sorry to hear that. But you're here now. Like, again, let's focus on the silver lining. Like, let's focus on the positive here. You are here now. So don't be too upset that you missed Monday. Don't be too upset that you missed Tuesday, Wednesday, Thursday. You are here on Friday, and we are doing it here together. And so as the market crashes, I mean, the NASDAQ just slipped 14 points in the last minute and a half. And so you thought the NFP was going to take us down, but apparently it was Dr. Jim's video feed being back that's going to take us down. NASDAQ now only up 255. And so scramble everything. Let's see. Dr. J sending emails to himself again. Can't say I've never done that before. And I can't say I won't do that again in the future. And so Dev is in the house. What's going on there, Dev? Let's see. Daniel Perkins. Chat us, Dr. Jim Chopped. I'm not sure. Oh, chat is Dr. Jim Chopped. I don't think so. Am I chopped? I don't think I would. I probably would get chopped. Like if I was on Chopped, I'd be the first one gone. Like if I was on Chopped, I mean, I'll make you some pretty mean peanut butter and oatmeal. And I will obviously put a little daddy's chicken on the side, but I'm not sure that Scott Conant's going to enjoy that. Like I'm not sure that Bobby Flay is going to see it the same way that I see it. And so I probably would be the first one to get chopped. I agree with you there, Daniel Perkins. And so let's see. Sam L. I must have been resting. I must have been chilling. Like from time to time, I'm just going to drop like a on you guys. So you guys kind of think I'm frozen. And then obviously I'll kind of get back to, no, I don't want to do that because now I'm going to think I'm frozen when I look over there. And so that'll mess me up. But let's see. David Galmore is in the house. Dr. Jim, yesterday I was the one who said that you have a face for radio and a voice for print. Yes, I remember that. I scanned it after the show. Yes, David, you're 100% right. I could not agree with you more. And I rarely agree with you. And so this would be our first time. And so Andy Tampa, let's see. Do the Harry Met Sally scene and we'll let you know. Yeah, there you go. Yeah, I'm going to pass on that one. Andrew Cortado's in the house. What's going on there, Andrew Cortado? Adam Armfield in the house. Hey, Jim, when will they be taking the weekend out of Tesla? Or will they be taking the weekend out of Tesla today? Man, I don't know. What is Tesla doing today, though? Yeah, it's up 15. Man, Tesla had a tough day yesterday. And so, again, is the bromance back on? Doesn't matter. I don't know. I guess we got to wait and see what the weekend has in store for us. But man, I see you guys. Man, come back on Monday. Let's hope the video holds out on Monday. But Emmett Morrison, I see you. Mark Bender, Gapper X, you're back with a whole bunch of stuff. And Larry R is in the house. Man, I appreciate you guys. Never Too Bossy's in the house. YJ's in the house. Siri Joe's in the house. Man, I appreciate you guys so much. I got to run, though. I got to get you guys to Jamal. But, guys, I appreciate you. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com. Or we can connect on Twitter. I'm at jschultz3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, train them heavy, and stay generous. We'll see you guys on Monday.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Putting on strategies? That's easy. Taking off strategies? That's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy Series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately, has turned into 100 shares of long or short stuff.
What does a green scratch mean?
Ooh, a green, maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
What's going on, everybody? It's the end of another week here, and we're just going to discuss a few things and see what's interesting. Welcome to the most dangerous show on the tastylive network, folks. It's Engineering the Trade. I'm your host, Jamal Chandler, and I got a special guest in the house today, Josh Fabian, joining me on a Friday. What's up, man?
How are you?
Good, man. How about you?
Good. Did you watch the game last night?
I did. I actually didn't see. I didn't start watching it until like maybe late third quarter. Was out of the house doing some other stuff, and yeah, came home. I mean, when I first turned it on, I think it was like 55-72, something like that.
Yeah,
I was like, oh, okay, this is kind of a wrap. They can make a run, but we'll see. And then it got a little interesting, and I think they closed it within 5 by the end of the third quarter, if I'm not correct, something like that. I was like,
something yeah. So if you didn't see the end of the game and you don't know what we're talking about, Paul, why don't you go ahead and you can show that. Oh, wait, what is this? Wait, who's that?
This is not.
Oh, wait. It was just same thing, same difference, same thing.
You know what? This is a complete violation of show rules from now on.
You like
Paul.
that? You like that?
No video without my approval on my show. Okay, seriously. I mean, we're not doing this. That is not.
More.
Yeah, I bet you do.
No, that's the only one. That's it.
That is.
But that's why I wasn't with you on Monday, because on Monday I couldn't move. On Monday I couldn't see the knuckles on my hands. I couldn't feel my fingers. So I'm honored to be with you on Friday.
Well, you did it to yourself. I mean,
I absolutely.
100%. Did you play?
It ended up being 5.
5
but
games.
I played.
Like in a row? You played 5 games in a row?
No. Played 2 on Saturday and 3 on Sunday. Played back to back on Sunday, and then had a break. But at that point, the damage was done.
Yeah, of course the damage. The damage is done after 1 game.
Yeah, I mean, having to wait from that 4th to the 5th game was when all the swelling settled in. It's like, can we just? I'd rather go back to back to back and just get it over with.
I watched it last night. I mean, look, you know what? I'll say this about him and hitting that last shot. I really believe, like, if you're effective at what you do, nobody should be trying to change your stuff, even if it's ugly. Like, that dude has an ugly shot, right?
Oh,
even, the superstar before him with the Pacers, Reggie Miller, had an ugly shot. But if it's effective, it goes in. Nobody should change your form, especially at this point in the game.
Larry Bird had the ugliest shot ever.
But his was kind of more functional. Like his actually was one of those, like, and I've never liked it, but he put it over the head because if you were playing D on him and you tried to block a shot, you were probably going to foul him. That's what I always heard.
Yeah, but look where your elbow is. You can't keep your elbow.
No, I know, but it worked. It worked. One, it wasn't as ugly as theirs. Like, at least it was a reasoning for Larry. The reasoning I heard for, and I was actually watching something recently with Reggie. The main reason I think he was doing it initially was because when he would play against Cheryl, she was that much taller than him, and he was.
She dominated him.
Yeah,
she would dominate him. Yeah. Well, it was
Halliburton. I don't know.
It was a great game, and actually, I bet Scott, and I took the Pacers. I like the Pacers in this series. I just think that you got to be up by 20 plus on them before you think that game's over. But
so I because you were talking about it, I wasn't really paying attention. I've actually avoided doing any bets during the NBA playoffs, but that was an interesting one to me when I started seeing, like, it was the second biggest sort of money line or whatever, like ever in the finals, and I just thought that was interesting. On top of the fact that you have an MVP, right, going up against another team, and then MVP hasn't won the NBA Finals in like 10 years, I think. Well, I think Stephen Curry was the last one to do it.
Really? I didn't realize that.
Yeah,
wow.
But this is what made me put a bet on. So, and then it was like 22 times it's happened out of what? There's 75, 78 years of NBA Finals, and there might be a few left off of that. But I was like, oh, okay, that's interesting. I do want to put a bet. So I put like 500 on it. After the game last night, though, I cashed that out. I cashed out for like the 200 plus premium. But I did a couple of other bets, including, and I've got like 3 or 4 of them. One of them includes, a couple of the French Open things a day. A couple include NHL. Actually, I kind of paired up some NHL final stuff, which I like to do. So I did like 3 or 4 other bets based off the premium I made last night, and I'm in risk free. That feels better to me.
Who did you take in the Elon Trump cage match? Because I think that's how they're going to settle this. I think they're just going to do this MMA style. That's what I'm pulling for.
I mean, outside of like seeing a few things here and there on Twitter, I haven't really dived deep into this. I know you're like,
dude, I was all over it, and like, here, I'm going to show you something. So when it started up, I placed an order. I got myself one of these. This is let's see. It's 2 cookies separated by a layer of frosting. Like, I'm just settling in, and I'm just going to enjoy the show. Okay, I'm just like, this is just the greatest thing ever.
It's look, honest thoughts. I don't know how real it is. You know what I mean?
It's real, but
I don't know that. You don't know that neither. None of us know that really, right? Like, they were boys. Also, it's real because it seems like it was destined to happen at some point, right? When you talk about 2 very rich and powerful people, like all of a sudden batting. I mean, sooner or later they were going to butt heads.
Yes.
And I will say, like, again, you know me, I could care less for the most part about politics and all the way the stuff runs. But when I saw Elon yesterday talking about creating another party, I'm like, so you want to create a new situation because the thing that you aligned with didn't work now? Like, seriously? Like, that's what we're trying to do.
He lives in his own world, man. He lives in his own world. Listen, it's just, it's entertaining to me.
Didn't work for you. You want to create a whole new thing. Okay.
Pretty much, yeah. I mean, listen, it's interesting. I am into the politics quite a bit. I'm very deep into it. Everybody saw this coming. Honestly, as far as the market goes, doesn't really seem to matter at all. It's just, I just think at the end of all of this, we're going to end up being a Canadian province. that's my prediction. That's my prediction.
Let's go to the platform.
Let's go.
Wait, as a result, did this make you interested in anything in Tesla yesterday or no?
No, because I mean that thing moves so much, and
what happened to you? You used to like stocks that move so much.
I prefer to just scalp. Just one scalp for the index is what I want to do. No, I didn't do anything in it because it's just. I mean, I don't have a good grip for I didn't understand why Tesla sold off, first of all, okay? Because I don't think Tesla has any government contracts. So I don't think that they're particularly at risk. But then I was like, well, but why is it selling off? Obviously, I don't know everything, so maybe there is something that I don't understand. So
I'm glad you said that, so it saved me the trouble of having to say it, that you don't know everything. I'm glad you said that.
You're welcome. Okay, and
Paul, can we
couldn't care less. I'm gonna correct you. I let it go, but now I'm gonna correct you.
Oh, I love it. Couldn't care less. Tom was saying that a whole bunch yesterday, and I was like, I bet Josh's ears are ringing somewhere. I couldn't care. He was, because I think they were talking. Him and Victor were talking to me. I couldn't care less what that means.
Well, I couldn't care less is correct. I could care less is incorrect.
Well, it's just a very unique way of saying it. That's all.
I'm leaving.
You don't seem like you're mostly interested in mini trades these days, I feel like.
You know what? I'm not. I'm really not, because I don't think that we're out of the woods, even though it's looking more and more like we might be. You still have this deadline looming next month, and I'm keeping my chips.
The 9th?
You know, yeah. I mean, if you want to be exact about it, I don't know if they're going to be, but I'm keeping my chips close and looking for something as we near that date to happen. I think that there's going to be an opportunity. Now, I could be wrong and I miss out on everything, but so goes trading,
Yeah, no, for sure. I've tried to. It's funny because initially I had closed a bunch of stuff. I didn't have things on. This is probably about a month ago, and then I've kind of worked my way into a few things, and now I'm like theoretically set up for whatever wants to happen. Like if we were to drop, I'm long M2K, I'm long MIM. Those are my long futures. I'm also long a NASDAQ call spread, and I actually have long 2 NASDAQ call spreads because I bought another one when we dipped here on the 23rd. So I guess that was 2 weeks ago. And then I've since then we've climbed back up. I sold an MNQ contract against that. I sold it ES
last week at 6,001. And so like, I'm just like, whatever we want to do at this point, we can do whatever. It doesn't
We can do
really
whatever.
matter.
I'm good.
Yeah, exactly. I mean, as far as movements go, and even then, like it's not. I do have obviously some option premium with those Nasdaq call spreads. So, but one's at the end of this month, and one's at July expiration. So, not that gas. So that's kind of where I'm sitting with things. I do have a couple of things I could probably close out this week and raise more cash. After these last couple of days of moves. Palantir is one of them. I've had this strangle on last couple of days. It looks like it's about a 26 IVR. I've been trying to decide today if I'm going to close it. I just might. Bonds today. Obviously, there's
Bonds
always
is something actually I do have a position in.
We do.
That I sold or rather I bought a call spread.
What? I thought you didn't like call spreads.
I don't, but the product's too big. Like I have to do something defined, and with the IVR being in the mid 20s, it's kind of a pick 'em if you want to sell premium or buy premium at that level. And I said, screw it, I'll just buy it. I do think that bonds have had a really nice trading range. Now that I bought into them, I'm sure that trading range will completely break down. But on the pullback today, I was like, I'll take a small position here.
Maybe it will, but here's my thought on it too. Like I'm in this iron condor and my short strikes are 117 and 107. And when I look at the chart, I mean,
it's a nice position too. I mean, that's like I said, it's pick 'em right now. Yeah.
It's one of the few times where even at a 23 where I would normally probably close, I'm like, I can just keep this on. Like if bonds break 117, there's a whole lot more going on in this market. That's going to work in my favor probably, and vice versa. Even if it's not, I still have other things to do. I'm fine. I think I'm going to actually hold this thing, even though it's 23 IVR. It's annoying, but then the other part of me, right? Like kind of what you just said earlier, we're not out of the woods, and that applies to like pretty much everything. And at some point or another, we've seen things. We've seen the ability, like if you could. There's been so many times over the last just 2 months where you could close a trade and reapply that same trade probably within a week. Or less.
Yeah.
And so that makes me think as well. I don't know.
Yeah. I'm also thinking last summer, I mean, you remember, things were looking really good in July, like June, July, and then August, we got that really nasty move. Summers tend to lull people to sleep. They really.
I don't think that's going to happen this year though. Yeah.
I don't think I think that it's happened. I think that people are kind of, the market's just kind of quiet right now. I mean, it's been steadily trending higher. I'll be interested if we hold 6,000 in the S&P, but I think that, everybody's just sort of like, okay, it's just, back to kind of normal. And I think that you could get, some sort of big move next month. I hope. I'm definitely talking my book. Or my cash as it would be.
Well, you're not the only one. I don't know, man. This seems like this is definitely one of those areas. Well, we've gotten lulled to sleep, but I think at some point, I'm banking on a big move breakout higher after all of this, right? Like we obviously had the big. This is almost a classic double bottom. It's a huge double bottom. I mean, it looks like a W, right? And then you bounce out of that. We're forming the handle on the double bottom now. Theoretically, we should break higher. The only problem is it's hard to technically define this market. Or I should say define this market. It's hard to define this market technically when it's all been based off of news for the most part, a lot of the moves that we've had. So you can't necessarily cling to a technical analysis when a lot of it has been based off of irrational moves or rational, if you will. So that's the hard part. I don't know yet.
Agreed. I agree.
But
I do think also we're going higher. I'm with you on that. I think that, we'll probably start heading higher, but I think there's the potential for a pullback in July. And that's where I'm looking to. At that point, I'm hoping we get that because I will get it long. I'll trade it from the long side.
On a percentage basis, we're probably closer to all-time highs in Nasdaq than we are in SPOOs. It almost seems like, I don't know. Just looking at it, I mean, just eyeballing it. I mean, it doesn't look like we're like when you look here,
it's pretty close,
far away compared to when you look at this, a little bit different. We're still got some ways to go here, right?
There's definitely some resistance here at 6,000 too.
Oh yeah, big time. Yeah. AVGO. Talk about the week. Started the week with let me start the week here. We started the week with discussion of metals, right? There was going to be more tariffs, higher tariffs on a lot of these steel and aluminum names. Although Alcoa did not move.
on any of that news, but there was that talk. Metals. We have seen things like silver. I actually just got long silver when I saw this, and I know a lot of people are like, "What? That thing's kind of flagging." But look, I look at it from this standpoint. I look at it from this long-term. Let's go 20-year chart. Let's go monthly. I look at it from this standpoint, and I'm like, okay, this thing is here. It's got a long base. Why not break out higher? Let's see. I'm putting my money where my mouth is. I'm long a call spread in August. I'm also short a copper call spread in August. If this all doesn't work, I think overall with that pair, I'd probably lose $900, which is not great, but at least it's like further out in time. We'll see. If I win on it, pretty sure I make like $6,000 somehow, or something like that. It is, and that would require. I mean, that would mean like silver's breaking out, kind of like it did in 2011, in a big way. Well, it's already breaking out. It's just a matter if it continues. So,
I was holding silver long from, I want to say, October or November, until April. And finally I was like, I'm done. That's it. Enough. Just frustrated. So, there you go. Like saying, so, I'm just saying with my bond position, just forewarning, like as soon as I get in or I get out, that's usually the time to take the opposite side.
Oh, I know you. Yeah, no, I know
Yeah.
you're wrong.
Yeah.
AVGO had
AVGO.
earnings this week, and well, to over last night, not so good. Anything?
They were in line, and their forecast was in line with expectations. So there wasn't like a catalyst to this, other than maybe just some profit taking. I don't know, but it wasn't like Lulu, who was like, "Listen, we've got problems."
What'd they say?
Headwinds because of tariffs.
Yeah, because they got a lot of clothes overseas, right? Those Vietnam, all those other places they make them.
Yeah, and I mean, those retailers are susceptible to that stuff. So, so you can at least rationalize the Lulu move. The AVGO one, I don't know. I don't get it. It just just more aggressive sellers than buyers, I guess.
I saw this Lulu move and I thought, do I want to do anything here? And I was like, nope, no, I don't. Not interested. IVR's not there. I mean, this is a big move down, but I mean, I thought this thing was a little overdone, like price wise, for a long time when it was like 500. So
listen, I love their stuff. I own a bunch of it. It's comfortable, but it's kind of like when Chipotle was trading it, whatever, $1,000, like $1,000 burrito, like $300 sweatpants. Like it just doesn't make sense to me, but
it does not. And there's more competitors these days, right? Like there's a lot of other things that people are wearing. But again, the headwinds thing, that's a tough one. I also saw DocuSign.
DocuSign. I'm trying to remember what they said about. I don't remember what they said, but another one though that just that took a hit after earnings. So I know Tom's a huge fan of DocuSign. Of the company. He just loves the idea that you can just. I guess he signs a lot of documents. I don't know.
Does that mean he's also a fan of Adobe? Adobe has earnings too, I think, also next week. So, like, that's the thing. Did they say something that?
No, I don't remember them saying anything specific
to the industry. Huh.
Yeah.
I mean, again, Adobe's the leader, but
I don't remember them saying.
You see DocuSign struggle, you would imagine.
You would think, but Adobe's a little bit more broad-based in terms of their offering. DocuSign is kind of a one-trick pony.
Yeah, I guess. Yeah, no, I guess. Adobe we used to use, when I was in graduate school, we used to use a lot of their imaging stuff when we were like taking pictures of like different things microscopically, and then we used to digitally alter using the Adobe, what was the name of that? What was the name of that software? Forgot.
For
somebody in the chat will know.
Creative? Like Creative?
It was like you could like, it was like one of the first things you could start like digitally altering pictures, like with their Adobe software. I forgot what the name of it was.
You're not talking about Photoshop, are you?
Is that what it is? Photoshop. Yeah, exactly. I can't remember. Yeah, Photoshop.
Yeah, it was cool when you could start doing that. Yeah,
like the high level features that you could like mess with. We were like, I was doing that a lot. It was crazy. It was a thing, right? Like it was rare. I mean, you didn't have too many softwares as good as theirs back then.
I was just putting like mustaches on people. That's what I did with it.
That works, too.
That kind of fits my maturity level.
Kind of like a little Sanchez mustache.
Yeah, exactly. Yeah, exactly. Yeah.
It's got to be thin.
Don't go there.
Do it. It's got to be thin. I can go there.
Don't do it.
I can go there. See, I can go there. See, you can. I can do it for you. You can't do it. You know what I mean? Speaking of, I guess there's a Billy Joel doc coming out.
Yeah.
And my wife was telling me all the stuff that she saw. I'm sure it's big news. Like it's come out, right? He tried to commit suicide and all that. And then she goes, "Yeah, I don't know what it is. I didn't know he was Jewish." I was like, "What? You didn't know Billy Joel was Jewish?"
Yeah.
I thought he was like Italian or something. I was like, "What?"
Yeah, he's
like, no.
Yeah. No, I just got my refund. I think I got my refund for my concert tickets because I had tickets back in April.
I thought you went.
No, well, I saw him when he was in Chicago last summer, but then I had tickets to see him in Milwaukee, but he canceled. Yeah. So he canceled. He canceled all his shows. Yeah. So.
Did you hear about this news though in the last like 24 hours?
About the suicide? I didn't hear about that. I knew about the whatever is the diseases he has.
He dated. He was like he fell in love with like his best friend's like wife. And I don't know the full details. I don't know if like they started seeing each other from that or just from that alone. But he felt terrible. He tried to commit suicide as a result of it. Just feeling, how he betrayed his friend. It was like a whole bunch of stuff. It's all over the place. You can find it.
I'll have to check that out because he's definitely he's got a drinking issue. That I know. That I actually saw firsthand when I was backstage at one of his shows when I was in high school. And one of his roadies was like, "You want to know what the secret is to him going as long as he does?" And I was like, "Sure." And he shows me this red Solo cup. It was just filled to the brim with vodka.
But you enjoyed the show, didn't you?
I sat next to Christy Brinkley.
All right, then. Well, don't look the gift horse in the mouth.
I'm not looking. No, trust me. I enjoyed this. I sat right next to her for the whole show. I don't even remember the music.
Exactly.
I was like, this the whole show.
This week we got a couple of inflation reports.
Mm-hmm.
Do these still matter or what?
They've been in line. They've been quiet. I don't know that.
I feel like we've moved on. If there's two in any given week when they have them, one of them we move on, one of them we don't. And it just really depends.
I think that it's just a case of until we know what's going to happen, until actual action takes place, not just talk about tariffs, but like what is actually going to happen. I think a lot of these economic reports are just sort of like, we're paying attention, but everything could change. So it's, the jobs report, today was, there were a few different ways of looking at the jobs report, I guess, with, and I won't get into it, but Chris and Ilya really did a good job covering it earlier. So, that seemed to matter, so we're seeing it, but, seeing it in equities, but then at the same time, what you're seeing with bonds, and I guess now it's not looking like we're going to get a rate cut, I guess, earliest to be, September?
Yeah, I saw somebody. I mean, if you pay attention to the banks, I think JP Morgan pushed their thing back.
Yeah, I just think people are just. I think we're in a place that we haven't been before in terms of how do you look at the data in the context of what's going on in the world, and it's different. It's just different than it has been. So I think it's really hard unless you get a major deviation from what was expected. I'm not sure that these reports matter all that much right now, but I suspect that will change next month after the 90-day pause is over.
Yeah, it's very possible that they will. Right now, you got a 13 IVX for Wednesday, which is CPI, and 13.9 for Thursday, which is my birthday, but also PPI. So, we'll see how it goes.
Why is it
it should be higher for that day, honestly.
I'm going to pose a question back to you. Why is it whenever we talk about economic data, you got to bring up your birthday?
Because it's really good economic data, honestly. It portends a whole lot. You want
to see that shot I made again? You want to play that video?
No, I don't. Oh my God, folks, we're out of time. Folks, that's all we got for you right now. Thanks for watching the show. And as always, be smart, be patient, trade them small, and trade them often. We'll see you.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. tastytrade. Make your move.
Hello, everybody. Happy Friday. And, well, let's catch up. We've got the jobs report, came out this morning, and it's continuing a trend we've seen for many, many months, which is fewer and fewer new jobs and more unemployment claims. And the market embraces that as good news, because the idea being that, well, Powell just has to drop rates now. The funny thing is that rates are not going down. Rates are going up. And as I've been pointing out, I think one of the most important things to keep an eye on is those bonds, because bonds are getting weaker and weaker and weaker. I think I calculated we're in the something like 63rd month of the bond bear market. 63 months. Imagine 63 months of equity bear market. It seems impossible to believe, but there we have it. And they're looking weaker all the time. So we'll look at a few charts there, because I think this notion that Powell's going to drop rates, particularly since the president's saying he should drop it by 100 basis points, which is like an emergency level drop, is absurd and not going to happen. I don't think Powell's going to be cowed into going the completely opposite direction the market's going, because the market's telling him what the appropriate rates are. One almost wonders, why is the Fed even there? Because the market's kind of doing the job. But we'll look at some of those charts. Let's jump in on this very green day as the market celebrates the weakening jobs market. Here we have the spider. Ain't nothing new here to report. We are getting closer and closer to lifetime highs. We're getting closer and closer to that multi-decade midline right there. But, you know, it's just creeping up a little bit at a time. And nothing's changed either up or down. The cubes are quite strong. They are very close to their own major resistance line here. Not as high as yesterday, interestingly enough, even though we've got all this good, bad news. It's only about 1% or so away from lifetime highs, this dashed line right here. And as I say, just still below the busted trend line. Microsoft continues to help in that strength. Here we have Microsoft at a new lifetime high. What's the PE these days? I'm curious. 36, yeah. So when I first started trading, the PE of a well-established company would tend to be like 8 or 9. These days, anything under 40 is considered conservative. But there we have Microsoft, a like half-century-old company with a 36 PE. Apple also having a strong day, up over 2%. Not quite at the week's high. And in terms of its own channel, this long channel here, decades and decades long, we remain beneath this broken channel as well, and way below lifetime highs. Apple set those lifetime highs around about Christmas of last year. And so we're still down about 20% from there, even after all this lift that we've seen. Netflix looking a little bit wobbly. Netflix has become kind of a strange creature, sort of taking the place of what bonds used to be, which is a safe haven. Weirdly, on strong days like this, Netflix tends to sell off. It was at a lifetime high yesterday. We've pretty much reversed yesterday's activity. So we're down about 0.5% on Netflix and pretty close to a couple of major resistance levels here as well. Sort of PE obsessed. I'm just kind of curious these days. It's taking too long, forget it. Over in Techland also, SMH, the semiconductors, they're close observation. And there's about 3 lines here of note. This line here is very unimportant. It's just yesterday's high. It's just a little bit of a marker for how high we've gotten in this counter trend rally. And yesterday was the peak of that. The much more important line is up here, which is the price gap, which is becoming an almost perfect companion to this descending trend line. So if we keep going strong on semiconductors, that will be the level to watch. Will it cross above? We'll close the gap, will it get above the trend line? Because today didn't really resolve anything. We're going to have a lot of inflation data coming next week, the CPI, the PPI. The Fed does their thing the week after on Wednesday. And so barring any new Musk-Trump explosions and barring any more trade war excitement, it'll all be about interest rates, ... the Fed. And will resolve if we're going to head into a real bull market for the summer, or if we have finally reached the point of utter exhaustion. Doesn't seem that way so far. You know, the ES is up 64, the NQ's up over 200, etc. NVIDIA, always important to keep an eye on, the most important component of the SMH. It's also just a tiny bit below yesterday's high, and the lifetime high remains intact back here. So not a heck of a lot going on. There was a lot of course, mayhem yesterday regarding the personal relationship between Trump and Musk. It was incredible to watch. It all transpired in the span of just a few hours, and it was all over the news last night. I don't think the relationship between two human beings has been so covered in such a short span of time that I can remember. Tesla has been through some interesting phases. Late last year, basically the final quarter of last year, Tesla did amazing. It more than doubled in price in a matter of just weeks. Then it lost all that and bottomed out for whatever reason on April 7. Well, for whatever reason, everything was going down then, but it lost all those gains. Then, I suppose, based upon the notion that how much Musk will benefit with his relationship with the government and robotaxi, et cetera, it had another great run, and it pooped out here, coming nowhere near the success of December last year. And then especially yesterday just gave up the ghost. So the fibs are still counting here. Today's high just below this red fib. And I would say we're probably range bound at this point. I think it's within the next couple of weeks, I forget the exact day, I want to say the 14th, that robotaxi launches in Austin. And the reaction from that, I think, will be important to inform the direction of the stock. But I would dare say that we're probably in a new range again between these two fibs based upon this new strange era of Elon's political relationship. As an aside, amidst all that craziness, one company that has had a terrific couple of days is Planet Labs, which I suppose is sort of kind of a competitor to SpaceX. And this was like a bolt from the blue. You can see that it just went rocketing higher, no pun intended, yesterday and today, on markedly higher volume. So beforehand, it would trade 2 million shares, 3 million shares. Yesterday, it was about 68 million. So it's sort of like, well, if not SpaceX, then who? You know, and so people started frantically looking around for other public companies that do that kind of thing. Gold is having a rather weak day, and I've been mentioning how the lifetime high hasn't been approached. We've simply been slumping to a series of lower highs. It has a lot of gains to digest, so no big surprise there. GLD down 1.2%. Silver pretty much holding its own pretty well. It'll eventually get dragged down by gold, I suspect, but silver had too much catching up to do. It's being fairly robust right now. But if we look at SLV, even in the midst of all that gold selling, it notched up a new recovery high today. And at the moment, still is holding the gain. So good for silver for doing so. In fact, let's just adjust this a bit. Let's take this line and bring it down to this price gap. I think that's a more appropriate place to mark the breakout, like so. So silver's had quite a good week. And PSLV, which is a different way to trade silver, also up almost 1%. And as I've mentioned before, the enormous increase in volume illustrates nicely how excited people have become about silver in recent months. But as I mentioned yesterday, XAU, the gold sector index, had gotten a little too close to the sun here. Just about a perfect, it looks like perfect to me actually, of resistance. So yesterday I shorted GDX, which on a green day like this is one of the few bright spots for me. And it's had a nice hard reversal. We've got a island reversal gap like so. And so that's a pretty one. And so miners could be in for some weakness for a while because that is a pretty major zone of resistance for that tag. It's not straight down, of course. I mean, we did this last time and, you could take months to sort of work all that off, but it's a good start. And so GDX down over 2.5%, and individual items, like I've mentioned this one a number of times, DBD off double-digit percent. So yeah, those miners are selling off. Quantum computing is still a hot sector, very small sector. Very, very few companies out there are involved in that new technology, which is still very speculative. It's almost like investing in fusion reactors. But here's D-Wave Quantum, QBTS, which is definitely my favorite of these charts. This seems to me the most plausibly bullish looking chart, and that's up 11.5% today. Rigetti, RGTI, also up, but you can see the difference here. This one, unlike the last one was at lifetime highs. It seems very well formed. This one is participating in the rally, but it's not a well-formed shape to it. And kind of the middle between those two in terms of quality, quantum computing QUBT is up very strong, almost 13%. But here again, I do not like this chart as much as qubits. And this one has an important resistance level at that gap, 1637, whereas QBTS doesn't. It's basically kind of blue skies all above. So I mentioned earlier about the importance of bonds. Here's ZB, and I've marked out 4 different instances of these topping patterns. This top and this top each yielded small drops afterward. This one began the real bear market in bonds, and so just hammered bonds down and interest rates up. And this is the curious one down here because we're at a very, very low level right now, but there's nowhere is it written that it can't break below this pattern as well and set on a new chapter of this bond bear market. So we're down hard on the ZB, getting closer and closer to that critical support level. So TLT is down 1.33%, and not to put too fine a point on it, but the price level that we would be looking for is around about 83 on this. That's we'll just make that a supporting line like so, but breaking that would be a pretty big deal, and I think would set into motion a much sharper punch in interest rates. In turn, even with all this green we're seeing today, things like XHB, the home builders, are going to be affected by rising interest rates for obvious reasons. So this one has turned away from its own resistance line like so. You can see it tried, and then it's maybe sneak this up by a penny or so. We've got this well-formed topping pattern, and we're reversing away from that red resistance level. So in closing, the jury is still out on RTY. It is still possible that this turns slower. I am not exactly thrilled with the strength we've seen here, but we're basically mushed right up against fib resistance. And this could flip to support with another strong day. As it is now, we're basically matching the same kinds of levels we've tried several times before, each of which is sunk right down. So I'm going to still assume that the range we're in is defined with the blue as the top, that is the blue as resistance. But as I say, particularly if we get some bullish friendly inflation news next week, we could well find ourselves redefined up into this higher range on the RTY. So that is it. It is time for the weekend. Thanks for coming by as always, and I'll see you here on Monday. Bye-bye.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap. How was Nashville? Did you go hiking? You were going to do a bike, you were going to go fishing, and you were going to visit an apiary.
I spent the most time of anything lying in a mineral pool.
Oh, gross.
There was a guy running the fishing area, whatever. He goes, hands me a
Fishing area.
He hands me a fishing pole, you know, and he goes, here, you're all set up. He goes, want me to show you how to use it? I go, I don't need any help. I got this. I get down there. I do this. The whole thing got tangled up.
Mom, phone. I need help. Get the guy over here.
I wave the guy down. I go, hey, need a little help. He goes, let me get you another rod. Now let me show you how to do it. I made the obligatory stop at Buc-ee's.
Oh, how was Buc-ee's?
It's 6 hours away from here. I'm talking it up the whole way down, telling Corinne this is, life-changing.
Did you go into the bathroom?
No.
You didn't go into the bathroom. You can go to the dirty shell down the street, or you can go to this beautiful, clean mecca of a place. Relieve yourself.
I'm not sure what place you were looking at, but I almost got run over in a stampede at that place.
Oh, you got to move quickly.
I like how you're clutching your pearls.
It is not a beautiful mecca. Okay.
It's a beautiful mecca. When you're on the road for
it is an absolute up for grabs show with 1,000 people running around grabbing stuff, eating
That is like crack for me.
There's like barbecue sauce flying all over the place. That place is not a beautiful mecca of anything.
Who do you think the best dressed on-air personality is of all the tasty people?
I'd probably guess I got to go Ilya.
Ryan Grace, easily.
Oh,
yeah, Ryan Grace, 100%.
He's very preppy looking. It doesn't do anything for me.
Oh, who's the guy? Who's God on the research team? He's got to be in that top 3 too.
Oh, Gad? Yeah, Gad's up there. Yeah,
he throws on a leather jacket, man. He comes in there looking like Eddie Murphy off Raw or something like that.
Oh, yeah,
He's got incredible confidence, and good on him.
So, Dr. Jim, throw him out. He's horrible.
Jim wears children's clothes. It's easy for him to dress.
This is
easy. Like Granimals.
Yeah.
You can throw me outside. No, don't worry about it.
Oh, I'm throwing you out because you got
yeah.
old man Italian clothes. Yeah, I don't. That doesn't do it for me.
Tony looks like if you saw him at a bar, he'll offer to pay your cell phone bill.
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Nikki, we are back, son. You know what that means? It's time for the last call. Thank you for joining me when Tom Sosnoff is on another vacation, holiday weekend for him. Nice 3-day weekend. He has made a couple of trades, so he has landed, which means,
Did he have Wi-Fi on the plane?
He seemed like he did. He made some trades early, made some trades a little bit later. So yeah, he probably did. Well, I don't know what he's been doing because even the S&Ps have been going straight up pretty much. I know we had that one downtick to up around 45 handles on the E-mini S&Ps. They're up 64 handles right now, about 15 handles off of their highs. Obviously, significantly off of their lows by almost 100 points, 80 points or so. NASDAQ up 220 and change. Russell up 30. Russell the strongest of the group on a percentage basis, and the Dow up 455. Volatility in by $1.17, 10 cents off its lows, 1860. As we caught a bid, volatility kind of it made most of its move right out of the chute, but then it's kind of sold off, even a little bit more than I thought it might today, down at $1.18. Bonds down 112. Trading just over 112, 112.03, 112.01 is the low. Bonds never caught a bid all day long. Bitcoin trading just about 105. That's up about $2,700. Oil up $1.29. That had a decent size move today of 2 points. That's $2,000. 64, 66 are numbers we haven't seen since April or so. Gold was weak all day, down 30, 38 right now, just about $2 off of its lows. And silver's been strong all day, although it is off of its highs by about 40 cents, up 36 cents. That's still a big move in silver. Nat gas making a move to the upside too, up 10 cents. It's a big size move in nat gas, almost 3%, 2.75%, as you see on the right side of the screen here. Euro a little bit weaker, although not as weak as it was before by a couple of ticks. We had a couple of movers here today, son. The majority of them to the upside. You had Meta up $13. You had Tesla up $12 and change. Traded over 300 earlier, well, like an hour or so ago, up to 305 and change. Goldman Sachs is trading up almost $9. Coin up almost $9. Reddit and PLTR up also. On the downside, you had a few buckers, few and far in between. AVGO down 13 for an earnings play. Lulu down 65 for an earnings play. Those are your two big movers. But Netflix down $6, and any gold product, volatility product is also down. Son, how was your day? Where'd you hang your hat? Where'd you find trouble? Where'd you find success?
Oh, well, I mean, today it felt like everything opened at basically where we're at right now. Like on a 60 or 70 point up move, you typically have like multiple hours to buy that move. There was really no chance to buy that move. We opened and we were at highs and everything was at highs. Like, I've been watching Amazon all day today, which is up $5 and change, basically reversed all the move that it had yesterday and is at, recent highs here. It opened at 212.41 and it's at 213. Yeah. And, it's on the day, it's up $5 and change. And you think, okay, well, we must have started at 205, down a buck or something and grinded higher all day. We literally opened right here and stayed right here. Tesla was the same story. NVIDIA, NVIDIA has been in like a 30-cent range all day. It was really just, it felt like if you weren't positioned for this move yesterday, there was no opportunity here to trade. And to the downside, you had absolutely zero pullback. You mentioned the one moment, I think it was literally like 3 minutes that we had. Seriously, like I saw really that. Yeah, it really was 3 minutes where we were only up 40, and I was like, oh wow, like that was a nice move, and then it was gone. Right. It was a buy everything and just, or at least be positioned long, and then just sit with it all day today. And I think that's emblematic of like the volume that you see in the E-minis. You think on a day where, you had the whole hoopla of yesterday's event going on, and then you have employment numbers this morning, the big important numbers. You think today is, your higher volume day of the week or month, or, like this is going to be some sort of event. You got 1,000 contracts traded. It's, big old nothing burger. So it was a weird day. And I too was not expecting volatility to come in as much as it did. You know, when you look at bonds are having a huge move to the downside, you got gold getting smacked as well. It's a weird day, a little bit of a weird day. I don't know if I take too much from it.
Yeah, I don't know if I could take too much from it either, but the 6,000 number seems to be, and I know we're over at 6,008, we got up to 25, but it seems like we were hovering around here just trying to get our footage here. I mean, I kind of thought that we were trading, I think, about 10 handles lower than this when I said, could we just sit here all day long? And I don't know if we just sat here all day long, but it certainly felt like we sat here all day long, right? I mean, we really didn't have any volatility expansion and contraction. There are I do have, I'd like to, you're kind of the risk taking guy, so I got a couple of, I looked at some things. I wanted to let you know what I think. I'm going to go with the first one. This was also brought to me by a couple of emailers.
Sources.
What's that?
Taiwanese sources.
Taiwanese sources, also known as emailers. We've got this rebalancing of the S&P 500. A lot of stocks in the mix here. APP happens to be one of them. The stock is up $4 today. APP traded up to a high of 426. It's 418 right now. But let me show you something. With a half an hour to go, less 20 minutes to go. Just a moment ago, the 415 call, 425 call spread is trading at around $2.65 on the mid price. I think it's going to trade closer to $2.90. That would be my guess. Now think about this for a moment. No time to go. $9 of premium, $10 of premium in these out of the money options with no time to go. You got to think that the stock is in play, and it's one of the stronger ones for the move. At least that's what the public thinks. Now,
for sure. Why
do I look at the vertical spread? You certainly could buy the option, I guess, if you're looking at the 415 or the 430 calls, just pay $9 for it. Here's a spread.
You don't even have to look at that, dude. You look at the skew. Like look at the 435 call versus the 400 put. They're both
right, but how do I benefit from it going into the S&P 500 and maybe catching a little bit of a bid here? Maybe it goes up $10 in after hours market. You know what I'm trying to say? And have a defined risk trade. The only problem's going to be if the stock goes lower, because you'll be long the 315 call for $3. Let's just say. So this is really, if you're going to do something like this, and you buy the 415, 425.
Yeah. Okay.
It's a weekend play. Listen, I'm trying to find something.
Yeah, but you gotta exercise the option over.
It's an automatic exercise if it's in the money. So if the stock goes higher, your 415 call is going to be automatically exercised.
Yeah, but if the stock drops below 415 in the next, it's $2 out of the money.
It doesn't go in the S&P 500, which is highly likely, right? There's a bunch of stocks that are a dozen or so that are suspect to go into the S&P 500. So there's a good chance it doesn't. You have to throw away the $3. I'm trying to do something where I'm not throwing away $10. If I wanted to, so like somebody, like, how do you play APP if you think it's going to go into the S&P 500? You got 15 minutes to the close. What do you do?
I get what you're saying, but here's the problem: is you have to be watching this, and you have to be ready to call in and request an exercise if the stock does drop another $2. You put this trade on.
No, call it. Do not exercise.
No, you'd want to call an exercise if the stock pops after the close.
I thought you said drops. I thought you said drops.
No, I know if it drops right now. If you buy this call spread when the stock's at 417 and it closes at 410, let's say. Yes. You're $5 out of the money, and the stock then gets included in the after-hour session. It opens at 500. If you don't exercise your call, you'll
come in short the 425s. Hey, I'm just answering emails. How do you do it? You could say just buy the out of the money call, but I think that's silly. I'm trying to look at something where I'm paying $3 for something that could be $10. That's what I'm.
Yeah, you just weren't talking about where. Like it closing down $2, it moves. It's $5.
It could trade in after hours. It could trade in after hours. If you do the spread, it could trade in after hours up to 450, 500, and open at 400 on Monday.
Yeah.
I mean, it's nothing is a guarantee here.
Yeah, I mean, I would not mess around with it. If you want to play it, do a diagonal spread. I mean, the vol is so high in the next 15 minutes. You want to go to June and buy the 425 and sell the 1 day option at 440 or 445. You know, like that's how you play it for a 40 or 50 point up move or a 30 point up move. So even if you do get
you're using $1,500 now. So I was trying to get a lot. You know, they only want to use a couple $100. I mean, I guess you could go down a little bit. Yeah. I mean, I don't know.
You want to take over Johnny Trades? I mean, my God, dude. $1,000. Come on.
Yeah, because the call's going to hold some value.
All I'm saying that then you don't have to worry about.
Well, not that you don't have to worry about it. There's nothing for you to do. The ball's not in your court. If you don't get exercised on your 440, I like this. So if you did something like this and you got lucky and the stock popped up to 450, 460, let's just say for argument's sake, so let's see what the volume is on these calls here, or open interest. I'm sorry. You got 1,700 in open interest. Let's just assume that somebody isn't as savvy as, say, somebody like yourself, and they don't exercise it. You're naked long that 440 call. It's nothing but, the 425 call. It's nothing but pure gravy for you. You're right. Your diagonal spread.
And even if you do get exercise, you saw the 440 at $7. Your basis on your short is 447, and you're long at 435.
That's correct.
You have $12, $13. You'll make your $200, $300, $400 in profit, assuming this, because you're going to have extrinsic value in the long option. Like you're gonna be.
I'm trying to make $700, but I get it. I understand.
Yeah. Well, it is what it is.
You can do that in Hood too. There's a bunch of stocks, whatever ones that you like. But that was my most kind of the most questions I got today. It wasn't really market related. It was more like S&P 500 related. And I didn't really think of the diagonal. And I think you bring a nice point up there. It's almost like you're subject to your own demise. There's nothing for you to have to do.
Yes.
To find risk trade.
It's a shot trade because, the next 10 minutes, if whatever happens, I'm worried about the at the money call being out of the money and whoever's trading that having to actually call in and get that exercised.
Yeah. Or do not exercise if it closes in the money at 3:00 and it's out of the money at 3:30, or it closes in the money at 3:00 and they don't announce it until 5:00 and there's nothing you can do.
Yeah.
So you make a great point. I think the diagonal spread upon further review, just like they do in hockey, we go to the instant replay. Upon further review, Nikki Sissy Mary diagonal spread is a much better play than my
Your
vertical
Sissy
spread.
Mary $2 wide spread. Give me a break.
$15 wide for $3. A little bit different. But I agree with you. I would give up the extra dollars to have the safety that you mentioned. Great point. Great point by you.
All right.
Feather in your cap. I give you the circle, the square, and the win.
Thank you.
You're welcome. What else has been going on for you? I mean, I know we've got about 12 minutes here for the market. I know we already talked about, I know you're a little bit surprised. You've been nibbling on the short side as of late.
Yeah. Yes. I wouldn't say I'm outright short, but I've been taking off my long delta into this move. And so I've been synthetically getting short just because I am certainly not as long. And here, I definitely would like to see a little bit of a down move. Today, I spent most of the day peeling off stuff that moved just so quickly. Like I sold puts in DraftKings on Monday or Tuesday. Stock's up $2 and change today.
Yeah.
Or was at one point.
Yeah.
You got an IVR of 11. I closed that out. In gold, I had a bunch of upside butterflies, broken wing butterflies. I bought in the risk on those. SoFi had a great move. I bought back my naked puts there. It's up, $2 over the last couple of days. I closed out of a Iron Condor and Palantir, and I got bailed out on a CRM short put spread and a Tesla short put spread. Like that was all you could really do today. There wasn't, you couldn't, there was no way to trade Amazon today. Even though it's up $5, you had no way to trade that. Same thing with Apple and Nvidia and all the other stocks. There was no really way to trade it. It's really going through your portfolio and looking for stuff where CRM was down on earnings. It's now up $20 from the lows. And I was like, you know what? I got 14 days to go. This is right at the money. It's a scratch now. It was a $300 loser or $200 loser. That was what I did all day, was just like, manage those positions. And then the gold stuff, it's like you had such a big move. It's got some call skew. You want to kind of stay in the position. You buy in the risk. You make it a cheap butterfly. It's slim pickings out there, dude.
Yeah, I think you actually had to set yourself up in hindsight, obviously, yesterday for today. I mean, I traded a little bit of Tesla yesterday. I had no intention on trading Tesla. The volatility got, pumped up so much. I played it a little bit to the long side, with some naked puts and some vertical 1x2 ratio spreads. Talked about on the close with Tom. He was looking to sell premium in there. He just wasn't aggressive enough to get filled. Knowing he was leaving this weekend, I'm sure he didn't want to be involved in Tesla if it was, moved another $50 one direction or the other with the strangle. That's why I like the directional bias of it. So without doing some small things like that, there really was very little to do today. I mean, it was not a day with a lot of opportunity. That's for sure.
Yeah.
Yeah, totally agree. Yeah, totally agree.
Some futures too. I closed out of my Japanese yen position. I had a short call spread there. I'm getting some money in on my euro position. I have an Iron Condor there. Some of those, currencies have seen some nice moves. That was in play. Like oil having a big intraday range. I mean, if you look at oil volatility, it's kind of like mid-range, but it's come down significantly over the last couple days. So
what is it again? I'm sorry, I put in OBX. It's not OBX.
OBX with the colon CGI.
Oh,
you got to do it all together. Colon CGI.
Forgot about that. You always remember that. Yeah.
Yeah. So I mean, I've been selling Iron Condors in oil for the last couple weeks, and now vol is significantly lower. Some of those stocks, XOM, like I got a Iron Fly in my Johnny Trader portfolio around the 105 strike. That came in a little bit.
Yeah, well, the stock rallied, got up to your short strike. I mean, that's what you want. Now you just want time to go by.
Yes.
Mm-hmm. Yeah, I did a little bit. It's funny you did some oil trades. I did an oil trade on yesterday too for option trades today. I did a Batman trade 1x2 ratio spread on both sides, calls and puts. Because like volatility is high-ish, but it's still low-ish over where oil has been, and it has been contracting. It was down around 6% for the last 5 days alone, but it's still got a relatively high IV rank. I think it was in the 30s, 36 or something like that when I put it on. I think it's closer to 32 right now. Yeah, it's 32 right now. So you have volatility contracting across the board here. It's almost getting a little too complacent for me with the volatility being like this. No tweets today from either party. I'm not talking about Republican or Democrat. I'm talking about Elon and Trump. I didn't see any. Did you?
No. It's been quiet. Why? I mean, we haven't had anything. We haven't had really any tariff stuff. I know they said something about meeting with the Chinese counterparties on the 9th or something like that.
I mean, it's Monday.
Yeah. I get it. But it's been very quiet besides yesterday's craziness.
Yeah.
Quiet on the tariff front.
Looking at some of these Chinese stocks, I mean, Baidu's, basically unchanged. Baba's basically unchanged. PDD up $1. I mean, on the lower end of its range. IB rank of 12. They don't seem very. They certainly don't seem frothy. They certainly don't seem in play either.
No.
Yeah. I don't know what my man's going to do now. Tom, I don't know, found a way to make just about 66 trades, mostly in notes, notes, gold, couple of roll-ups of puts. He's maintaining pretty close to delta neutrality that I can tell in his portfolio. His extrinsic value is a little bit lower. His buying power usage is on the low end also. He's got a positive P&L on a day when he doesn't deserve one. So there's that. AVGO helped him today on the earnings front, and then the one that hurt him today was Lulu, down 65. Did you happen to look at the markets in Lulu to see if they got any better than that they were before? They look like they're, at least in July, it looks like they're better-ish than they were. They're about 50 cents wide, where they were a little bit more like $1 or more wide prior to earnings. IB rank is down to 22 here, and in July, you're looking at some could be as much as 50 cents or more wide. So you still got wide-ish markets. Not a lot of volume here in open interest in these options either. So, well, open interest wouldn't be very high because the stock just really kind of traded down here. You should probably look at volume more than open interest for today. Yeah, volume's much better in the thousands on the upside. Some puts are trading not quite as fluidly. Anyway, like Lulu. Sometimes you try to catch a falling knife. I don't know if Lulu is the stock. I'd rather do it in Tesla when it does it. Seems like it has more correlation to the market and more upside news than say a Lulu. Yeah,
I'm sure they'll be buddies this weekend, and that it's.
Are you suggesting that maybe the bromance will be back on? Can they unring that bell? No, I've been teaching you. I've been teaching your brother about unringing the bell. Like you can't, at least in my eyes, it's very hard to unring a bell, if not impossible. Can they unring this bell?
No. But
talking about Elon and Trump,
it can get swept under the rug. That's been the MO. You kind of just sweep it under the rug, and then you just stop talking about it. It goes away. That sort of thing. That's what I think is the next step.
Do you think the whole thing was contrived? I got those emails today too. Some conspiracy theorists thinking that Elon was getting too much power and they needed to knock him down a little bit. Do you have any?
I don't know.
Opinion on that?
I don't know.
I mean, I don't know either. The person that more than one person wrote me that, and they don't know either. So I mean.
Maybe. I mean, Trump loves the
I think it's too far-fetched. I cannot do that. I love a good conspiracy theory, but I can't do that.
Yeah, I don't know. It looked like they were just about to smash Vol to nothing, and then they just bid it up a little bit.
Yeah, it's still trading there as low as 18. Yeah.
Nothing, yeah. But it looked like it was about to squeeze. What do you think for next week? You got a short week. Or I'm sorry, no, not now. Next week, 2 weeks from now. Whiteboard tour on the 12th.
Yeah. You
can come hang out with us. I forgot which week you were. Juneteenth is the following week.
Yeah, that's when I'm in London. Yes.
Is that option expiration too? Yeah, third Friday in June, right?
No, the June 20th is that week. It's the day before. It's a Thursday.
Yes.
June 19th is a Thursday.
Yes, kind of weird.
It is
and then
kind
you come
of
back. It's option expiration. That's a little funky.
Yeah.
But anyway, if you haven't signed up, come join us in DC if you're in the area. It's going to be a fun time. I just looked at Katie's slides. They are chef's kiss. So I'm excited.
I know you guys were working on the fine tuning of it today. That's so cool.
All her.
All her. Yeah.
But,
as we stumble here into the close with not too much movement, I mean, since we've been on the show, I mean, really, E-mini S&Ps have moved about three
handles. It's been
handles.
like this for 4 hours, dude.
Yeah.
Besides that, with one little dip.
Yeah.
Are we back? Is it just like not? Is it just all things are just up? We back?
Seems that way. So you asked me, what do I think for next week? Are you ready?
My peeps are calling for squeeze.
Squeeze to the upside?
Yeah, my peeps say it's upside squeeze. We're back to all-time highs.
Oh, so over 6,200 they're talking about.
Yeah, over the next 2 weeks into June.
That's too far for me. Next week, I think we'll get a little bit movement early on. Maybe it's it's in the overnight session on Sunday. Maybe it's early in Monday where we go under 6,000. And then it's scoopy to 6,100, which I've been saying for quite some time now because it always goes a little bit further than you expect it to go to. And then maybe you can lighten up a little bit. You'll get one chance to do something on the upside because it looks like, if we go under 6,000, we're going to crash again to the downside. And that's when they'll probably hook everybody. That's my feeling. Take that and however much
8 points lower and it'll feel like a crash.
There you go. That's where we are, son. That's where we are. Sad but true. What about you? What do you think before we say goodbye?
I think a little bit of a pullback. I think vol's too low. I just think it's
talking your book. Talking about vol's too low.
Talking my book. I think you got to have some sort of craziness that happens over the weekend. We're due. We haven't had anything hit the news. There's been no news grenade in quite some time, so I feel like there's one on the horizon.
Well, there was one just yesterday, but sure. I mean, I get your point. Those artificial moves, though, you gotta. One thing in your camp, after a big number, 48 hours later. Typically, you can get a little bit of a reversal in the move. So maybe we only have Monday, Tuesday, and then we whack them in hell for maybe 10, 12 points.
Nice. That'll get me like $5 back.
We're going to take a quick 90-second break and come back. We got more Tasty Live on Sunday with Mr. Tom Sadnoff. He'll be back. Peace.